Welcome back, everyone, and good morning to the second day of the Digital Banking Asia 2020 event. Today, we will have 5 tracks, namely the Asia Bank Leaders track, the New Banking Experiences track, Open Banking track, the future is open, Data and AI-driven innovations track, and the FinTech and TechFin track. So we have a lot more great discussions today with high prolific speakers. So to kick things off, may I welcome Mr. Philip Law, the Regional Vice President, Asia Pacific from Discover Financial Services, for our opening remarks. Hi, Philip.
Hi.
Yes, go ahead.
Hello. Good morning. It gives me tremendous pleasure. Nothing can be more appropriate on 11/11, where we have got a lot of online platforms, online shopping malls, holding digital sales, online sales. So nothing can be more appropriate for us to look at, to discuss the way forward on what the future is going to look like in terms of digital banking. I think the pandemic, the COVID-19, has taught us a great lesson about what the new normal is going to look like for all practitioners, especially those in the digital payment, in the payment services, in the digital banking, or in the physical banking space, or people playing the wallet. It's going to be a very, very interesting way forward. So I think it's going to help us teach us the way we look at business is going to be very different. Even though I understand that from the news that there's a vaccine, there is a new vaccine developed towards addressing the COVID-19 pandemic, but still, with it gone, we are entering a new normal. So nothing can be more appropriate for us to put our minds together, for the industry to put our minds together to look at what the new normal is going to look like, how we conduct our business, how we do migrate from the physical world increasingly towards the digital world. So I wish everybody a great day ahead, a fruitful discussion, and I know the agenda is full. So I just wish everyone a good discussion forward, and I encourage people to stay in touch even post-conference. Let's do our part for the industry, for the world, to ensure that the industry move forward towards a safe practices, evaluate industry best practices, continue to drive towards the digital platform. So with that, I thank you, and I'll hand the stage back to the organizer.
Thank you, Philip, for officially welcoming everyone to the second day of the Digital Banking Online Event Asia 2020. So up next, we have Governor Benjamin Diokno, Bangko Sentral ng Pilipinas Governor, or Central Bank of the Philippines Governor, for a presentation on the digital transformation in the financial services and navigating through the pandemic.
Can I start?
Yes, go ahead, Governor.
Ladies and gentlemen, good morning. As you know, the coronavirus pandemic has forced us to embrace the digital realm. And we can harness this to make sure internet access and mobile phone ownership do not only lead to better social connections and convenient shopping, but also welfare-enhancing financial services. Even before the crisis, the Bangko Sentral ng Pilipinas, or BSP, had already been pushing for the digital transformation in the country's financial services. We believe that the promotion of financial technology and digitalization will lead us toward achieving financial inclusion. Today, we continue to stand firm on this advocacy, not only for financial inclusion, but for our own survival and economic recovery. Fortunately, the Philippines was prepared when the pandemic hit us. This slide shows the strength of our macroeconomic fundamentals in 2019. 2 decades of sustained economic and structural reforms serve us well and enable us to build buffers and increase policy space. Our GDP growth averaged 6.4% in the last 10 years. The strong growth was achieved in an environment of generally stable inflation and was anchored on purposeful structural reforms. The country's strong track record of prudent policymaking has likewise led to a robust external payments position, hefty international reserves, improved external debt metrics, and healthy public finances. At the same time, Philippine banks continue to be sound, stable, and well-functioning based on all metrics. It is from this position of strength that the BSP acted swiftly and decisively to inject liquidity into the system to calm the market. At the same time, it communicated its priorities and policies well. We reduced policy rate by a cumulative 175 basis points, by 25 basis points even before the pandemic became full-blown, followed by a series of 350 basis points cut in 4 months. We cut reserve requirements by 200 basis points for universal and commercial banks, and by 100 basis points for thrift banks and rural and cooperative banks. We entered into a repurchase agreement with the national government through the Bureau of the Treasury. We remitted dividends amounting to 20 billion pesos to support the national government's programs, even if the BSP is no longer required under our new charter to remit cash dividends to it. Moreover, we expanded the set of eligible instruments as compliance with the BSP's reserve requirement to include new loans to micro, small, and medium enterprises and critically impacted large enterprises that do not belong to the conglomerates. We also issued time-bound and targeted regulatory and operational relief measures to encourage BSP-supervised financial institutions to continue their support to the economy, particularly the micro, small, and medium enterprises. These measures include extension of financial relief to borrowers, incentivized lending, promotion of continued access to financial services, support for continued financial service delivery, and support for sufficient level of domestic liquidity and economic activity. In sum, we have injected approximately 1.9 trillion pesos or $39.2 billion in liquidity into the financial system. This is equivalent to 9.6% of GDP. Indeed, the pandemic has given us an opportunity to further accelerate the digital transformation of the financial services sector. In fact, we have encouraged the use of electronic payments to enhance the speed, convenience, and affordability of financial transactions. Particularly, PesoNet as a viable alternative to the checks and recurring bulk payments and InstaPay as a substitute for cash. The existence of the PesoNet and InstaPay was crucial in facilitating 2 key milestone initiatives in the national retail payment system: the government e-payments or eGovPay facility via PesoNet and the National Quick Response Code Standard or QRPH via InstaPay. As a result of the pandemic and the consequent lockdowns, more consumers shifted from cash payments to digital payments. The evidence is crystal clear. The use of PesoNet and InstaPay zoomed exponentially For the first 8 months of 2020, the value of InstaPay rose almost 400%, while that of PesoNet jumped 100% year on year. By volume of transactions, InstaPay and PesoNet soared by 624% and 130% respectively. This is truly excellent news. As governor of the BSP, one of my personal goals is to have not less than 50% of financial transactions by volume and value to be done digitally by 2023. With the pandemic, I'm optimistic that this goal will be met even sooner. Of course, this is consistent with my other vision of shifting from a cash-heavy to a cash-light economy. Indeed, the speed and breadth of digitalization are gaining momentum, but we want to push harder. On September 8, 2020, the BSP, together with the Trust Officers Association of the Philippines, launched Digital Pera, which stands for Personal Equity Retirement Account. Digital Pera utilizes a digital platform where investors can open, access, and invest 24/7 through their Pera account anywhere in the world using their mobile gadgets. This breakthrough project is in addition to an array of digital-enabled investment outlets such as the unit investment trust funds and mutual funds, which are now available for retail clients. The BSP is also implementing a digital literacy program. This initiative is part of the BSP's financial education advocacy, which aims to increase public trust and confidence in the digital finance ecosystem and encourage massive use of digital financial services by consumers across all sectors. As we now steer the Philippine economy back to its previous position, the entire government and the BSP are exerting enormous efforts to not only restore the economy and help the Filipino people survive this crisis, but for the Philippines to be even better, stronger, more inclusive, technologically prepared, and more competitive than before the pandemic. The BSP's digital payments transformation roadmap for 2020 to 2023 sets out our initiatives and strategies for achieving an efficient, safe, and inclusive payments ecosystem. It has two key strategic objectives. First, it aims to strengthen customers' preference for digital payments by converting 50% of the total volume of retail payments into digital form. In addition, it aims to expand the proportion of financially included to 70% of Filipino adults. To help us assess how well our policy interventions contribute to the transformation into digital payments, the Better Than Cash Alliance, or BTCA, is helping us build a simulated model which will estimate the potential change in the level of e-payments volume and value driven by policies initiated by the BSP. The second objective is to encourage innovations which will boost real-time payments velocity. In particular, we intend to make available more innovative digital financial products and services. These services will be enabled by the National ID System. It will also be supported by the availability of modern payment services that will facilitate real-time processing of financial transactions. These BSP objectives hinge on a triad of critical pillars that are seen to build an environment conducive to digital transformation. One of the pillars relates to the development of payment streams. At present, InstaPay serves as the instant payment stream while PesoNet is a batch payment stream. The next pillar relates to the establishment of digital infrastructure, which facilitates interoperability of payment services. Interoperability allows seamless transactions processing, which is necessary for achieving efficiency. The last pillar is the implementation of digital governance standards. The goal is to maintain public trust in the payment systems. This will be done by protecting the integrity of consumer data and ensuring appropriate management of digital products and services. Aside from the establishment of the digital payments transformation roadmap, we are set to pursue more digital payment initiatives in the near term. We want to extend the QRPH use case from only person-to-person or P2P when it was launched in November 2019. QRPH will soon include person-to-merchant or P2M payments. Since accepting payments via QR is simple and affordable, it is expected to benefit not only large business organizations, but also the small and bank vendors, such as peddlers, sari-sari store owners, and other entrepreneurs. Another initiative is the One Bills payment facility, which aims to remove the inefficiencies associated with the current fragmented bills payment mechanisms. The billers will be capable of collecting from their customers, even if the payment service providers of the billers are different from those of the customers. We will also provide a more flexible way for businesses and consumers to make payments through the request to pay service. The payee will only need to send an electronic request for payment to the payer, showing how much is being requested for payment and when it falls due. A fourth initiative in the pipeline is the direct debit use case. Here, the payer sends the payee an electronic authority to mandate to draw funds directly from the payer's account on a regular basis. This case is ideal for recurring payments, such as monthly rentals, periodic loan amortizations, and quarterly insurance premiums. With digital financial services emerging as the new norm, the BSP proactively builds a regulatory environment that is conducive to digital innovations. In this regard, we are finalizing an enabling policy for fully digital-oriented banks, establishing digital banks as a new bank classification. This new and upcoming bank classification is distinct from the other bank types, since they will conduct end-to-end processing of financial products and services through digital platforms and electronic channels. These banks shall only be allowed to establish an office dedicated to receiving and addressing customer concerns. With an envisioned minimum capitalization of 1 billion pesos, digital banks are expected to contribute to the greater efficiency in the delivery of financial products and services, and in expanding reach to the unbanked market segments. The BSP shall also continue to adopt prudential standards when granting a digital bank authority, permitting only applicants meeting our financial and risk management requirements. We constantly remain vigilant and proactive against cyber threats, which soared during the lockdown as financial consumers conducted more transactions online. The BSP advocates the zero trust model, directing its supervised financial institutions to subject any access to the digital infrastructure to verification and security screening. The BSP has also embarked on cybersecurity campaigns, issuing advisories to warn the public on emerging cyber threats and scams, especially during this unprecedented health crisis. The COVID-19 era has indeed changed the way we live, work, and play. It has challenged us to try things we have never done before or were afraid to do, to quickly adapt to changes, to take unprecedented moves, and to take a step toward a world of new possibilities. The digital transformation has indeed increased our resiliency. This brings to mind a Japanese proverb about the bamboo tree. The bamboo that bends is stronger than the oak that resists. In times like this, raw strength is important, but equally important is the ability to bend and adapt. Digitalization is part of the new normal, and the rate and speed of how we get used to it will determine our chances of bouncing back and standing tall and strong again. Thank you and good day.
Thank you, Governor, for that in-depth discussion on how the BSP is handling the pandemic and how digital transformation is being done in the financial services industry. So up next, we have Mr. Leon Sayers, Lead Advisory Consultant from Unisys Asia Pacific. His discussion is regarding banking in 2025 and how outlook and opportunities for banks in Asia Pacific. Hi, Leon. Over to you.
Hi, thank you very much. What I'd like to do is, I'm just going to bring up the slide deck, so just give me 1 second. What I'd like to do is just have a brief conversation very quickly around the outlook and opportunities for banks in APAC, both now and all the way through to 2025. But before we get to the 2025 piece, I just want to recap, and Benjamin just discussed a great section of information around what we've seen with banking this year, the big move to digital transactions versus traditional on-premise banking, bricks and mortar type transactions. So when we go through the session today, I'm really going to focus on some of those areas of digital transformation, not just the client-facing components that banks are looking at and looking for ways to transform, but I'm also going to be talking and looking at opportunities for banks to also look in-house. When we talk about user experience and the ability for transformation across banks and being able to be agile and deliver new capabilities to its customers, it needs to make sure that the internal capability is there as well. So as we go through the session today, I'm going to focus on both these types of areas, both the front of house and the back of house opportunities for banks. So the reality of digital transformation, Unisys has been conducting some research. We have our Unisys Cloud Barometer research that we released late last year and early this year across the region. But we've also been heavy in discussions, being the lead of consulting. I'm out there talking to customers in all different industries and sectors, but especially in banking, we've seen a real pushback, if you like, on some of the expectations that people had when they went to either cloud or undertook a large digital transformation program of work. So when you look at some of the numbers and the way that organizations have been running these programs of work, we've seen that over 37% of organizations that have tried to deliver a digital transformation haven't got the experience they were expecting at the end of it. So some organizations have gone down banks have gone down the path of trying to roll out a new customer-facing application, whether it's a mobile app or whether it's a new way of processing applications for credit cards or loans, whatever it is. The customer experience hasn't been as high as they were expecting when they rolled out that new service. And some of that was because they've lifted and shifted the technology they had either on-premise or took the technology, the legacy tech, and tried to put a modern front end on without looking at the processes and the other things that solution touched. And as we go through the process of how to make sure these don't fail for you, we're going to touch on some of the challenges that those banks have had. When we also talk about cloud, depending on the country you're in the region, the cloud story is very different. Some are already there, some are starting the journey from a banking perspective. And for me, most customers in the banking sector and industry are very much a hybrid model. Some things are in public cloud, some are in private cloud, some are still very much more traditional in-house in the bank's own data centers. So we're really focusing on those when we're having a conversation with customers around cloud. And for me, cloud is that public-private. I don't distinguish between the two. We're really talking about 38% of banks that have tried and organizations that have tried to go to cloud or transform to cloud haven't met their expectations. And those expectations are things like return on investment, cost expectation reductions, whether that was also the improvement of flexibility and agility to scale on demand. There's a range of things, and security. All of those types of expectations are not quite being met. But one thing that was very positive, and one thing that I think a lot of organizations, especially in the banking sector, need to take away is we can't expect all of the staff within an organization to know what technologies are needed, what processes need to change when you undertake a digital transformation. Most digital transformations, you're being agile and heading in the direction you weren't heading before. So we found that when we talk to different customers that are undertaking these digital transformations, they are 1.4 more likely to succeed if they engage a third party to fill some of those gaps. So not to expect that their internal staff are going to be able to deliver everything, not expect that the existing partners that they have will be able to deliver everything for them. As we go through, and I think COVID was a great example across the board, where organizations had to be agile, had to scale, had to rapidly grow and change the way they did business, whether it was with customers, whether it was with their internal staff and forcing staff to work from home or work from more dispersed and distributed offices. We've seen a massive change there, but a lot of those times organizations tried to do it on their own. They weren't as successful as they would like to have been, or they rolled out clunky technology and are now looking at a refresh and a revisit of that. So there's some of the high-level stats that we've been able to share with you today. The Cloud Barometer research is available. If you like, you can reach out to us and we'll distribute that. But I just wanted to start with that starting point of you really need to understand what you're about to undertake. Because for me, the banking industry is going to go through some very rapid transformations between now and 2025. We've seen that the move to contactless transactions, we're seeing much more tap and go type platforms. We're seeing a lot of organizations and banks across the globe moving away from credit cards actually being, or cards being physical devices. They're not going to be a piece of plastic anymore. They've been moved to electronics. I mean, the number of countries now adopting tap and go on phones. So my credit card is no longer a card, it's an electronic card on my phone. Moving towards that also then opens up other opportunities for people to start looking at how do I better make sure that the end user who's using these services is who they say they are, the device hasn't been compromised or stolen, and make sure that those balances and checks are there. So to be able to move forward, I think we need to first take a good look of an assessment of where you are today. Are you digitally mature enough, and do you have the systems that are fit for purpose to be able to move forward? So before you try and take that big leap to 2021 and start to really accelerate your digital transformation programs of work, do you have the technology there? And that's where a lot of banks and organizations focus on, is the technology. That the biggest underlying areas that people focus on are really the culture, the people, and the process that sit behind the technology or in front of the technology. I've worked in organizations and worked with customers that have rolled out a great technology solution, but the technology fails or isn't adopted as well and widespread as it should have been, because either the people weren't ready to adopt it, and when I say people, that's either staff or external customers, because either the processes, the organizational change management rollout to really make sure that we're bringing people along the journey. So you really need to make sure that when you're creating your digital strategy going to 2025, and a lot of banks are revisiting that strategy right now based on what's happened this year between the pandemic, between the flooding, the bushfires, the cyclones, the typhoons, whatever it is that's impacted most countries. There's been not just one pandemic this year, there have been multiple issues that have hit most organizations and countries. So it's really making sure that you're starting from a fairly solid place. You have a strategy and a roadmap that addresses these 4 key stones for me, foundational key stones, to be able to drive you forward. And when we start talking about transformation, a transformation and modernization of a banking process or a system or a solution isn't just the big picture stuff. It's not just that I've got a new wonderful looking mobile app, or I've got a great new web interface that enables my clients to online upgrade their credit cards or mortgages and renew those processes. It's also about the systems that sit underneath that. So when I look at an application is very broad, but there's probably 100 systems underneath that one application that you could potentially modernize that would give you a great return on investment instead of just trying to do the big multi-million-dollar projects. There are some projects that will be $500,000, a couple of $100,000 that will give you just as big a bang for your buck. So when you start looking for your reboot of your 2021 strategy all the way through to 2025, really don't just focus on the big picture. Also look at some of those quick wins, because any successful plan to 2025 is going to contain not just the big wins, it's going to have a lot of little wins on the way to fill the gaps between those milestones for those big wins. So when we're setting that strategy, we really need to look at what are the benefits that you want to deliver to both your customers and your staff. As a business, what are the outcomes I want to achieve? Is it the fact that you understand that the cybersecurity is a massive advancing and agile attack vector that we're seeing happening? And it's not just attacking of the technology, it's not just an attacking of the websites and the mobile apps, it's the social aspect to it with customers, the emails and spamming, the whole criminal organizations that are now attacking users through those other mechanisms. And also, how do you deal with that compromise? So it's really around making sure that when we're looking at agility and strategies, we're making sure that they are agile. Agile is not just something we give our development teams and saying, you need to be agile, and when I come to you for an application, I want it in months, not years. It's also about making sure that your strategy and roadmap capability, and as a business, you can redirect and be as agile as you're expecting your development teams. So we're really moving forward on that process. So when we're talking about cybersecurity, it's around zero trust. I've heard zero trust mentioned a lot of times. We heard it just before in the session before me, and I'm sure you've heard it in some other sessions over yesterday and today. But zero trust is really about also how do we take that all the way through to my end customer. As a banker, as a consumer of banking services myself, I've got multiple different accounts with different banks. I've got different technologies. One bank lets me use my fingerprint and biometrics to sign into their application. Another bank, I have to use a third-party product on my phone that gives me a code that I have to whack in, or I get an SMS code. There are so many different solutions in the industry that we need to start focusing on what is the best solution and what's going to give my customer the most confidence in that security going forward. But also, what security wrappers am I putting around my technology, whether it's an app or a login on a website or uploading a document? What security am I wrapping around that doesn't impact the user experience? I've seen some great technology rolled out that then, and a security team comes then and secures that application and rolls back half of the flexibility the application gave the user, or took away some of the benefits from speed and performance because of the security measures put on top. So we have to find that balancing act around that. We're also talking about data-driven. I've had a lot of conversations with some banking sector customers recently around not just the end customer facing data that we need to know how many transactions are users doing a month, how long does it take for someone to submit a loan application or get their credit card approved for a balance increase. But it's not just that side. It's also, how do I make sure that the data is being presented to the people that are making decisions on where I'm spending the money, the appropriate amount of data is given to them. I've seen a lot of organizations thinking that they need to be spending money on their crown jewel application, but the bottleneck isn't their actual crown jewel application. It's the 3 or 4 systems that feed data to that crown jewel application. So it's about making sure that we're looking at operational intelligence, predictive analytics to be able to drive to make sure that our underlying infrastructure, systems, and processes are keeping pace with the front-end development and front-end agile processes we're taking and moving forward are actually replicated at the back end as well. So those people making decisions on where am I going to be spending my money this month or where am I spending in the next quarter are making the right decisions, whether that's on enhancements to the underlying processes that are automated, taking manual processes and automating them to speed up the whole life cycle of a process. They're the things that we need to be looking at. And also being able to empower users to drive innovation. Most organizations, when we start the conversation around digital transformation, ways to enhance the banking experience for users or staff, most organizations don't have a way for enabling innovation. So how do you go out to your user base, who are the consumers of your services, and get feedback on innovation from them? How often do you go out to your user base and ask them for ways to improve the apps that you're delivering or the services that you're delivering? How many times do you run an innovation session or a workshop with end customer feedback teams that really help you drive the direction you want to head? But also, how much enablement have you given with centers of excellence or centers of improvement and innovation internally to enable staff and empower staff to bring those ideas through? Your staff are dealing with a lot of these issues day to day. They can see the processes that are hindering things. Really driving a platform to enable that innovation is where we're seeing that next level of investment in this sector. It's really about how do we enable a platform to give the data for the innovation people to go, here's the business case to drive the innovation we'd like to undertake. Most organizations take 12 months, 18 months to go and capture the data, do the user interface sessions to get feedback from consumers. It takes an 18-month process for most organizations. In this new agile and evolving world, we need to be able to improve that. We need to be more agile with that innovation and enablement of that innovation. But you want to have the guardrails and governance in place to make sure that that innovation doesn't go in a direction that isn't good for the business. Because there's great opportunities to improve customer experience, but not at the expense of the business. So you need to make sure there's a balance there. When we're talking about improvements for banking, one area that I see a massive area of improvement and innovation going forward is going to be in the digital workspace. Everyone is working from different places. As we all struggled with COVID and a rapid change of the way that we worked, there was a lot of change there. But for me, it's also about making sure that you have a digital workplace that empowers your users to be able to meet these challenging demands, whether it's because your office has been wiped out by a natural disaster, or whether it's because you've had to go to a diverse location because there's another COVID wave that's come through and certain parts of the country in lockdown and you had an office there. It's about making sure that you have continuity plans that meet that requirement. You have a disaster recovery ability that is hours or minutes, not days. So there's no use having processes and restoration capabilities that take days and weeks, because you're going to lose customers during those outages. So it's really key, and this is where we see cloud playing a big play, but also diversifying the way that your applications and solutions to customers are architected really helps drive some of that. We also focus on productivity. The biggest way that you can improve your profits, improve your gross margins, etc. on services is to improve the productivity of the people driving the processes in the system, or improving the user experience. So how can you improve the user experience, whether that's online mortgage processing? Is it the ability to transfer dollars from one account to another across different industries? We've seen open banking in various forms and shapes and maturity in different countries. We really are looking now at how do I make sure that productivity and user experience across these new mandates that are coming down, whether it is open banking, whether it's things like GDPR impact for certain countries or similar regulations that are now coming out, or the regulatory bodies that are now imposing certain requirements on banks. How do I make sure that I'm able to keep up with those, meet those expectations, but deliver a great impact and great user experience to my consumers and staff? They're the real things that I really want people to go away and focus on, is how do I deliver that better? Now, transformation is a journey. We're talking about 2025. It's four years away almost now. We're really talking about what's next. We've already seen the rapid migration away from bricks and mortar banks to online transactions due to COVID and other disasters. What's the next thing, and what does that evolution look like? We're seeing a whole heap of organizations start moving down payment rings, wristbands that are wearable to be able to do transactions on, not just the mobile phones. We're seeing an evolution in that program, and I think we're going to see another jump as the IoT and wearable devices take that next leap forward. I think we're going to start to see more directional challenges with what technologies are banks going to support. How do I make sure that those IoT or wearable devices have the same security that I can on those larger mobile devices? Because on my phone, I can do my fingerprint biometric, I've got my facial recognition, but on a wearable wristwatch or a ring, I don't have any of those. So if you're a bank that's investing in those technologies, how do you make sure that they're going to be secure going forward? And that's one of the key challenges I see. One of the other areas that I think we're going to see a lot of opportunity for banks is going to be about how flexible and agile you are to work with not just your own services, but partner with other financial sector services and really open up the ability for customers to be able to be agile with the services they take from you. But how do you integrate with another financial provider who may be offering services that your organization isn't willing to take on? But you don't want the customer also to go over to another partner and start taking other services you don't offer from them and then start moving all their services to you. I think with the way that in some of the countries that I've had conversations with customers in, it's really been also around customers based on the current climate from financial and economic perspectives are shopping around, whether it's for savings accounts, credit cards, mortgages, they're shopping around. They're not scared to break up their services anymore. They're not concerned about having savings in one bank, having mortgages in a different bank, and having other services in other banks. They're not concerned about that anymore. So as a banking industry, we need to come up with ways to either be more agile and deliver more services yourself as a bank and be more competitive, or you need to identify areas that you want to focus on and focus on those core business areas and partner for those other services and be open to how you integrate. So if I am taking services from yourself and another bank, how do I make that experience easier for users? How do I make sure that the identity integration is nice and simple? How do I make sure that all those back-end systems and processes are really coming together? So that's, for me, what I think some of the key areas are. I'm sure that through a conversation, we could have a lot more in-depth conversation and details, but I just wanted to touch on that and really leave with you with one last thought for you to go forward with, which is really, how do I be the best bank that I can be to my customers with the agility and the ability to move with their needs and be agile in that approach? Not be so robust and follow a plan that I've put in place, because a lot of organizations have a 3 to 5 year plan. They try and stick to it. In the current climates, we can't afford to do that. We have to be much more agile. We have to go where the challenges that we're thrown take us. We can't be so rigid that we have a plan, we're going to stick to it. We have to be able to look at the ways that we are doing investment. How do I assess digital investment? So where am I going to invest my transformation dollars for the next quarter, for the next year? And if I've got a 3-year plan, how do I make sure that years 2 and 3 can shift if I need to? But how do I also move the investment dollars around for that? So just some lasting messages from me. Feel free to reach out to me. I'll be sharing my contact details on the panel that follows this session. So feel free to reach out myself or any of the other Unisys team to follow up on any areas. But thank you very, very much for listening to me in this session. I will be moderating the next session, so I'll see you in it shortly as I introduce the following panelists to the stage.
Okay, perfect. Thank you for that, Leon. I am sure banks right now are strategizing on how they're going to adapt and be agile enough to transform in the next few years. Again, if you have more questions for Leon or specifically for Unisys, they have a session room you can visit and also a virtual booth. And other colleagues of Leon will be there to assist you if you have any questions for them. So up next, as Leon said, Leon will moderate a panel session to add to what he was discussing earlier. His other panelists are Mr. Michael Hamilton. Michael is the Chief Strategy of Transformation and Digital Officer from Maybank, Indonesia. We also have Mr. Stephen Weng Leong. Stephen is the Chief Operating and Financial Strategist for China Construction Bank, Malaysia, Berhad. And we have lastly Mr. Tony Jarvis. Tony is the Chief Technology Officer for Asia Pacific for Checkpoint. Leon, over to you.
Thanks very much. Thanks for the panel for joining me today. I'm just going to run through some questions. Feel free as panel members to jump in if you think you've got something to add. But what we really wanted to talk to today is what does the new normal for banks and this industry really look like, and some of the challenges and how you've seen yourselves overcome those, either yourself as a customer or you partnering with customers to deliver some of the services that are needed to deal with the challenges we face today. So one of the big ones we've all talked about, and I think everyone has touched on in all the sessions, is COVID, the impact to customer behavior. We've seen a big shift away from the traditional bricks and mortar customers coming into the bank to do transactions, being shifted to online or automated transactions that way and digital channels. How have you guys seen it? And I'd like some feedback from each of you on what you've seen in your specific areas in this space. So Michael, we might start with you.
Sure, Leon. Hi, everyone. Good morning. So I guess in terms of the customer behaviors that we've seen, the impact of COVID in Indonesia specifically, it just maybe the behavior that we've seen over the past few years is just that the magnitude is bigger. I guess we are preparing for the features in the next few years that this is going to be the norm actually, but it's actually accelerated faster through COVID, where people is actually enforced to get used to not going to the branches and do everything online, do everything at their office or at their home, right? So that's helping us actually because we at the banks, right, we are really having the agenda since few years ago to have efficiencies, to be able to serve our customers better, to be able, to be part of their transactional behavior on a day-to-day basis. But in Indonesia, perhaps specifically, it's not easy because we are quite dispersed. The geographically is quite large, and not all of us is actually very technical savvy. But COVID is enforcing everyone for not giving the options. You only have one options. You only need to go to the digital and do everything online. That's really one of the push factor that changing the customer behavior that we have in Indonesia. And that's really, we've seen in the trend over the past few months, 8 months of the lockdown or the semi-lockdown, more than 100% of transaction is actually shifting from the brick and mortar business to the digital channel. So it's just a matter of time for us to make it as a normal, because some of the people probably in the past quite concerns to do their transaction through the digital channels because of perhaps the cybersecurity and the convenience, and also if you have problems in your technical or connectivities, that will be causing your money to go, right? But nowadays, when they actually already more than 8 months, right, changing the behavior dramatically from the brick mortar activities of transaction to be digital, I think they are seeing a lot more benefits instead of challenges. They are more comfortable today, and that's helping us really in accelerating our transformation. And as you said, Leon, when we talk about transformation, it's not always about doing digital, but also being digital. It's also helping us as well to transform internally. We are also changing the behavior of our staffs, changing the mindset of our staff, because perhaps the problem of the past comes also from our internal. Our people in the front end probably doesn't believe we can actually sell our customers, our segments to digital. But nowadays they change because they also need to change. So that's what's going on in Indonesia, Leon.
Yeah, and one of the worst things I hear in a lot of customers is when we start talking to clients about changing their processes or the way they do things, is one of the answers I really don't like hearing is, but that's the way we've always done it.
Exactly.
So there is a big cultural shift. You're right, Michael.
No challenging the status quo.
Yeah. So Stephen, what are you seeing in your customer base in this challenging year of 2020?
Hey, hi, thank you, Leon. All right. I guess the approach of China Construction Bank today, you have rightly put it that we're seeing a spike in terms of digital transactions. What we do as a bank, we start to look at basically the blueprint. All right, why are customers going digital, and how can we as a bank helps to accelerate those adoption? So what we have done in CCB, all right, China Construction Bank, is we have got two approaches here. One is during this pandemic period, we want to do something beyond banking for our customers, because a lot of banks out there today, they fail to understand that they're trying to improve the customer experience alone, but that is not enough. All right, what we want to do is we want to go to our customers to help them to digitize and digitalize. All right, that is very important, because no point of just enhancing our own domain, but without facilitating the customer's end. All right, so what we do is two things. One is we have gone beyond banking. One is we have launched CCB Mesh Plus. CCB Mesh Plus is a business meshing platform. We find that customers, we want to do beyond banking. Customers doesn't need to just transact. All right. Without business, what is there to transact? All right. We want to make sure that they are able to basically solicit business. They're able to find business. They're able to look for suppliers or look for buyers. So we created CCB Mesh Plus, where we basically bridge, all right, two parties together. All right. If there's a need, if there's a requirement, we help to bridge. And this CCB Mesh Plus platform launched in March today has gone global. We are as far as CCB branches available in that country. You can basically contact the CCB branch and then register yourself on the Mesh Plus. It is actually a platform where you can join. It's free of charge, where you can it gets verified, because to ensure that you are a genuine enterprise, a genuine company. So we will help bridge that. All right. We want to make sure that we are not making any money from this. We are just doing this free of charge. We want to make sure that business happens because of us. All right. And first thing you will come to mind next time is, CCB is the one who facilitated that business meshing. Okay, that's number one. Number two, digital. All right. We go into the customer's place today and says that, hey, customer, today you need to digitize. All right. You need to digitalize. All right. Two things, digitize and digitalize is two separate things that we need to do. Number one is digitize, basically, their data and so on. Digitalize is basically the process and so on. So we work with our customers. One example is a hospital customer of ours. We go in there and says, hey, hospital customers, why not we help you to digitize and digitalize your entire ecosystem? all right, how patients comes in, you know, and make appointment and so on. So we develop a smart hospital solution. And with that, we plan to basically build smart ecosystems, all right, around the customers that we have. And this eventually will be basically, you know, if you basically combine all this smart ecosystem, it will become a smart village, you know, a smart city, and eventually it'll be a smart country. And this is how we approach it, you know, in a sense that customers, they are already very digital savvy today, all right. What they need is, how do I do it? All right, that's what our approach. Thanks, Leon.
Cool, thank you. There is one area that I wanted to touch on a little bit, and I am so glad that I've heard you guys talk about digitalization and things like that, because a lot of organizations think that the digital transformation is just, I'm taking something and I'm putting it in the cloud, or I'm just taking an electronic a manual paper form and putting it on a screen. I'm glad to hear that we're moving much past that in your experiences. One thing I wanted to talk about is security a little bit. We're seeing, with the agility that a lot of organizations have had to undertake, and banks particularly with COVID and the migration to these new electronic services and working from home or working from dispersed locations and things like that. What sort of security risks and issues have you had to overcome, and how do you mitigated some of those? Have you just accepted some of the risk and dealt with it that way, or is there more security solutions going in place? And I might start with Tony to touch on a little bit what he's seeing in that security space, and then we'll go over to Michael and Steve for further comment.
Yeah, fantastic. Thank you, Leon. And I really love your comment about that's how we've always been doing things, because now more than ever, you cannot be doing things the way you've always been. It just doesn't work. We're not physically in the office. But the mindset, the mentality sometimes is still there. And that's really this juxtaposition we have between what we should be doing and what we think we actually should be doing. So I've seen across a large number of customers, when this struck, when COVID really started becoming a thing and we went through lockdowns and we couldn't make our way into the office, the very first thing that many organizations did was not to think about security at all, because the number one priority was connectivity. You know, we've got people working from home. Do they have VPN connectivity? Do they have access to all of the resources that they need? And they were reaching out and getting their licenses. They were looking at bandwidth for their VPN concentrators and gateways, all of that sort of thing. And security was definitely a very distant second. Now, the other thing that we've seen happen is that for some organizations, they had a policy in place that access to very secure, confidential information may have only been granted on premises. You physically had to be in the office to have that access. Now, of course, that's being rolled out to users regardless of where they are. So you've got a situation of help desks trying to give this level of access, supporting a growing number of incidents and support tickets, because we typically had anywhere between maybe 10 to 20% of our workforce remote at any given time. And now it's somewhere in the order of 100%, depending on the country. So it's a huge change in how we've been doing things. And we're dealing with growing numbers of support tickets with a finite level of people inside those teams that are responding to those tickets. And yes, it is difficult. So what we've seen is people have been rushing to adopt things that will help them be productive. Moving to the cloud, either getting into the cloud, or if you're already partway there, you know, expediting that. And the CEO of Microsoft came out earlier this year and said that we've seen 2 years of digital transformation happen in a period of 2 months. Now, that is fantastic for productivity, but security is not part of those bundles that you get by default attached to those solutions that you're signing up for. There are some, yes, but they do have gaps. Now we're in the process of advising customers, if you're doing, you know, SaaS-based email, well, how are you securing that? Do you have security attached to that? If you're rolling out endpoints, and if you've got users at home using their endpoints, are they secure? Are they running agents? How effective are those agents? Do they protect against phishing? Do they protect against ransomware? Ransomware is huge. It's still one of the top threats facing organizations everywhere, facing some industries more than others, but it doesn't discriminate. So we are in the process of advising customers as they move their security along to sort of meet what they've put in place for their productivity, and trying to get that balance of security and productivity.
Thanks, Tony. Steve, what are you seeing in this space? How would you address the security and the balancing and trade-off between security and acceptable risk?
I mean, I look at it. I mean, I'm based in Malaysia. All right. If you're talking about cloud today in terms of security, no doubt, today I would believe that, in fact, it is factual that, security is not really a concern at this stage. All right. Maybe at the earlier stage for cloud. All right. For now, I think the security factor is no longer an issue. All right. I guess the only constraint, all right, a lot of financial institutions have is in terms of the regulations that is sitting behind it. All right, not all countries in this region, besides Hong Kong, Singapore, or Thailand, not many countries in this region, the regulators are open to a fully cloud yet. All right, in that sense. But I do basically advocate that eventually for cost effectiveness, for seamless processing, for efficiency, for whatever reason, cloud will be the future. That data or even process and everything else should be migrated into cloud. All right, that's my stand.
Michael, what are you doing with trading off the security risks?
Well, I guess we are still, as a bank, we are a trust business, right? We cannot, do a tolerance to security. We still need to make sure that our security is up against any threats that we have. So when we actually roll out the work from home, or what we call the mobile workers, we as what Tony mentioned, we at the beginning we started with ensuring the connectivity is there, ensuring people can work, but gradually, right, across 8 months, we have already improved the security in their aspects. The VPN, the secure connectivities, making sure that everyone is actually working on the right space, and then rolling out the policies. If you're actually work from home, you actually work from home, not working from cafe or working from a mall. So ensuring everything is in place and security is nothing that we can tolerate. And what we already roll out in terms of security, there's various aspects, and we definitely continue to invest in ensuring that the security and ability to detect threats are there anytime, any given time, whether it's from our customers that doing the activities in our digital channel, or within our staff that is actually working out of the office. So it's still a concern. I guess because in this kind of pandemic situation, right, we've seen the pressure to the economy, right? We've seen more employment rate is going up, right? And we've seen the trend of the criminality is getting higher, but in a different format, right? Because people doesn't want to go out, and you cannot go and steal some monies in the street. Then they go into cybersecurity, right? So that's where the pressure is on. I guess everyone is actually increasing the security aspects in their solutions and their operations.
Thanks. So what I've seen with a lot of organizations at the moment is that they rolled out this great solution, or as Tony said, people went and just upped the number of VPN connections they had, increased the licensing, increased some throughput and things like that. They never actually looked at whether that was the best solution. And we're now starting to see organizations, the ones I'm working with anyway, really starting to have a rethink, and that's where we're helping advise these customers on where they need to rethink the solution or the strategy they did, and undertake a bit of a review of, based on what we've learned and the lessons we've seen from 2020, what are we going to do in 2021? What solutions or technology are we going to replace because we made the wrong decision, or we're going to change direction there because, that was a direction we had to do under duress. Now we think this is a better direction to go. How many of you are seeing that in either your organizations or the customers you're working with? Steve, what are you seeing in your area?
I think one area that that I think the enterprises should start to focus on is in terms of information security. All right, today as we go on a more of a digital world, all right, I guess at the end of the day is the data sanity that we should be looking after. And in terms of adoption of technology, I would believe, all right, information security is an area there where we should basically, focus on, not only in terms of investment into hardware or software, but also includes the resource or the professional or the expertise to actually drive this agenda. All right, and you can see this around the region, in Malaysia, particularly, it's also one of the requirements for banks. I mean, I actually work in a bank. Is the need for a chief information security officer, CxO. All right, CxO will be basically, not something that is optional going forward into the next phase of growth in terms of digital. All right, this is something that I guess not only FIs and non-bank FIs, but all enterprises across the sectors, the segments, should be looking into. All right. Yeah, Leo.
No, that's cool. Thanks, Michael. What are you thinking?
Well, we don't know what we don't know, right? In this kind of situation, but we know we have already reacted on the situation today, and we are laying out what is the digital of the futures, and that's where we are. When we talk about digital, it has to be agile, right? And we cannot adopt a solution that is actually cast in stone and things will not be changed in the next few years ahead. We need to accept that we can make wrong decisions. We can make wrong investments, as long as we can justify the investments ahead. I guess that is the road that we need to take. But when we actually invest, we always start small, right? We want to make sure that we actually test it out in a more isolated environment, in a more comfortable and confident that we can actually contain the impact if something goes wrong. And when we actually see the value and we see the result and the outcome, and then we scale out. I guess that is the mindset and the approach moving forward that we are adopting, to ensure that any kind of investment that we made in the technology space is actually something that we are able to justify moving ahead. But we already make the expectation that technology change rapidly, right? Whatever that we think today we want to invest for the next 5 years, it may no longer be relevant in the next 1 year, right? So that's the reality that our management, our internal, everyone is actually be able to accept. And based on that reality, we know when we actually adopting something, we just need to make sure that we start small. We can justify the outcome before we actually scale up into the enterprise adoptions.
Tony, are you seeing many of your customers having a bit of a reboot or a rethink of the strategies they've undertaken and now doing a bit of a rethink?
100%. Yeah, absolutely. So, and look, I've seen the lead up to this in terms of mentality for a long time. I've seen many customers over the years get into the habit of, we've got some hardware, maybe we've got some appliances or gateways, they're 3 years old, they're end of support, time to refresh them. And a hardware refresh is literally that. We've got an old one, let's update it with another one that does exactly the same with higher speeds and feeds. You've got to step back and think, well, if we got this 3 years ago to help us stay protected against the current threats facing us 3 years ago, how has the landscape changed in that time? What are the threats facing us today? Let's not replace like for like, but take a step back and think, what do we really need? So if we're talking about the COVID situation, is your VPN set up using split tunnel? Is traffic actually going through your headquarters to help protect it? It may or may not, and there might be good reasons either way. Office 365, for example, Microsoft does advise, do not route that traffic through your headquarters. The latency will not make it very usable. Go direct. And so if you're going to go direct, you've got to think about the security implications. You can do it. You've just got to think about it differently. I've seen months ago when Zoom had a couple of issues come out that were highly publicized in the press, vulnerabilities and whatnot, people were saying, well, we won't use Zoom, we'll use something else. Well, the solution to, and I'm not saying that's right or wrong, it might be right or wrong depending on the situation, but the security to solution is not saying we're going to choose the platform with the least vulnerabilities, because there will always be vulnerabilities. That it really, you can do that, and that might be a mitigating factor, but you've also got to look at, well, how can we secure it and take preventative measures regardless of what platform and what vulnerabilities might be announced tomorrow.
You know, a bit of sensibility to the decision making, I think, needs to happen as well. One of the key things that I think, and it's been touched on a couple of times by a few different people that I've heard talk today, is organisations, as the pandemic went on, had to move very quickly. We've traditionally, as either banking or as any industry really, we've set the bar at about here on how fast we move to roll out new solutions and implement things. The pandemic took us up to here. We ramped up and scaled, and all of a sudden, people that couldn't do things could now do them from home. The rollout of moving people from either desktops to agile devices like tablets or laptops so they could work from home. All of these things that organizations said we can't do because of X, Y, and Z, or, you know what, rolling out a new Windows 10 laptop to you is going to take a 2-year program of work because of capital and all these other things. They all disappeared, and businesses found a way to do it and do it quickly. So one of the conversations I'm having with customers at the moment, I'd like to see how you guys are thinking about this, is how are you going to now keep that agility and fast pace to rolling out solutions and services to your organization? Or are you going to be going back to the more slower, prodding along type process? How are you going to stay agile and keep the accelerator to the floor in the way that you're adopting and rolling out solutions? Michael, Steve?
I can start, Leon. I guess, yeah, in the past, we are probably a bit skeptical on the digital transformation or the adoption from our customers, even our staff as well, saying that the customer may not willing to move to digital, right? Because of the age, because of the sophisticated or the education level, and so on and so forth. So many reasons. But now all the reason has gone. Customer is adopting, and when things probably only happen for 3 months, that's not being a behavior or habit, right? But now it's already more than 8 months. It will continue until perhaps end of next year, right? And that's already set as a behavior. Set as a standard, and we in fact going to change the model, the operating model, the SOPs that we have, right? And being digital first in everything we do is actually be the priority now, and there's no such a question being asked very hard, the business case, what is the return, and so on, right? Because in the digital space, right, you need to be innovative, you need to be creative, you need to be experimental, and that's kind of mindset is now already easily being accepted by the shareholder, by the management, and the other way around on the bottom, right, in the working levels, everyone is actually perhaps saying that it's difficult to work from home because for the family reasons or for technical reasons. But now we are adapting. We are human beings. That's our ability. Our ability is to adapt and adopt to the changes that happen. And when this has been a norm, because it's not going to go back 100% to the previous, but I would say it's going to be the things that back to normal. People still need to be socialized, right? People need to meet some people. People need to actually to interact. So that will continuously be the nature of a human being, but the transactions, the activities, all the trade that you're going to do, everything's going to be doing digital. No one will going to ask questions whether it's possible or not, because everything is possible, and that's just going to be continuously being our standard, our what we call it, the core values, the thing that we believe moving forward. Things needs to be more agile, things needs to be more experimental, things needs to be done in faster manner. So I guess that's not going to change much in the next few months. ahead.
Stephen, how are you approaching staying agile?
I guess from my perspective, we have not slowed down. All right. In fact, even before the pandemic, we have always been pushing boundaries. We have always been pushing digital. That is the reason why at CCB, we do have what we call a CCB FinTech unit that is spin off from IT. All right, basically dedicated towards FinTech initiatives. All right, what we are seeing today is is like what we have seen. All right, in China during the SARS period. The entire country of China, because they have went cashless, they have went into wallets. All right, it's because of SARS. That is actually the catalyst. All right, we have seen that. And we have always been at the forefront of FinTech. All right, at the forefront of digital. I mean, as a country itself, if you look at China itself, we have never slowed down. All right, the country has never slowed down, and that DNA has basically, filtered down. All right, to basically enterprises that is what they call that, to the Chinese enterprises, where CCB is also part of it. So we have been driving change. We have been driving adoption of digital. All right, and in fact, not only we drive ourselves, but we facilitate, we help our customers to drive digital. All right, and as I mentioned earlier, we drive smart ecosystem in Malaysia and eventually to the region. All right, if you look at it, CCB today, we have got blockchain payment, which is called EasyPay. We have got blockchain trade called BC Trade 2.0. We'll be launching blockchain digital bonds. So a lot of innovations, a lot of creativities, a lot of push, a lot of excitement, and this is where I'm so excited that I cannot, it's like the clock is not stopping. We are moving forward. All right, Leon, over to you.
Yeah, no, thanks very much. What do you think that the new evolution is going to look like? We've gone through evolutions, as we've heard discussed today. Benjamin touched on a little bit earlier, and you guys have also reinforced that people have moved away from bricks and mortar to electronic transactions and a lot more in online processing. What do you think is the next evolution that we're going to see coming? How do you think these services are going to continue to evolve? Do you think we're going to see more fast pace in areas of data sharing and open banking? Are we going to see more around the way we do zero trust? Or do you think we're going to start to see banks really review the way digital workplace, digital service management, all of those back-end systems? Where do you think the big next evolution is going to come for you? Let's start with Michael. We might just, Michael, we can't hear you, so we might jump to Stephen while you sort out your audio, Michael. Stephen?
Yeah, sure. I look at it with excitement is the evolution of 5G. All right. If you look at the whole dynamics of things, today we are not talking about mobile adoption. All right. Mobile adoption is there. All right. It's just that it's the network adoption right now. Do we have the bandwidth to support all this data? The speed of transactions and so on. So you look at it two aspects. One is basically the 5G element. All right, that is going to drive growth in the future. Or now they're also talking about 6G. They are also testing on 6G. All right, that is one element. The other element is basically you have got areas where you have got the rural areas of some countries where you can have a mobile. All right, the signal is not strong. All right, so and then you have got how would I put it? Those are basically underserved or unserved areas, and you can see a lot of those in this region. You ask me now whether would the entire region go cashless? I hope so, but the answer is no. All right, there will still be a hybrid or a combination between brick and mortar and also digital adoption. So I look at it at the end of the day is the next evolution is to drive connectivity, all right, to drive network, to drive security, and also mindset is there. I believe the mindset as the newer generation starts to emerge, all right, the mindset is already there because they have grown up as a digital nation. It's just that how do we take it to the next level? And this not a lot of times it's just not bank itself, the financial institution itself that drives innovation. All right, it requires the entire stakeholder. Ecosystem stakeholder. You've got the telcos, you have the banks, you have the postal service, and so on. It has to be an entire collaborative partnership that drives the next big thing. All right. Okay.
Okay, Michael.
Yeah, Leon. Sorry. Well, I guess what the future will be is about borderless, right? Borderless industries, borderless countries, whereby we can actually do things beyond what we are actually doing today. And if we talk about banking in the future, there's no such thing as a banking industry anymore, right? Banking will do something that is beyond banking. Telco will be doing something beyond telcos, and it's about ecosystem development, right? It's about creating the network, creating things that we probably never operate before in the past, to help customers to drive their solutions, right? So the future will be open and connected. Data sharing will be there definitely, but to some degree, it's not confidential data sharing, but it's actually more on how we can actually able to understand the customer needs anytime, anywhere that they need, and be able to create a new different business propositions, a business remodel, what we call it, or even a really a new things that we are going to do together with the partners. So the future will not be, competing banks against banks, because we are not competing against banks anymore in the future. We're competing with anyone, but that's the way we need to change the mindset. It's not about competitions, it's about collaborations. So we need to see the industry to continuously building collaborations in order to serve our customer needs, in order to serve the people, the societies, instead of trying to, focus on bringing more revenues. Of course, that's going to be the bread and butter that we're going to do. But the mindset will change on understanding customer needs, understanding customer pain points, and how we can actually build a collaboration with a lot of players in order to come up with a new business value proposition in the future.
Okay, thanks, Michael. Tony, what do you see changing or evolving in the security side of banking?
Well, it's an interesting question. I think this year has really sort of shined a light on the fact that, especially towards the later part of this year, that this is not temporary. For quite a while, we were thinking this is going to go away, life is going to go back to normal. Life is never going to go back to normal. I'm not saying that it's going to remain this way 100%, but if you look at things like business travel, for example, we expect, well into 2023, 2024, that's when airlines are telling us they're expecting that their levels of travel to actually match what they were pre-pandemic. There will be business travel, but it won't be the norm. The norm will be Zoom meetings or virtual meetings, and there will be exceptions to that, which will be people getting on a plane. So security is really the same. You've got to be thinking now that we're doing things in a completely different way. The risks are very different, and security has to be able to adapt. And that means reaching out, asking your trusted advisors, looking at the threat landscape, looking at how these attacks are evolving, and making sure that whatever risks you are facing, and you've got to understand what those risks are that you're facing, that you are prepared to defend against. The good thing about security, and there are so many issues in terms of trying to be right every single time when an attacker only needs to get it right once. The good thing is that attacks largely follow trends. And if you understand what those trends are, you can say, these are the top 3 things facing our country, our industry, whatever it might be, and you can start to prioritize. So that does give you a bit of an advantage.
Cool, thanks. We're getting close to the end, but just want to ask everyone just one last question. What do you think the biggest change that you're going to take out of 2020? What's the biggest lesson you've learned from 2020 that's going to really help you drive your bank or your customers forward in 2021? What's the number one lesson you're taking away from this challenging year? Michael?
Well, I guess the first key takeaways from this year is actually digital is not only for a youngster. We probably think that digital is only for millennial or the next generation, but actually digital for everyone. That's the first key takeaways from this year. Second is nothing is impossible. The things that we think banking industry as a very highly secured and regulated industry needs to be always on premise, but actually it's not. We can actually do beyond our premises. We can do anything from home, and the key takeaway as well, doing this is actually improving the productivities. It doesn't mean that there's so many, especially in Indonesia, there's so many in the road being stuck in the traffic has been reduced. And we are able to do things more on a short time period, and we become more productive. So adopting this new way of working is actually bringing a better productivities to our people. And this kind of activities, this kind of model is actually work well for any of our customers. And the adoptions of the solution is not something difficult for customers to accept in the futures. So that's the key takeaway for myself.
Okay, thanks. Tony, what's your takeaway for this year?
For me, it's really been a bit of a personal revelation. I honestly think that the days of having a lot of technical information, and I'm not talking about vendors, this applies equally to organizations in the financial services industry, but making it such that you need to consult with someone, you need to be face-to-face with someone, spend an hour with them to understand your needs and the solutions they offer and how it might look in terms of adopting those solutions. We've really got to democratize that. So getting the information online, making it accessible, putting it into bite-sized, digestible formats so that people can really self-serve the information they need to understand what it is that might suit their needs, how that sort of journey looks like in terms of what do we do now, what are the following steps. And yes, we're going to have people ready to meet them virtually and walk them through that, but trying to make as much of that journey as possible really easy for the end user to consume. So I think it's all about making things relevant, making them easy to digest, and having people like myself here as, hey, we can help you and add a layer on top of that, but we shouldn't be your first port of call because there's a limit to how much that can scale. So we've got to make things easier.
Steve, what's your lesson learned for 2020 that you're going to help you drive 2021 to be successful?
All right. I look at it from a perspective of we as a bank, all right, we have to be in the shoes of our customers. We want to be in partnership with the CEO, all right. We want to be their operations partner. We want to be their finance partner. We want to be their IT partner, all right. It's more than that, we want to put ourselves into their shoes to help them to basically, look into the end-to-end value chain, the end-to-end process, and help them to basically, streamline that, all right, and make a whole lot more effective in terms of the entire operations of the company. So we are actually looking at that, all right. Of course, there are other things, customer experience and so on. You've got the retail, you've got the wholesale and the investment bank type of segment. But ultimately, we want to be in the customer's shoes. We want to be able to partner with the customers. That will be the key takeaway that I think. A lot of banks today are still thinking quite silo, but we have to be in the customer's shoes. Thank you.
Okay, thanks very much. I'd like to thank all the panelists for their time today. It's been great. I've got a lot of insights from it, and I think a lot of other people will have had some great takeaways there. And for me, just to summarize what I think we all should take to 2021 is really that I think we touched on a little bit earlier. Humans are very adaptive. We need to expect that and challenge both our internal staff and our customers to really think outside the box, to really drive innovation in different ways that improves the experience for everyone. And I think we need to enable those people to be able to bring those ideas forward, look at ways that we can build business cases that are a bit more agile, and really make sure that strategy roadmap for 2021 and going forward is agile enough to be able to deal with these challenges that we're going to get thrown at. 2020 is not going to be a one-off year. Yes, it might not be as bad as 2020, but it's going to be a challenge every year, I think, whether it's natural disasters, pandemics, financial, political, whatever it is, there's going to be a challenge. And I think hopefully everyone's going to take that lesson that we can be more innovative than we think we can be. We can drive the speed of change and accelerate faster than what people think we can. And really, let's keep the pedal to the metal and let's try and drive that industrial transformation through the banking sector going into 2021. So thank you very much for your time, panelists. I've appreciated the chat. It's been great for me, and hopefully it's been as great for you. So hand back over to the organizer. Thank you very much.
Okay, thank you guys for that great and insightful discussion. I'm sure all of us will be well prepared for 2021, not only to be better, but adapt to the new normal. So as of now, may I ask only Tony Jarvis to remain, and thank you to our other panelists.
All right.
Thank you. See you later.
Okay, so up next, we have Tony Jarvis still on stage. Tony Jarvis is the Chief Technology Officer for Asia Pacific Checkpoint, and he'll discuss cyber trends in the fintech industry. So Tony, over to you.
Sure, thank you. And just looking at my screen, sharing the right slide for you. So if it's not the right slide, do let me know. But assuming that you can see my presentation here, cybersecurity trends in the fintech industry, really want to say a big thank you for asking me to come on. It's been a very interesting year. We have been in discussions with customers, with clients in the fintech industry. This has been something we've never really seen the likes of before. So there have been a lot of questions asked. What I want to do today, I'm thinking that we've got roughly about 20 minutes according to the agenda. Just go through some of the challenges we've seen, the implications that holds, especially for the financial services industry or the fintech industry, and a path forward in terms of thinking about security, thinking about innovation, and being able to deliver the needs that clients have there. So let's start by briefly looking at the threat landscape and what has this year given us in terms of the risks we're facing. Well, the malware side of things, I think we all understand. We've seen the newspapers, we watch the news. There has been a wave of attacks facing us. We've seen some new malware being created, but a lot of the time it's really older malware that might be reused. It might be slightly tweaked just to bypass detections of, antivirus engines, for example. But that is the underpinnings of a lot of the attacks that we're seeing. That's what arrives on the endpoint to actually infect them. The phishing itself, those emails you get with the links you click on, the attachments you open that really start that chain of events that compromise the endpoints in those machines, has increased significantly. And the numbers do change depending on the report you're reading, the time of the year that it's published. But I've seen about an average of 14,000% across the various statistics here. So they're the phishing emails making their way into users' inboxes. They're the things we're clicking on that lead us to open attachments, visit websites that do actually infect our organization. So that is something to consider. The exposure here, well, obviously, as we're all working from home, we're not locked into a physical office. So the attack surface, the list of things that an attacker can target has increased. They can target your mobile phones. They can target your cloud email. They can target your endpoints. And when we're talking about endpoints, it's not just the corporate issued laptops we're talking about. A lot of organizations do have staff working from home using their personal devices. Now, this is a really considerable risk as well. They may not have any security software installed. So contemplate that. And then, of course, we've got the attackers themselves. And yes, you do see the headline stories about nation states, but a growing number of these are the opportunistic cyber criminals, the ones trying to make some money out of ransomware, trying to infect as many people as they can. And that is the majority of the attacks that we see. So are your tools actually safe? Well, let's quickly look at this. We're all using video conferencing tools. That's a given. We cannot do business in 2020 without that. where a lot of us using SaaS-based email, and that lets us get access to our email regardless of where we are. We don't need to be using specific devices. And collaboration tools such as Slack, but the list is almost infinite. There's so many different tools that allow us to all collaborate. It could be something as simple as WhatsApp web, and that's how you're communicating with colleagues. And the takeaway here is that you've got to be on top of these systems. You can use them, sure. I'm not saying you shouldn't. We should all be leveraging the technologies available to us. Make sure they're patched, leverage the security options that come with them. And I mean, 2FA is listed on the slide here. A huge number of people, there's a survey done across Office 365, and I think it was 97% of accounts don't actually enable two-factor authentication. So that is something that can easily be rectified, can easily improve your security, and it's something we need to be prioritizing because the benefits are huge. So how does this affect the relevant industries here? Well, all industries are being affected, but there are some being affected more than others. And those industries are typically ones that have immediate needs to access information in terms of doing their jobs and serving the community. So you've got hospitals. You do have cases of lives that have now been lost due to ransomware attacks in 2020. Critical infrastructures, that's water treatment facilities, electricity grids, and we've seen attacks against those. And then, of course, financial services industries. People need access to their funds. They've got to be able to make payments and all of the other services that are offered here. So yes, they are affected. And we're seeing a lot of email scams or phishing scams targeting people pretending to be from fintech organizations, asking them to sign in. Your account has expired. We've noticed some fraudulent activity. Please verify your email and your password. People do this, and they're giving those details to attackers with websites that look very similar to the organizations they're impersonating. So some of this can come down to technology and security. Some of it needs to come down to user awareness and training. We need to be aware of these issues. And the overall impact really does face us in a number of ways. It hurts our reputation in front of clients. It hurts clients directly because they're now victims of breaches. And it makes it harder to gain trust when we don't know who is sending these emails to us that arrive in our inboxes. So a quick word on scams, and look, this is different no matter where you are in the world. We're all getting similar scams, but the details will change. So on the left here, you've got an example of we've detected you're too far away from home. Maybe there's a travel limit. You're only allowed to travel 5 kilometers from your place of residence. And people are getting messages saying, we've detected you've gone too far. Please contact us and notify us of your details. When you do that, you're not contacting the relevant party. You're actually contacting an attacker, a scammer. On the right here, you've got people pretending to be from health institutions, doing contact tracing, for example. And these were never from the actual places that they purported to be from. So this really does apply to all industries, all verticals. We're all seeing some sort of phishing attacks or scams. We've got to be on the lookout. And you've always got to treat, whether it's SMSs, whether it's phone calls, whether it's emails, with a certain level of caution and be verifying that the people that are contacting you are the ones that they really purport to be. And the easiest way to do this, of course, is if you do receive an email that's asking you to log into whatever, don't click on that link directly. Go to the relevant party's website, navigate through the links in that site structure, because that way you're going to find the legitimate place to be. So that will do a lot to keep you safe. Now we've got to talk about phishing because the majority of attacks we see do start with phishing. Phishing is how something will get its way into an organization. So that might be a link that takes you to a web page that is a malicious web page, and the simple act of visiting that site can infect the endpoint or the device you're using. It could be something with an attachment, and you open that attachment and it starts a macro or a script that runs a process that will do the same. It will infect the machine. So we're seeing a lot of different channels for this same sort of attack. You might think of, you're using Outlook as a thick client on your laptop, and yes, that is traditionally the way it happens. It still happens that way, but there are others. You can consume that using Office 365 instead of a full client on your desktop. So that changes the dynamics. You can receive messages over SMS. You can also receive messages over your messaging apps, WhatsApp, WeChat, whatever it might be. Any platform that is able to send you a message with a link that is capable of being clicked on is an avenue that an attacker can use to actually send a phishing attack, because that's all a phishing attack is. It's sending you something that entices you to click on something, follow a link, and that is where the malicious activity starts and begins. So if you can get on top of phishing, and there are protections out there, you are going to do yourself a huge favor in terms of there are a million different sorts of threats. We're facing a million different types of attacks and different malware families. But if most of them come from a single avenue and we get on top of that, we're really achieving a lot with a minimal outlay and minimal effort in terms of improving our security posture. So how do we adapt? Well, there is a key focus on endpoints. We can talk about all of the different sorts of tools that we're using. We're using laptops, we're using mobile phones, we're using cloud services. Some information is still being routed back to on-premises, but there is in 2020 a growing emphasis on endpoints because they hold the sensitive data. Even if you're downloading something over a secure channel and it's encrypted, it is decrypted once it arrives on the endpoint. And this is why attackers want to get into those endpoints, because everything will be available to them. It's got to be there and able to be read, to be useful to the users of an organization. So we've got to be making sure that we, A, understand how many endpoints we have, who's using them, B, have protections in place to make sure that any threats that might arrive on those endpoints, we do have sufficient protections for. That means protecting against ransomware. It means encrypting the content. It means being able to make sure that web requests to certain sites are filtered, and all of the controls you would expect from endpoint security. There's also a growing awareness that cybersecurity has to be part of the business strategy. Gone are the days where we had dedicated IT or security teams and they worked in isolation and they did their thing and the people running the business did their thing. That's not the case anymore. 2020 has really changed this for the better. We now see security leaders being part of the business leadership team, advising them the threats they're up against, advising them what needs to be done to make sure that the business can stay safe. And this is fantastic. I'm so happy to see this because security is a business enabler. And it can either be a business enabler or something that prevents a business from operating. If you suffer a breach and your website is down, you're not serving customers. So these two groups of people really do need to be talking in the same room, have the same priorities, and that is really, really positive to be seeing that. Now, what are some of the longer term trends we're expecting here? Well, this is interesting, and there's probably no surprises here, but we've got to make sure we understand the why. Why is the endpoint so important? Well, we've got the remote workers. Now, I used to have to explain this. I don't need to explain this in 2020. Almost everybody's a remote worker now, or they have been, and they will be again. So making sure that if they're not in the office, they're not protected by the gateways and the appliances there, that they still have protections when they're mobile. Removable media, even if you've got fantastic controls in place across your gateways, across your physical premises, if I have a USB drive and I plug it in and I copy a file across, that file is never going to go through the network. It goes directly onto the machine. The machine has to be able to see that, determine whether there's any threats, and be able to identify and react to that in real time. So you've got to have those protections on the device. Lateral movement is another issue here. So when an attack initially happens and an individual machine is affected, modern malware does not want to stay on one device. It wants to move around as much as it can and get across a number of different devices. We call this lateral movement. Now, that lateral movement, if it passes through a gateway in the organization, great, you can see it, but it may not. If it's spreading to someone local, nearby, on the same subnet, same VLAN, whatever the case may be, that may not go through a gateway. And so you've got to be able to detect traffic beaconing out to command and control servers, lateral movement, bot activity. That is something we need on our endpoints. And then the encrypted downloads. Now, I've talked about this briefly. If you're downloading something over a secure channel, your gateway won't be able to determine whether or not that is malicious because it's encrypted. You can't read it and understand it. once it arrives, it's finished downloading, it's reassembled on the endpoint, that's where you see it. So if it's malicious, that's where you've got to be scanning and being able to take preventative measures. Now, this has all changed. Google, Facebook, Twitter, and so many other companies this year have come out and initially said, you can work from home through the rest of the year. Some of them have come out and said halfway through next year or the end of 2021. And a lot of them now are coming out and saying, well, look, this is permanent. We're not going back. So working from home, remote working is the norm. It's a bit of a buzzword saying the new norm, but this is the way that business is being done. And so we have to be able to recognize that in order to properly protect. Now, having said that, and I've seen so many people sort of rush to this conclusion that we do have vulnerabilities across any given commercial size piece of software. So we've seen issues come out earlier this year against Zoom. Zoom was not the only one. A lot of organizations have said, well, because of that, we're going to use a different video conferencing platform. And I am not here to say that is the right or wrong decision. That is entirely up to you. You've got your own criteria that suits you. What I am saying, though, is that if you do use an alternative platform, there will also be vulnerabilities there. So we can't use a platform thinking that this is the safe platform. There is no safe platform. Yes, we can minimize our risks and we can look at all of the information available, and that's a good thing to do. But you've also got to have controls in place to mitigate any damage, to try to protect and prevent against specific threats as much as you possibly can be. So there is no silver bullet, never has been, never will be. The landscape is constantly changing, and we will see vulnerabilities get addressed in one platform, crop up in another, and it's always swinging. It's almost like a game of cat and mouse. So something to think of in terms of choosing the right platforms there. Now, we've talked about phishing protection. How does that really look in terms of getting an email and what you're going to see? Well, in any given phishing email, there's going to be certain telltale signs. And a lot of us with experience can pick these up manually just using our eyes. So the text in the body, the subject that's written there, who it's been sent to, individual links and what sort of traffic sites they're going to, who it's coming from. And this is something you can pick up yourself, but a lot of protections now look at this and combine a lot of different factors to make a very intelligent decision about, okay, this is or this isn't a phishing-based email. And if it makes a decision that it is, well, it can protect you against a lot of these different threats that we're seeing. Whaling, which is, trying to target the top level, the C level in an organization, getting users' login details, their usernames and their passwords. So phishing and ransomware are really two essential threats that we need protections for in 2020 and well beyond. So it's very important to understand there's so many attacks originate using phishing as an entry point into an organization. We've got to understand that. We've got to have tools in place that can help protect us. If we're just relying on user training and doing 6-month, 12-monthly workshops with our users saying, this is what a good email looks like, this is something you should avoid, it helps for sure, and you should definitely be doing that, but it's definitely not enough. You've got to have the combination there of the technology and the people awareness. Both of those come together here. Now, what does this mean for FinTech? Touching very briefly on this, if you're in the trading space, we know that a lot of people now need to actually make trades. They need to do contactless payments. The demand for this has risen in 2020. So where we're seeing FinTech really shine is in their agility, in their ability to offer services that are very much in demand in 2020 and leverage things to their advantage, such as artificial intelligence, such as software as a service, make it very easy for consumers to consume and to use. And AI gives you those benefits that a lot of R&D over a period of years previously would have been needed to achieve things we can do very simply in days or months today. Losers here, well, things like foreign exchange, for example, wealth management. People are being cautious about their money, about their investments. They don't know what the future holds. It's been a tumultuous year, and there is a certain level of risk avoidance. And this is really shining through in terms of people's risk appetites. That has declined, obviously, for very good reasons in 2020. But the organizations that can really leverage this to their advantage and give users what they need, meet those growing needs, are the ones that will sort of shine through and be very successful going into the future. So it is an opportunity to have these discussions with the senior leadership team about security, about keeping organizations safe. We know that it's not a case now of separate departments managing the organization, securing the organization. They've got to integrate. Security has to be part of the business process and have support from the very top. It's got to have board level, C-level support, or it's not going to be successful. And the biggest mistake, I see so many organizations sitting back and thinking, what do? We could do A, we could do B. We need to think and make sure it is definitely the right decision. The biggest mistake is not making a decision, because this situation is not going away anytime soon. We have to adapt, and you need to take a stand. You can pivot, at a certain point, but it's important to take on the advice of trusted advisors, listen to what they've got to say, make a decision for your organization. And the core thing here is that security is paramount to enabling the business. There's no escaping that fact. So talking briefly about the regulatory framework, we know, and this is Singapore-based, but this applies pretty much everywhere, the banking regulators are saying that, they've got policies in place, they've got guidelines you've got to adhere to, and this is a regulated industry. Now, what that means, of course, is that if you're doing business with third parties, if you're interfacing with them, then you are ultimately accountable for the security of your organization, regardless of how many third parties you interact with. So it's on you to understand the framework that you need to abide by and make sure that that is carried through to any third parties you do interact with also are held to those stringent sort of levels of security and regulation. So very important to understand that. This will change from region to region, but it is something that must be well understood. So just quickly wrapping up here, in Singapore, we do have a local instance. This is Checkpoint here, talking about, if you're in the cloud, if you want to be securing yourself. Yes, we have spun up a local instance in Singapore, which means data sovereignty laws, all the information stays in one place, it doesn't leave. That means you're isolating your data. It is yours. It's not commingled with anybody else's. And what it really means is that those data sovereignty requirements can be very easily abided by. So if you want all of your information in one place that never leaves, people outside cannot access it, that's exactly what this achieves here. So the slide we showed before with those guidelines, with the regulations we've got to meet, understanding the regulations is the first step. Abiding by them is the second, and that's where, depending on where you are, if you're in the cloud, there are ways you can enable that. And cloud really is a facilitator, much like what I've talked about in the other content throughout this webinar. And it is something we can easily act on and make sure that we are ticking all the boxes here so it does achieve what you're setting out to achieve. So before we wrap up, how are we helping? Well, whether you have users using the cloud, whether they're using their mobile devices and accessing your corporate resources, whether they're using endpoint devices, your laptops, they all have their own set of challenges. They all have unique solutions that we offer. So if you are interested, reach out to me, reach out to anybody on the team here. We do have trials available across those different protections. Trials for cloud, trials for mobile, trials for endpoint. Very easy to set up. You can see it running on your device, see exactly what is protecting for you. And that gives you that level of visibility into, well, this is what it's picking up now. These are the alerts we weren't seeing before. So this is the protection we now stand to gain because we didn't have this level of visibility before. So last slide, I do promise. Final wrap up, quick opinion on a post-COVID world. Well, really, there is no such thing as a post-COVID world because we're not going back to how things were. We're going to see some level of things slowly sort of going back, and some things will stay the same. And there's going to be a different sort of paradigm here. So whatever we're facing in 2020, you can count on that being a part of how we're doing business in 2021. It means that we need to be continuing to innovate, to secure, to understand customers' needs and be able to provide that to customers in a way that benefits them. We can't rely on them walking into a physical branch to open an account anymore. We really do need to make things online, available, quick, easy, painless. And if we can do that while securing it at the same time, that is where we're going to balance the needs of our customers, the needs of our organizations, and being able to innovate and really move our industry forward in terms of reaching that next level of customer success. So that's what it's all about. That's how security can help by enabling that. And that's something I'm really excited to see what 2021 and beyond holds, because I think we will see some very, very positive innovations that people are going to be talking about. So that is all from me. I don't know whether there's questions or not, but I will gladly hand over, and thank you again. It's been an absolute privilege to be talking.
Thank you, Tony, for that intuitive presentation. Again, as Tony said, Checkpoint services, Checkpoint software technologies would be available in the sessions room. And they also have a booth, a virtual booth that you can visit. And if you have questions and ask how their solutions can help you, you may enter that anytime. Tony, thank you.
Thank you.
So now jumping to our next track for the day, we'll be with the new banking experiences track. We'll start off with a panel discussion on the trends and transforming digital customer experiences in banking. Our panelists for today would be Mr. Manohar Chadalavada. Manohar is the Global Head Servicing and Transaction Journey, Retail Innovations and Fintechs Group Digital from Standard Chartered Bank. We also have Mr. Amit Agrawal, Engagement Director from KPMG. We also have Mr. Ron Batisan, Customer Experience Vice President at Union Bank of the Philippines. And lastly, we have Mr. Vipin Agrawal, Senior Managing Director and Regional Head at CIMB.
Hi.
So, Amit, I believe you are the moderator for today's session. So, please go ahead.
I can't see Manohar still on the.
Manohar is having technical difficulties. So, Amit, you may continue and we'll have Manohar catch up.
Sure. Okay. So, thanks, Chad. So, basically, what we'll be talking about is what type of digital experience which the end customer will have. So let me put you some thoughts around it, how the customer experience is changing over a period of time. So I have two quick slides which I just wanted to take you through with, and then we'll quickly move to the panel discussions. Okay. So this is something which I've shared even yesterday in my talk. If you see from the customer perspective, if I take everybody like 10, 20 years back, in terms of the actual needs, they were very different in terms of, if you're going to give them air, shelter, water, I think they're pretty good to go. And then if you're going to provide them some sort of a safety and security sort of a thing, and social needs and STEAM and self-assertion, that will be good to go. But as I take it fast forward to 2021, this is not enough. They will need more, which is Wi-Fi. Without Wi-Fi, you really cannot, do anything about it. You need internet or you need Wi-Fi. Wherever you go, even if you're traveling, you will go to the nearest mall where I can get a free Wi-Fi so that I can do my things. If you need to do anything, that's where I'm coming from. Is the requirements, the needs of the customers are changing on a daily basis. And that is where is driving the entire thing. How does these things going to work? The focus is more in terms of me. In terms of, so it will be more. So if you take about like 10 years back, it was more like a service model. But now we are talking about the experience-based economy, where depending on if you are giving me good experience, I'll bank with you. If you're not going to give me experience, I'll move out from you. So that is what it is. It's not in terms of the providing what type of service you are. It's more in terms of the experience. Even if you're going to give me the less services, but the experience is good, I'll stick with you. So that is where the world is moving. So that's where in this circumstances, how do we manage the digital experience of the customer? And that's what the topic is. So I'll stop sharing this, and then let's move on to the questions. I think we are still waiting for Manohar. Maybe I'll ask Vipin about it. Vipin, one question for you is that how can banks provide a digital experience, and can you share some approaches followed by banks globally?
Okay, hi. Can you hear me, Amit?
Yes, I can hear you.
Okay, just quick introduction. I'm Vipin Agrawal. I'm from CIMB Group, based in Malaysia. CIMB is a universal bank operating in 7 countries in ASEAN: Malaysia, Indonesia, Singapore, Thailand, Philippines, Vietnam, and Cambodia. So I guess some of you may be from those markets. We are over 140 billion in assets, and I run I'm a regional head for digital banking, payments, and personalization based in Malaysia. Before CIMB, I was with Citibank in 5 different countries, and I hope you guys are having a good day in the conference, and we hope to learn something from each other. On the digital customer experience, my take is it is really about being simple, intuitive, make it easy for the client to apply, and easy to fulfill. And in some way, I define this as the reducing friction. I mean, there's a lot of talk about friction. So how do we reduce friction for the client, whether it is for a sales transaction, service transaction, or for just doing some simple thing like fund transfer? So, what the way CIMB we look at this is that how do we make things easy? So in a CIMB Clicks app we launched last year, you can actually do a fund transfer to your favorite pay you have paid in past, and if the amount is below 250 ringgit, which is around 60 US, which is the PayWave contactless limit in a merchant, then you can literally transfer the money in 4 touches on your phone without a CIMB Clicks ID and a password. And the way we do this is I'll show the app. I don't know if you can see. When I open the app, you can already see my name because I have paired my phone with my CIMB Clicks ID. And when I do a transfer below 250, I can just do my thumbprint or face verification. So we do basically a risk-based authentication, but the net is about really making it simple and easy. And the same thing would apply for a sales transaction. How do we reduce number of fields? So for example, we used to, for a particular product, we used to ask for 42 fields to be keyed in, and now we reduce it to like 25. How do you make it drop down? If you make it a field drop down, then you are reducing the amount of keying by client. So net is really about reducing touches, reducing fields, and make it less friction as far as the digital customer experience goes. Back to you, Amit.
Sure. Thanks, Vipin. How about Ron? Do you have any thoughts about it?
Yeah, I think digital is not always the solution. I call relevant digital as the solution, because sometimes we're all excited about technology, right? But it's not resonating well to the customer. So what matters really is what the customers need. So we provide digital solutions for customers' specific needs, but not necessarily just providing simply digital. So for me, a relevant digital banking experience is more appropriate than just calling it digital experience. So that's my thought about it. Because, for example, in Union Bank, we develop solutions this pandemic. For example, there are a lot of remittances here in the Philippines, right? There are people sending money from province to province. So we developed a solution in our app. It's called Sending Money to Remittance Centers. We developed it in 2 weeks only, and it was a hit. A lot of people are using our Union Bank online mobile app to send remittances to their loved ones in the provinces, because they can't go because there are a lot of restrictions on the borders, and it's very relevant to our customers. So that's what that's my mantra actually. Creating digital experiences that are only relevant to customers. It's not just for the sake of technology per se. Yeah, that's my thought about it.
Sure. Thanks, Mano. Thanks, Mano, joining. So we just started the panel discussion. So I was asking Vipin that what his thoughts are on banks providing the digital customer experience, and what are some of the approaches which the banks have followed globally to give the customer a digital experience. So, Manoj, do you have any thoughts around that?
Yeah, sure. Thanks, Amit. I'm sorry we had a technical challenge, so we couldn't join on time. But I'll just move away from banking, because what does happen is your digital experiences which you get in banking, right, is still legacy, and a lot of these are changing the paradigm. We have challenger banks coming in, etc., which is improving some of the digital experiences. But I will touch on 4 or 5 key mantras which we are now putting it as part of our DNA for actually improving that experience, right? Because see, a lot of these digital experiences we see in a lot of other industries outside banking, and some of them we want to make sure that that's imbibed or embedded in a way we actually bank, especially in the retail space. There are 5 mantras which I think people should know, and I don't know whether Vipin or Ron brought it out, but I will make sure that it's very clear, these 5 things, and these are universal. It's not just banking or whatever, right? Because the experiences outside banking is much more dominant, and people see it on a daily basis. First is, if you take a digital experience, you need to make it very, very simple. You take an Uber app. If many of the countries now use Uber, at least used to use in Singapore, but Uber's experience in the way taxi is actually used today is amazing, right? And Grab, which is now big in the Asian space, has imbibed some of them. Gojek, the experiences of customers there make so simple, right? When you just open a Uber app or a Grab app, to make that experience really transformational. I think banks should get into that space, and I think with challenger banks coming in, banks are looking at how do you make that very, very simple. And if you see some of the examples of how NPS story, right, which is a key ingredient on measuring customer experience, has completely changed. If you see in UK, the bigger UK banks, which are digital, like Monzos and Starlings, they're very, very simple to operate. Revolut is very simple to operate, right? And their NPS scores in the high of 60 compared to traditional banks, which are still in the single digit numbers, right? So I'm just giving you that first mantra is keep it simple. Then the second one is they get very personal. Your experiences, especially when you use Amazon, in many of the markets we operate, customers use Amazon, right? They make it very personal. They know what your personal preferences are when you actually start browsing their website, and they make it so simple. So first is make it simple, make it personal. They make it very simple. I don't know how many people hearing us have ever spoken to Amazon call center to resolve some of their problems, right? And it's very, very simple, very intuitive. So they get very personal when you actually do some of these experiences. Then they engage with customers. I'll give you examples of Starbucks in many of the markets. Their apps are, I mean, their customer touch points are very, very, that's where you get very, very touchy when you actually start using a Starbucks experience. So they engage with the customer, and they constantly engage with customer, right? So one is keep it simple, get personal to an extent, not just, hammering them with SMSs and emails, but get personal so that it becomes easier when you really want something. You want a loan, you want this one, get it personal and engage with the customer. You offer the customer the right product or the right service or a right interaction at the right time. Okay, many of these large players like Pega and Salesforce engage with customers, and they work across multiple industries, right? They get that experience. They engage with the customer and give the right interaction. They don't offer the right product. They don't oversell something, right? They right interaction. It can be just a message, a birthday message, to offering the right loan at the right time when they want to travel or when they want some education stuff, right? So engage with the customer and make the process very simple. If you want to onboard a customer today, we in legacy banks, and this is across the footprints where we operate. If you talk Hong Kong, Singapore, you can take even US examples. It's very complex for an onboarding process. Make it simple. for a customer. And I think some of the examples we see in India where Aadhaar is being used to make things easy for customers to get it on board. I think make it easy for the customers. And a lot of these institutions are actually practicing this always, and remain customer focused. Don't do everything. Don't drive products, drive client experience. Work for the customer. Keep customer as at the middle, solve their problems. Then you have a lot of these customers sticking to you for a longer period of time. I think these are my 5 mantras. And I think as a bank, we have learned over the last 12 months or 12 years to get these experiences, make it very simple for the customer. And I think over the next 3-4 years, we'll focus getting these 5 mantras up and running. Thanks, Sumit.
Yeah. Thanks, Manohar, for sharing the 5 mantras for digital customer experience. I'll move on. So the question is to you now. Okay. So could you be like, as we see the changing the customer experience now, the banks were really more on the product banking perspective. They will come out with the new products. They will try to do the hardcore sell, the way you were saying, Manohar. They will start pushing through SMS or some different way of doing it up. But I think all that will going to change with the digital banking coming to picture, where it will more becoming like a adaptive banking in the sense like depending on what customer required, they will change their requirements on fly sort of a thing. So that's the way things will be changing. So what your thoughts are around it? Even there were some studies saying that they might become a little more proactive in terms of building this selling their products. They will understand the customer's needs, and depending on those needs, they can become more proactive in terms of sharing the products. Probably if for example somebody is married, then probably they will come out with a new product, which probably they might say you may want to buy this sort of thing. What your thoughts are how the banking will change with the digital banking coming to picture? Manohar?
Yeah, thanks, Amit. You're able to hear me?
Yeah.
Okay. See, this is fairly simple to understand, right? Because it's been if you just take a decade of what's happening in banking, you have 3-4 big shifts which are happening, right, within the bank, within the outside world. One, the big techs are looking at how do we offer financial products to customers, because they have a large customer base. They may not have license, but they want to make sure they monetize that customer base. So they are talking to banks, using the balance sheet and license to actually start giving financial products to customers. So that entire step change is happening, right? It's not entirely product driven, right? So that's one big change which is happening there, right? Second, you have banks themselves transforming themselves. One is, you can keep saying digital transformation, but digital transformation is now a given, right? It's required for us to really make that process more simpler for customers. So the third one is basically the platform play, where you have a lot of these platforms which are now in the markets, which they want to offer banking as a service. So they want to make sure that process is simpler for customers. Then of course the challenger banks, neobanks, which are dime a dozen in the market today. But what's happening is that entire shift is happening towards from a product driven banking, which is what you guys call it as. I will call it as legacy banking. Okay, legacy banking drives saying I will give you a credit card product. Even the organization structures are driven by straight you have a CCPL, you have a credit cards and personal loans organization, you have a mortgages organization, and it's all siloed. It is not effective in the new world. Okay, and that's very clear, and banks are beginning to think about this. Some of the banks are progressive, they've gone ahead, like BBVA, Santander, etc., who have completely changed the way they look at banking. They have gone with partnerships, they've gone with advanced technologies, API banking. So they have really changed the shift. in the markets we operate, especially in the Asia space, a lot of these changes are still coming in. Banks are still opening to saying, how do we get into APIs, make it more API enabled, etc. So those thought processes are also changing. But how my thought on this is, given the systemic nature of these changes, it is clear this is no longer short-lived trend, right? As the experience economy goes, banks are looking at ways to stay relevant actually in their own turf. And this is a fact. You can see by valuations which are happening in the market. Share price of banks are actually falling, whereas the fintechs and others who are there in the market are just zooming up, right? So that's one area. What I mean by adaptive banking, is from a product driven to adaptive banking means you bring in intelligence, you make process agile, and you look at what is required to change customers, businesses, and lives. So these are the three broad aspects of how I define adaptive banking. You bring in intelligence. Intelligence means data. You bring in agile practices. Agile practices go beyond software, right? The agility in the IT world, agility is a given. There are a lot of IT organizations which practice agile, but a product organization or a banking organization does not practice agile. They want to do everything in a, you have to just boil the ocean. You have to launch a large product. You have to have everything in place before we do something. I think what we have to think is, it's an imperative. It goes beyond a software development. It actually represents the need to quickly and efficiently react to changes in the business environment. If there are changes happening, we have to be agile enough for us to launch something. So my thought process, Amit, on this is, and to the audience is, we have to bring in intelligence in the way we manage, bring in data, bring in analytics to drive our business, bring in agility to make it easy for customers, look at customers' problems, solve it bit by bit, instead of solving the entire, this one. And your go to market today to launch a product, Amit, in many of the banks is easily 6 to 12 months. You need to do a product, you need to test it, you need to change platforms, and then go ahead, right? So that's one. And third is, you need to understand, as I said before, mantra is get the client at the center of what you do. If you get the client at the center of what you do, you know what the problems are there to solve. Otherwise, you lose the customer and you lose the market. Okay, so that's
Mano, you're right. So I think to a very large extent, I think the majority of the time, the delay of the 6-8 months is mainly more for the couple of factors, more in terms of the internal processes, the infrastructure issues. So those things have been there, and so I think a lot of these things will probably go away as there's a progress on the infrastructure. For example, the cloud computing, the quantum computing. For example, Singapore, everybody is already moving about 5G, LOT. I think all that will help, and plus because of the LOT, all the devices will become more like a internet-enabled devices. That means the bank will have a lot of data to play around with it to customize these things. So hopefully, with all that, I think we can make it more adaptive banking. So I think there's one question from the stage. They were asking is that how banks need to reinvent themselves in the digital era while presenting competitive advantage in terms of customer trust, regulatory compliance, and shareholder value creation. Anybody have any thoughts?
I think it's a very broad question, but one thing I want to connect is that the banks have two significant issues not to be able to be customer centric, like Manor was saying. One is typically we are organized by product. So there's a product vertical: credit card, personal loan, auto loan, mortgage loan. And it's been the case for a long time for good reasons in past, but then each person is looking at their own silo, quote unquote. And that requires a bit of change. So in our bank, what we did is we actually created we call it a personalization department. And anything which goes cross product at a customer level, they try to focus on. So if you have a credit card and a personal loan and you have something has to be done, it's a relatively small team, like 10 people at this point, but they're really focusing on the whole personalization, looking at the customer level and not by product. The second thing is about the system. the legacy systems also tend to be typically by product. So customer is applying for a product B and he already has product A, and you will ask him to fill entire information again. And also, if you want to create some, let's say, triggers, a real-time thing every time a system change, Manohar talked about 6 to 12 months for a product launch. But even if you want to make a minor change, it will take anywhere from 2 to 6 months. So what we did is we actually got this US Boston-based technology company, and it actually overlays on the legacy system, because changing legacy system is complicated. So what happens is that all the legacy system, cards and loan and so on, deposit, they actually send data to this, we call it a real-time trigger system, from the legacy system into this. And this platform is fairly flexible, where you can actually do a trigger real time. So we actually can do things like you buy a travel ticket. I know travel is a bit no at this point. You can actually be offered a travel insurance within seconds. Another example is we try to reduce cash by the client. So customer goes to ATM machine and takes money. By the time you count your cash and you walk out of the ATM lobby, you will actually get a EDM telling you how you can use a debit card, or you can use CIMB clicks, internet banking. So I think the system can be a problem, but we have to find ways where we can overlay an existing core system in a way that we can do things we want to do in a fairly fast manner.
Sure. Okay. Thanks, Vipin. Manohar and Ron, do you have any more thoughts? Because I think on this, or before we jump to the another question.
No, I think it's fine. You can jump to the next question. Thanks.
Okay, sure. Thank you. So I think next question is more to Ronaldo. You, how do you think the banks can build a loyal customer base in this new digital customer experience world?
I actually took note of Manohar's comments earlier about offering a seamless customer experience to our particular customers. And with that, I think I quote our vice chairman, Justo Ortiz. He said to offer digital services to customers, we need to have a 24/7 reliable system, anytime, anywhere. And it also has to be Six Sigma reliable and safe and secure. I think with those factors kicking in, the customers will feel important because as you all know, here in the Philippines, the internet is not stable. Some of the bank's systems also are not fully functional during the pandemic. And our promise to our customers is to offer relevant services that are available 24/7, anytime, anywhere, Six Sigma reliable, safe, and secure. So I think that will make the customers sticky to the bank, because most of the basic needs of the customers when it comes to banking are being offered online in the app. And it's not just available to the retail customers. We also have solutions to our small and medium enterprises and our corporate. So as much as possible, we make sure that all of the digital channels are available in a particular type of customer. And I actually lead the branch transformation strategy of the bank. And what we do in the branches right now is that we convert our customers to digital every time they walk in. And we have a program called Promote and Convert. So all of our branch ambassadors are actually doing the conversion every time they walk in, so that they won't go back anymore and do their transaction self-service. So I think that's what makes the experience seamless and of course lesser risk also with the virus.
Sure. Vipin and Manohar, do you have any thoughts on this?
I'll just go back to what I said about the first question. Make things simple, intuitive, easy to apply, easy to fulfill, and then keep it low friction. And don't frustrate the client. It's very frustrating to the client that he calls, contact one channel, and he contacts another channel after half an hour, and the other channel has no idea what happened in the previous channel. So there is the opportunity to reduce pain points on one side, and on the other side is really make him wow, make him happy, do things which he does not expect. like Google search, you go and before you type the full word, it already knows. It almost looks like in Google they can think about you. They can read your mind. So banks have to do something similar to really give things client proactively before they even ask. Yeah.
I think yeah, that's a good point here, Vipin. So that's where I think a lot of these apps will be like hyper connected, in the sense like using the bank, I can connect my utility app, I can connect my maybe taxi hire app. So that's the way the world will be moving. So everything will be connected with each other. So what you think, like in the how does the in that particular world where for example CIMB Bank is connected with your local taxi hire utilities, how are you? And I'm sure the similar experience will be provided by your other competitors like Maybank or Ambank, who might be going in the similar journey. So how does the banks going to make it their position unique, so that the customers still stick with them in terms of the entire experience and they don't go away? Any thoughts on that?
So I break it into two parts. One is what we can do as a bank within us, and the second is what can happen at the partner's place. So on the bank side, today it's not uncommon that, as I talked about, you apply for your credit card and you already have a bank account, and we ask customer to key in the whole thing again, your name and address and phone number and so on. So one is even within the bank system we can connect. But if you go beyond bank system, I think there are developments. So for example, Belgium, they have a digital ID. And with the digital ID, a lot of information is pre-filled. In Singapore, with MyInfo, you can actually pre-fill information on a credit card application. So our own, on a credit card or personal loan, if customer applies to CIMB Singapore, and a lot of banks do that. So it's not really rocket science. You really connect to MyInfo and actually get the information. So then tomorrow with the open banking, you can actually pull data from other places, which is in Malaysia is still early in the stage. And then with the partner, if you have a connection with the partner, and let's say customer has a DZ line and he applies for CIMB, and we are not doing as yet, but can I pull the information from DZ system as long as customer verified? So basically what you can do in the bank, connecting to various parties and make customer life easy. The second part, which is probably a bit more difficult, is that how can we enhance experience in the partner's place? So customer goes and go to a Boost wallet or TNGD wallet and wants to pay. Then how do we make it easy with the partner, the experience of using a CIMB product? So what you do in the bank and what you can do outside.
Sure. Thanks, Vipin. Ron and Manohar, do you have any thoughts around it? I think we're running out of time, so I think quick one if you have any.
No. I see. For me, though I don't handle customer experience directly, but the first thing for me to understand how to improve stuff, and that is what we're trying to do, and it's not easy for legacy banks operating in multiple geographies to do, is understand what the customers are thinking. Right, customer interacts with us in various channels today, right? Starting from a mobile to a call center to a branch, or various channels you interact with customers. What is the customer thinking? I'm not sure. I know that a lot of these companies or industry outside the banking industry, like Amazon Honor, tracks your customers' responses. Amazing stuff. I've gone to some of their events. Amazing stuff. The way they do, how they track. I think first is identify what the customers are thinking and track and address these customers' issues. I think that itself will become a big transformational change if you really have to bring in the customer experience and make customers stick to you.
Okay. Yeah, I think a lot of these things that Vipin was saying about digital identity, I think that will change, because currently some of the things which is not happening in Asia at the point of time, but people are talking about digital tokens, which they even call digital assets. So that is upcoming, and the something which is currently missing is at this point of time is the regulation coming from the local regulator. But there are some initiatives happening from the in other part of the world, for example in Europe especially, where they're pushing a lot of these things on digital assets. I think once all that is being sorted out, I think just to add with what Vipin was saying, all that will be just probably for and customer, they will have their own digital identity. It can be either on the blockchain or any DLT platform, which can be used, which banks can pick it up, and there'll be a lot of underlying data linked with it, and that obviously the the customer will have a lot of trust on, because it's be used by banks, it will be used in a proper way. I think that might solve a lot of these issues on terms of on terms of the onboarding a customer. I think that is where the probably things will be leading. But I think it all depends on how these things evolve over a period of time. I think there was also to say there was a question from the audience. They were saying that the legacy banks are not digital natives and not in leading positions, but in some areas even banks trying to chase up. There's no guarantee that the new practice could bring benefits on P&L, which present barrier to the further action. How do you deal with the dilemma? How to conduct the digital transformation step by step? Any thoughts?
This is not an easy question. If we had answers, we could have become multimillionaires. But having said that, it's a very relevant question, I think, which we are trying to address everywhere. But what I'm trying to say is, legacy banks, I understand it's not easy to transform the legacy platforms and infrastructure we have, and also the thought process. That's why I talked about Agile. Hopefully that will change over the next 2-3 years. But we are seeing some transformations. If you actually see, this is all publicly available information, so nothing secret about it. In Africa, we are launched 8 digital banks, and that's one. We have the mothership, which is legacy, but we are doing everything on the mobile, right? And we are rationalizing branches there. So that's one big area of transformation we think we are bringing in some of the markets which are really fast and moving. And it's not. So I'm saying there are areas where we can pick up and go. There are areas which we'll struggle, and this will hopefully address over the next 2-3 years as we tie up with partners and fintechs. Thanks.
Yeah, Ron, you have some thoughts, right?
Yeah, I just want to share our own experience in Union Bank of the Philippines when we did our digital transformation in 2016. So we started with looking at the enterprise architecture and looked at the existing systems that we have. We audited it and see which are still relevant to the customers. And when we saw that some are not really relevant, we decommissioned those systems and replaced with the new ones, applying agile methodology. And it's really working for us because the agile methodology of doing sprints and then planning, etc., have been working well for us, because we were able to do a lot of digital transformation initiatives like branch transformation. We launched our Union Bank online mobile app with features like digital account opening, mobile check deposit. We launched our InstaPay and PesoNet funds transfer to other banks, and our customers are very happy about it. I think it's very important to look at what you have right now, do a situation analysis, and then also ask from consultants, because one of our consultants said, if you don't digitize, you will perish. So that statement stuck to us, and so we have been continuously innovating on customer experiences. Yeah, that's my thought about it.
I agree, Ron. All the banks should hire big fours for doing this consulting work. I agree.
So Amit, my take is that I think being in digital part of the business, sometimes some of us think that it is all about investing money. It's about spending money. What I try to look at for my organization is that it is not just about spending money, it's about making money for the bank. And so when we digitize, and I know there's a lot of talk about these digital banks, and the fact is most of them are losing money. So I would say that we as a legacy bank have an advantage. We have the licenses, we have the products, we have the large balance sheet, we have large revenues. So for us to invest part of the revenue into really doing something better for the client is not that complicated. And there are ways to make money. So, for example, if you're dependent on direct sales and telemarketing and branches today, and if I can create sales online for the client by making the process easy and simple, and we've done that in last 1 year, most product, we are growing anywhere from 300 to 1,000% on online acquisition. And online acquisition makes real revenues. It is not just nice innovation. So I think there are opportunities for us to be profit oriented at the same time digitize because we have a large P&L, large balance sheet, and large revenue base. So I think we are in a better place in some way versus digital bank. The technology can come in the way, but we have to find options in digital in technology that can you overlay on the existing legacy technology in a way that you can still do things. And I talked about the real-time trigger system we implemented.
Yes, Vipin, you're right. So I think just to on the digital banking space, yes, I think majority of the banks currently, especially we have seen a lot of this happening back in Europe, especially. I think in Asia, only few countries like Hong Kong and all where just launched the digital bank initiative, and there is even happening something in even the Philippines. But I think what majority of the things are happening is if the digital bank can just sustain themselves for another say 5 to 10 years, they might be able to make some profit. But on a short term, yes, I think it's going to be much more harder for them. And in fact, there was one survey which has predicted that if the bank can stay for being live for 5-10 years, they can start making more money than what the bank will be there in like a couple of years. I think that's where the things are. Yes, and definitely legacy banks or where banks like CIMB and other who have a good larger P&L, they've been very innovative. I've seen so much initiative coming from SCB. They've been launching the digital bank in Hong Kong. CIMB taking so much initiatives. All that will help. I think end of the day, all that we're trying to do, even some of the examples which Union Bank of Philippines have been taking about, all that will enhance the customer experience, and that's what that is what it's all about. I think we have one last question from the audience. I think after that we can end up. How current pandemic has changed the trajectory of digital transformation within the bank and across the banking industry?
I think for us, the volume has just gone through the roof. From February to, let's say, October, our digital transactions in Malaysia have gone almost 50% up, partly because customers are stuck at home, but partly also because what we did, we spent a lot of time and money and on educating the client that you need to transfer, your life doesn't stop because you're working from home. So you still need to transfer money, and you still need to pay your bills, and you still need to mobile top up. So we focus on 3 transactions, which are 99% of our transaction. And we know for a fact, based on the market data, that we have grown faster than the world. So the world has grown on digital for sure. So I think it's an opportunity. We found a fact that a ringgit note goes through 55 hands in a year. Repeat, it goes through 55 hands in a year. And we use that information to tell customer, hey, why do you want to take ATM cash? Use your debit card contactless, use CIMB clicks. So I think it's an opportunity clearly as I see it.
Okay. How about Ron and Manohar? Do you have any thoughts?
Very similar. Yeah, I think we've seen uptick in digital transactions, and we have enabled a few activities for customers in markets as diverse as Nepal and Sri Lanka in our footprint in Asia and South Asia, and given them better servicing without them even stepping out into a branch or this one. So we have enabled some of this so that we took this opportunity. Sorry, thanks.
Ron, do you want to add anything?
Yeah, I have similar experiences with Manohar and Vipin. Our digital transactions really went up tremendously and drastically. And the role of our branch has evolved from a place for transactions to a place for digital conversion, where we educate and teach our Filipino customers to use our app, our mobile channels, and self-service machines as well, so that the risk for exposure will be lessened. Yeah.
Sure. I think that's all we have. So I'll just wrap it up. I think something which everybody is saying is that what we need to do is we need to understand the things from the customer shoes perspective. For us to have a digital experience, we need to keep it simple, keep it agile, and educate the clients on what you will have. I think if we can just focus on these 5-6 things, then we can provide the end client digital experience. That's all. Joy, that's all from our side. Thanks everyone.
Thank you to our panelists for that great discussion. To add to the banking customer experience moving forward, we have Mr. SB Ngoo, the General Manager of Banking Vertical for Internet of Things Group in Intel Corporation, to discuss more of the transforming of the banking customer experience, specifically with AI.
Are you hearing me?
Hi, SB. Yes, you are now live. I'll giving it over to you.
Let me share my PowerPoint presentation. Or would you? Okay. Try.
You can share it now, and I'll confirm if it was successfully shared.
Okay. Are you able to see my screen?
Yes, SB. Just make sure you play it.
Which screen are you seeing? My screen right now?
Yeah, your PowerPoint presentation.
Okay, so perfect, right? So it's the full screen, right? Are you seeing my full screen?
No, it's your show taskbar, display settings.
Okay, how about now?
Okay, that's better. Go ahead.
Okay, thank you very much. Good morning, Jet. Thank you for the opportunity for me to kind of share some insight about and also the experience in this Digital Banking Asia 2020. So what I'm going to talk about today is pretty much about how the AI that will be able to help to transform a banking customer experience, especially in the branch. I will use that as a case study or example. In the past one day and this morning, I hear a lot of very good insight about the panels that talking about AI, talk about digital banking, talk about a lot of good stuff today. So let me go into slightly about a bit more detail. The transformation is nothing new for this financial industry. So this industry typically the first to innovate in leading the technology transition throughout the entire history. So you can think like it is like as a canary in a coal mine for the enterprise. We see things in BFSI before we see them in this other industry vertical. So this COVID-19 pandemic has accelerated the ongoing transformation of the banking industry around digitization. So I hear that a lot of discussion today and yesterday. This industry, has to act to evolve and think of improving the customer experience, through the more personalization, getting better security policy planning, offer new services and product with this new digital transformation, considering the technology like, cloud, edge compute, artificial intelligence, and also Internet of Things. So in short, you just think of that. Cloud is the engine. Edge is the gateway. Data is a fuel. IoT is a source of the sensor. Then AI or artificial intelligence is the output of all this insight. So let's discuss my favorite topics here today on AI. How does it transform the banking industry? AI has the potential to transform virtually all the industry I just mentioned, and in fact is already making an impact in this industry. AI in banking will help financial institutions improve the efficiency and services as well as risk management, regulatory compliances, And example here, like AI is transforming banking industry, everything from the front office to the back office over here. So what kind of new capability on the kind of in this front office is example over here, like I kind of call it out, the self-service kiosk machine and the digital signage. So self-service kiosk embed with the vision so-called recognition can identify if an unauthorized user or user trying to access an account or block the transaction or even capture the images of the thief. So we added a customer service chatbot and a virtual assistant or avatar, we call it avatar over here, that in the kiosk will become more helpful as they grow more capable of understanding all the natural language. Over here that you can see here that the service robot is able to kind of place to guide the customer in the branches, and also all the smart display can cater for personalized offer by identifying your gender, age, and all these biographics over here. So moving to the right side in the middle, then moving to the to the cloud side perspective. So closer to the back end office, where the brain of the AI is located. All the analytic, intelligent, and process can be processed over here. So it is getting smarter with this machine learning, with the operation and channel management over here. And you also, of course, can do the fraud detection with this AI analytic. So most importantly, if you look at the top of that, the Business Insider did highlight that, that will help with the AI implementation with a cost saving of close to 447 billion by 2023. Sounds interesting, right? So give me a few more minutes. Let me zoom into this kind of illustration of the future of the bank branches over here. So you can see this is the floor of this bank in the future with the digital transformation. I would like to use that as how we demonstrate the AI usages over here. So first of all, let's look at zooming into the center of this lobby over here. And you can see that, the chatbot with the digital human interface. So this is a contactless. It's here right now. With the pandemic that lately we have talking to a lot of end user bank, talking here from the bank branches, the software and hardware implementer technology. They're looking for the contactless technology, and it's here right now. What can you do with that? So it can help the customer find what they are looking for with this integrated digital assistant in your bank branches, this kiosk machine, or digital signage. This AI-powered avatar can interact with the customer through the voice, through the touch, and the gesture, helping users to go through their decision-making journey by explaining all the product feature, resolving some of the basic queries, and recommending some of the relevant offer. It will bring back the human touch or element to the customer service without relying on the actual people or your officer, especially nowadays that we have to put in the SOP for social distancing, right? So that will help you to take into consideration. So in order to meet this goal, artificial intelligence power this avatar are designed to emotionally engage with your banking customers. If you move to the left top part of that, so that's called AI-enabled digital signage. So it can use the vision AI to deliver the effective content and make a data-driven decision. How does it do that? So it has kind of embedded with the camera and be able to understand your customer profile, whether by the age, by the gender, or even by your VIP profile portfolio. And the AI that enable this digital signage can push personalized, offers such as, loan investment plan that towards the user that are looking at that. So find out what screen that attract the most user, and also who are the viewing their content, and what content they are viewing is also important, because that will really give you a very clear ROI or measure return on investment on all this digital signage display over here. Okay, let me zoom in and into another area. So we have seen this lobby in the center, right? Let's go to the favorite area in most of the banks today, which is the ATM machine area. So ATM machine have been there for many years. However, lately, enhancing this ATM with new verification technique, like the vision recognition, biometric authentication, will allow the consumer to even do more services with this ATM machine, more than just withdrawing the money itself. So in some region, this ATM machine is also kind of evolved and transformed into, we call it a virtual teller machine, or some of them they call it a smart teller machine, which enable more self-service function. So just for example, if you want to make these branches more so-called the automated or autonomous self-banking, you have to improve this ATM to do more self-service function, so that your consumer can perform any services they want, any times that when they are convenient, rather than only the office hour. Moving to the left side, you can see that that's called kiosk with natural language, or we call it NLP, processing machine vision for document scanning. Voice response promises to add this new interactive for this self-service function, and also enable another way of contactless interaction. This capability is particularly useful for the elderly population who are not really technology savvy today. These are the population that will continue to visit your bank branches. Then you have to really kind of look into how you can improve that customer service experience. So using this voice recognition, the command will really help to direct all the function rather than touching the screen, or even able to navigate to the data processing that you want. I just give an example where I just kind of lately talked to some of the banking in India. So they also have been focusing a lot of ATM machine and also self-service on the printing their, you may be surprised that on the bank books itself. So these are all the things that could really help, because it can support multiple language. A country that have many language is very headache. You cannot hire like thousands of officers to answer all the different language. But with this NLP, it could help. So at the back end on the left-hand side, you can also kind of analyze that who are using your data, who are using your machine, who are using your services out on the floor, and do the kind of real-time customers and operation analysis. All these are really important because it can provided by all the sensors that are kind of deploying on the floor itself. Okay, let's zoom into another area. Let's go out from this branch and go to the other side of it. Okay, drive-through area. You see, I know that some country may not be so popular with this drive-through, but certain country like in US is kind of very popular with this kind of drive-through concept. It offers another new services. I'm sure that all of us are very familiar with the drive-through ordering the food, fast food. We call it quick service restaurant like McDonald's, Starbucks, and so on. Why not bank as well that provide this kind of convenience service? And especially nowadays with the SOP, you know that you can't go to the bank branches at a certain time or even have a social distancing. With this drive-through capability, you can implement a lot more artificial intelligence usage model over here. Example like voice recognition for touchless application. And even though that you can even advance more, it's like you can actually detect who are your customer that driving to and coming to use your service. And it can help you to identify your VIP, customers. And when the car kind of drive through, you can recognize the car plate itself. And you can personalize all this offer through the AI-enabled signage, just what you have experienced inside the branch itself. So that will really improve your customer service for your VIP at least. Okay, let me summarize the whole things that what I have been going through with you, walk through with you from the bank floor itself. So I take example that to show you how the customer journey looks like. Like Amanda, I take example, the name Amanda, like age 27, is an accountant. So when she wanted to step into the bank, it typically will say, hey, bank can actually collect their customer insight on the Amanda when first she just stepped into the floor itself. What is her spending and also the investment habit in the past? So the AI will do the processing and can personalize, the offer. So that, Amanda is a accountant. It's she's looking for always low risk kind of investment pattern or plan in the past, then you can really customize that. So it's just like the customer feel that so happy because you know them so well. So just like that, so you're moving to the third stage that I'm gonna visit the bank branches when after he's serving her content on the apps itself through her cell phone. When you step into the bank branches, immediately you can recognize it as a potential VIP. So when you go into the chatbot itself, whether it's on the screen, on the kiosk, or on the signage, or in a physical robot, you can greet Amanda. I'm so happy. Someone can call me by my name. That when I just serving the apps on the phone, but when I kind of step into the bank, wow, actually the bank know me. So I feel so proud of that, sometimes. And also that we call it KYC, right? So you kind of doing instead of manual documentation filing, you can actually kind of help him to verify this is, you really can actually know your customers better. So instantaneously, when whatever we call it kind of omni-channel, whatever you are serving online, you're serving on your phone, whether you're serving on the PC, when serving on the experience on the bank branches, it looks seamless. So I'm sure that Amanda will be very happy with this kind of frictionless service, and it's so kind of feel proud that to be a VIP for you, right? Okay, this is kind of an example of that. So of course that when we talk about AI sounds fantastic, big opportunity and so on, right? Of course that to implement that, a lot of banks also kind of feedback to us, and you can see that McKinsey, they do a survey with all the bankers and say, hey, deploying AI is really fantastic, but there's many challenges over here. So first of all, it's kind of a lack of AI strategy, weak core technology and data backbone, and the operating model and talent strategy is not really there yet. So Intel work with different type of the ecosystem partner over here. Everything ranging from the hardware to the software to a complete end-to-end solution. So together with our partner, Intel can act as a trusted advisor for you or for the bank on the development of a new banking technology. We work with some of the bank in project pilot opportunity of various regions to test out this new concept implementation during your digital bank branches transformation, and also uncover some new methods to resolve some of the pain points for your industry. As you all know, the IoT, Internet of Things, ecosystem is very fragmented. In order to offer a complete solution, Intel also work with the independent software vendor, we call it ISV, to harness the performance advantage of the Intel hardware for advanced analytics and the AI, both at the branches and also the data center for the cloud, power new capability at the edge like audience analytics, opt-in vision recognition, fraud detection for security purpose. That's all important. Intel also work with the inferential system integrator to understand the banking industry problem from the end user in order to determine what is the best solution for you in the banking industry. Just take for example, we have a program named Intel Market Ready Solution, and you can actually offer a lot of scalable end-to-end ready deploy solution that provide a solid business result for the banking industry today. In order to support you to multiple kind of category of the customer and also your different needs, Intel is working with a consortium to drive an open platform to meet the fragmented needs and open standard. I'm sure you'll be happy with that because you can really work with seamless connectivity without compatibility compliance issue. To achieve that, Intel develop and provide a multiple building blocks technology like Intel OpenVINO to help in the AI inference learning on the various hardware platform range from Intel server, Xeon processor, Intel Core processor, Intel FPGA, and Intel Movidius processor as well. So coupled with this Intel vPro technology, which will help you to resolve the challenges of this remote manageability that you can monitor remotely from any place that you want at any time. So in short, I will repeat again. Cloud is the engine, edge is the gateway, data is the fuel, IoT is the source for the sensor, and AI is the output of the insight over here. So to conclude my presentation, you may ask me what is the next step you can do with us. Oh, before that, I just want to call out in the previous page, right? So if you want to know more detail about this technology, you definitely can visit www.intel.com/banking. You can really get more detail about what I'm sharing over here. So in order for you to even closer for the next step to address a problem or helping you to solve the problem or even identify some pilot opportunity together or learn more about Intel solution, you can contact me through my email or through my LinkedIn, or you can even work with all our team colleagues over here in many different regions, whether you are in the US, Europe, or even in APAC or APAC or Japan. We have a wide range of our colleagues that sitting in a different region to service you and support you. Okay, I'd like to end the presentation here and read a video over here, which kind of illustrate that what I just mentioned, how the AI can help you to transform the branches. Jet, I will go ahead and play this video.
SB, please close your screen. I will share the video from my end so that audio will be heard.
Okay, sure.
Expect vendors to offer products and services that are personalized, easily accessible, and fast. One of the best ways for financial institutions to meet and exceed customer expectations is through self-service digital kiosks. The results speak for themselves. 85% of consumers have used a self-service kiosk, and research shows that customer satisfaction rates improve when customers have the option to use one. For merchants, the returns are similarly impressive. By introducing kiosks, banks can help customers manage their money more securely outside of working hours. They can also offer private interactions with experts, regardless of where they're based. Systems integrators have the opportunity to build digital kiosk solutions that help banks achieve similar results in their own environments. Intel and its ecosystem partners help SIs to build kiosk solutions that are scalable, reliable, and engaging. Scalable solutions developed using the Intel distribution of OpenVINO toolkit can be deployed across any Intel platform to deliver scalable computer vision and AI capabilities. Reliable. With Intel vPro platforms, kiosks can be seen, set, managed, and recovered to ensure they perform their essential function. Touch, voice, and gesture control are also supported by Intel technology. Read our new infographic on improving services and increasing convenience with banking kiosks to learn more.
Thanks, Jet. I'm sure that we have a place for anyone that joining this event to go to our booth, right?
Yeah. So for everyone who have questions or would like to know more about SB and Intel solutions for your banks, Intel has session rooms and also a virtual booth you can visit anytime. Thank you, SB, for your presentation.
Thanks for listening and thanks for your time.
So up next, we have Mr. Anurag Srivastava. He is the General Manager for Asia Pacific and Japan for Vymo. Anurag will be discussing on moving beyond transaction to trust, transforming salespeople into trusted advisors.
All right, good afternoon. Hi, thanks, Jed. Thanks for having us. Very warm welcome and good afternoon to everyone in Digital Banking Asia 2020. It's definitely it's a big privilege being here. I've been hearing a lot of sessions from yesterday as well as today. A lot of discussions on digital initiatives being taken by banks. Just give me a second. I'm going to try and see if I can share my presentation. Jed, just let me know if you can see this.
Yes, we can see your presentation. Okay, perfect. Go ahead.
Awesome, great. So I'm going to take a bit of a 180-degree shift from where the previous session where we had a lot of discussions on customer and digital interactions and self-service and a lot of movement towards that. Now, needless to say, in the last 6-7 months, we have seen a huge upswing in just the digital activities, right? This was a report that was published yesterday by Bain and Google, and one of the things that we're witnessing is YTD monthly increase across every country that we work in, right? Which is an increase in mobile banking apps. Now, why? So I'll just take a bit of a step back and explain why banks and insurance companies are important to us. And we work with about 60 plus banks and insurance companies across Asia Pacific. We're a US headquartered company. So it's very important for us to track these kind of metrics as well, which help influence the customer experience as well as the internal employee experience for a lot of these customers. So needless to say, there is an increase in overall mobile banking application across various countries. Countries like Vietnam have seen an increase in 70+% in the usage of mobile banking and financial services apps. In addition to that, I think there is the same analysis also spoke about not just lending, because obviously lending, a lot of countries we saw loan moratoriums coming in. A lot of countries we saw collections having a huge impact, where people were worried about non-performing assets, overall DSOs to actually collect the money, and there was a lot of heavy emphasis on that. So purely from a line of business, apart from lending, we've seen a bunch of other insurance, investments, remittances, a sharp increase this year. A lot of them through digital channels, of course. And we will continue to see that, right? As customers have become more aware and more used to this new normal, this is how business is going to be conducted. And it's going to be important to be aligned with this kind of a digital new world that we live in. When you consider insurance, so banking was one aspect, but even when we consider insurance, we have seen general insurance, for example, has always been largely digital, but it's increasingly going to move to more digital channels. Selling online obviously is difficult for certain sectors like life insurance or even health, but there's going to be a huge increase based on this study and what even we are seeing in the markets in terms of growth. Partnerships between consumers, platforms, and insurances is also increasing. So there's short-term growth which has immediately happened. A lot of partnerships, affinity partnerships, e-commerce partnerships that are moving in this entire digital ecosystem, if you will, as well. So what's the future that we really need to embrace? I think this is the reality of it, right? All of us are living in a world that has large distributed teams. We have remote teams who we are all working with. We have remote partnerships that are being worked on. And more importantly, the customers have become remote. So in this kind of an environment, as a banking institution or just a financial institution, which is so used to managing things through a process and workflow, how are the sales playbooks and the endurance or the insurance to compliance, how is all that being managed in such a large distributed environment? So that's one of the big challenges that have come up in this immediate future, right? The second is, of course, how do we manage and the new entrants, right? The digital only competitors, the super apps, digital banking licenses being given to a lot of companies and consortiums in countries like Hong Kong, Korea, Singapore, Malaysia. And these are going to be very difficult to compete with because all of them are pushing towards reduced margins, and customer acquisition costs are still pretty high, especially if you consider partnerships, whether it's bank assurance partnerships or affinity partnerships, which are being looked at now. So the key then becomes, how do we unlock the productivity of the employees who are actually working and making sure that their customers are actually scaling properly. And the last part is, of course, trust, right? With products getting commoditized, distribution of teams, across geographies, relationship is something that we as a company, and even from what we hear from our customers, is not something that is going to die. Relationships between their banker and themselves. While people are willing to make, digital transactions and very specific user requests by digital means and self-service channels and drive-thrus and whatever the future has from an omni-channel point of view, the fact of the matter is trust and credibility of a banking institute or an insurance institute comes from its people. And that's really something that has seen a huge change as well in the last couple of months. So what are we seeing banks and insurance companies really manage, right? In the last, I mean, I remember in February or March when lockdown started happening in various countries, and it started happening in waves, right? What we immediately saw is huge dumps of revenues, quarterly earnings by various countries across various geographies. Sales productivities were hit. People were just sitting at home. No one was interfacing with customers. You couldn't blame them. And there was no way of understanding what are the key activities that people were doing, which were actually influencing revenues. Customers were not coming to branches. Customers were not meeting salespeople. So the immediate challenge became, how do we navigate the now? How do we make sure that we are able to take this bull by the horns and still continue work in this COVID climate? So a lot of the companies that we work with, they saw a 90% transition of their sales processes to remote selling, and digital interactions, although increased, there was always a physical plus digital requirement to have with the sales teams of the various insurance and banks that the customers were dealing with. So the immediate thing, the plan for recovery that we see across the markets has become more around integrated propositions, which allow personalization of hyper personalization, actually in some places, of their offerings to the various customers at various touch points, right? Which is all the omni-channel engagements that we've been hearing about the last 2 days. But what's the new normal going to be? The new normal is really going to be all about hybrid selling, right? The ability to manage virtually your customer engagements, but also have them seamlessly transact into a physical location. Will onboarding be completely digital? Maybe, maybe not. But the more likely scenario is going to be an assisted onboarding journey where salespeople would be in a position to manage customer relationships, build the trust, build the credibility, and then walk them through a digitally assisted channel for even things like onboarding, right? Bank branches, partnerships are going to really become very phygital as well, where digitization plus the physical world would get together and make sure that rapid revenue growth continues in some of these industries that we work in. Now, all this is great, right? And we've seen a lot of emphasis around customer experience. We've seen how customers are getting responsiveness, you're getting personalization, we're trying to help build the trust, right? But how are we doing the same thing when we look inwards, right? When banks and insurance companies are dealing with their salespeople who are now stuck remote, and they still have those administrative pressures of work to take care of. They still have to now understand the context with which they're dealing with customers. And most importantly, they still have to meet quotas, right? And all this while they're almost stuck with a lot of the legacy applications, whether it's core banking or CRM solutions or policy systems on the professional side. But while they're stuck at home, with one click, they're ordering in food from Amazon or Grab, and they're shopping online with Lazada, and they're using Gojek and all these super apps and hyper personalization tools on the personal side. So the new challenge, I guess, from a sales team's perspective becomes, how do you give the same experience that they're having on the personal side down to the professional side, while continuing to build the trust, credibility, and the momentum of sales with the customers who are being used. So that really lends us to believe that prescriptive intelligence is required across levels, whether it's salespeople who really need to be getting hyper contextualized information on what should they be doing today, who should they be talking to, why should they be talking to them, and getting reminders on doing that, to sales managers who need to be able to understand what are the sales teams doing, distributed sales teams who they haven't met in months, but they do daily huddles with. How do you follow up activities with that? How do you get real-time views on activities that the sales teams are doing, and are they on line to hitting their daily numbers, their weekly numbers, or their quarterly numbers, right? What kind of customer interactions are they having? And then, of course, the third and the most key persona, that of customers. With every interaction that is happening with customers through this phygital means, how are we capturing back the customer satisfaction and the next steps defined by that customer for follow-ups to make sure that they're getting suitably and responsibly managed. So what we believe is the ability for sales teams in all of these banks and insurance companies largely to transition from from being pure sales into trusted advisors, where they can be highly engaged with the various customers via the preferred channel, seamlessly move from interfacing on one particular channel down to another channel with the context actually moving through. They would need to get really empowered with data driven, right? If customers are doing deposits, or if certain customers are engaging in certain activities, can there be notifications or campaigns created specifically which help in nudging the sales teams or the respective sales people to know exactly what they need to offer to which customer at what point of time through which channel, right? And all that will lead to supercharged productivity as we look at it, where all of these workflows and intelligence all seamlessly gets together and making the sales teams productive. Now we look at this from a couple of perspectives. The first is the agents or the advisors or the relationship managers, right? All of them have goals, all of them have incentives, and all of those goals and incentives need to be tied down to key activities which they need to actually follow up on. So some of the learnings that we have had is having real-time feedback from the key activities that a salesperson is doing in terms of calls, in terms of meetings, in terms of online meetings, right? How is that actually relating to a funnel movement for all his sales opportunities, and the ability to actually manage and meet his goals and incentives for what he's actually chalked out, he or she's chalked out. And that's something that we had, as a company, our mission is to try and make it easy for these sales teams which are now distributed, which are now alone, but they still have to work and they still have to make their targets, right? And that's something that we have got as a company mission. The second is preemptive coaching for managers. How are we in a position to actually give managers enough data and enough real-time intervention capabilities so that they get a real-time view of every single activity that their salespeople are doing? They're able to figure out, based on that intelligence which is notified to them, when do they need to intervene, who do they need to coach, and what is the exact coaching that they need to give, so that attrition levels remain lower, people remain motivated, and there is enough engagement happening so that customers are equally happy. Because if there's an employee first approach, it's always easy to make sure that customers remain happy if your salespeople are happy. And the last bit is for the leaders, right? In today's day and age, as I mentioned, it's huge distributed teams. So how are sales leaders and even banks and insurance companies looking and analyzing what kind of what is the skill and the will levels of their sales teams, right? How many people are working really hard but for whatever reason are not getting the required results? What are the winning behaviors for a certain line of business? Is priority banking, there will be a different playbook for the sales teams, but from a government institutional sales teams could be very different. An asset team would be very different for retail lending, for example, to collections. All of these are playbooks that get defined, and the series of activities that happen there are you're able to kind of govern the kind of achievement for each of the salespeople. Because fundamentally, it's behaviors of the salespeople and the activities that they do that influence outcomes. So creating all this intelligence is something that we have actually seen a lot of companies influence very heavily how much revenue they're getting and how little their attrition is. So from a sales rep's perspective, for example, just managing their daily activities, they've been able to double their daily activities and increase the number of leads conversions, for example, in some of the use cases. For sales managers, by having the coaching capabilities with them, they've been able to see a decrease in turnaround time per activity, an increase in all the leads by 3x by just being able to coach and intervene their various sales teams. And there are many and more deployments and discussions that we have with our 60 plus enterprise banks and insurance companies. We are, of course, around as a company. As I mentioned, we are a US headquartered company. We're a Sequoia and Emergence Capital funded company. And this is what we do. We are here to try and make salespeople more productive so that they can do more for their customers and make sure that everyone is profitable and everyone's having fun. So that's it from me. We're going to be around. Of course, you can always reach us out at getvymo.com. My name's Anurag. I'm based in Singapore. Happy to hit out at anyone. I mean, Singapore's opened up quite a bit, so happy to catch up. Just drop us a line. Thank you.
Thank you, Anurag. That was a great discussion. So again, if you want to know more about Vymo solutions, and if you want to get in touch with Anurag and his team, Vymo has an available sessions room as well as a virtual booth you can visit. Right now, we're moving towards our lunch break. So at that time, our sessions room and expo as well as networking rooms are available for anyone to visit them. So see you again in the afternoon. We will officially start again the afternoon session at 1:40 p.m. So welcome back, everyone, to the afternoon session of the second day of the Digital Banking Online Event Asia 2020. So we'll start things off with the open banking track, The Future is Open, with the panel discussion titled Open Bank, Transforming Banking Channels for a Digital World. So we have 6 panelists for us today. The first one would be Mr. Patrick Lam, former CIO from HSBC. Mr. Jitendra Tekchandani, Head of Open Banking from DBS. Mr. It Chetrasorivong, Chief Technology Officer from Big Bank. Ms. Veronica Kuznetsova, Director of Innovation and Strategy from UBS. Mr. Arivuvel Ramu, Chief Technology Officer from Tonic Bank. And our moderator for today, Mr. Carlo Asuncion, Chief Economist from Union Bank of the Philippines. Over to you, Carlo.
Yes, thank you so much, Jed. And everyone, it is great to see everyone here well and healthy. And yeah, we're here to talk about open bank or open banking as it transforms banking channels. And it's a very appropriate topic at this point. So let's get it on right away with the discussion. So I'm gonna just throw out some questions, and please feel free to contribute to the discussions. No? So let me just jump off with this very broad question. In fact, no? What is open banking, and why does it matter?
So if I can jump in first, Carlo.
Yeah.
So I think before I answer this question, I just would like to go a little bit and look at the journey of the traditional banks and how they transform into the digital bank. So if you think about it, the journey of any bank, they started with a very traditional model where they have banks and they have employed RMs to talk to customers, and they were doing some transactions. So engagement was on a need basis. So it was not highly engaged interaction. And 20 years back, because of this digital technology and everything, banks transformed and they try to transform themselves as a digital bank, and they started creating digital channels, and they reach out to the customer through digital marketing, and the engagement went higher. But if you look at what is the commonality between the physical bank and the digital bank is where to come to them, whether physically or digitally. They wanted customers to open their app, or go to the branch and do the transaction. But because of this, after 2008 and 2009, there was a rise of these platform companies, the big platform companies, small fintech startups. And what they have done is they have found a successful business model to engage the customer in a very fast manner. They got the scalability, and they started building alternate products. So if you take the example of digital wallets, algo lending, or the robo advisor, so they started creating those, and they started a kind of a challenge of I'd say this imitation challenge, where they started imitating but with a slight changes and all those things. So if So choice of to the banks is, they continue towards, enhancing their own channels, whether it's a digital collaborate. So I believe the collaboration is the go-to model, and open banking is one of the ways to make that collaboration easy. So that's what, it kind of gives you a definition and why it is important for open banking. Yeah.
Hey, Carlos. Thanks for having me. Patrick here. I just want to add a few comments on top of Jitera. To me, open banking has been here for quite some time. So it's not something. I think why does it matter is the question that you asked earlier. So to me, in the traditional banks, a lot of different methods has been employed to share data. Some of which are like screen scraping, data sharing. They are not very practical and they're not very reliable in all sense, right? So the open up of the data through the API for all the banks, FIs, and other third parties to get data easily, more efficiently, and also at a high scale would be a great benefit to a lot of customers, including retail, SMEs, and you name it. So for all these customers, to me, open banking is the choice, and they will get a lot of benefits by having their data information available so that they could give consent to other third parties to do additional services. So the whole concept of open banking has started some time ago, but I see that over the last few years, it's been evolving, and also a lot of the customers are really appreciating. So to all customers, they'll get a whole lot of benefit through this approach. And I think this is why it's so important that we continue the evolution here and continue to support this sort of agenda with all the regulators, all the bank regulations. So that would be something I'd like to add to it.
I can't, if you can. I would like to add to Patrick and Jitendra what is explaining. Okay. I'm quite sometimes following the market. I'm known for one of the challenger for most of the legacy model here. The quick thing, this subject is not new. Number one, most of the banks we have data as a service, API as a service. Most of the people we have a middleware, we expose the data, we expose the API, but the business model more on with the known partner, because you have a mutual agreement between partners on a specific engagement and a specific transaction-based revenue model, you open up API. Now, because of EU framework came in, unfortunately, Southeast Asia, there is no open banking framework, no regulated entity. We have open APIs. In Philippines, we have opened a pilot market. There are 6 banks, including Tonk, has been registered now, along with BDO and Union Bank. We are getting into the pilot. So the regulation is not available. How safely we can exchange data without hitting each other, customer can benefitable. That is the big question, how to bring the governance. But why that governance required a simple thing. How I can provide seamless customer experience. The customer can own the data from different platforms. It can be ecosystem partner, where different lending companies are different, saving products from different digital footprints. Ecosystem partner, which Jitendra said, last couple of years they have come up with a new business model. How to bring them without hurting the bank profit, rather than which can be complement to each other business model, and exchange the data and see the revenue. The revenue may not be direct revenue, probably increasing customer base, selling more products. That governance model we are all working on now. But I think that is the one complement we need to talk about. At least Philippines is pioneer on this particular spectrum. We have kickstart already with at least these 6 banks agreed to share through one of the common consortium of exchange. So that will give you a good start to share at least the lending. If someone want to do some fintech companies or some banks want to do a lending, and one of the bank has some data around it. So we can now create a healthy competition around lending space once the market is stable. Thank you.
I guess the only thing I would add, these were great introductions on open banking. From my perspective, I think we're still just scratching the surface when we are thinking about how to commercialize open banking and how to come up with value add customer propositions and user journeys. And I've seen this from different sides. I guess now I'm at UBS, so I'm looking at it from more the incumbent bank's perspective, who are the ones that originally were almost forced by regulators to expose APIs to kind of participate in open banking. And also I've seen it before. I was at Grab Financial from almost an open platform native company's point of view, where, you know, they have pretty much existed and grown over time through this kind of open concept of, you know, open partnerships, collaboration with other tech firms, etc. So, you know, there's different players in the market that are approaching it in different ways, but I think there's a lot of opportunity going forward to obviously benefit the end users.
Oh, thank you for sharing. Just want to go back to Ramu about when you mentioned about the lack of regulation. How are the players dealing with that? And for those banks where regulation are actually, or players where regulation is actually present and actually is encouraging this open banking, how are you guys dealing with it, and what is the difference? Ramu? Yeah.
Very good question, Carlo. So if you look at it from, I'll start from the Singapore perspective. When you look at Singapore closely, they opened up open API framework from MAS guidelines. Like, you know, existing banks are following DBS and Standard Chartered. These guys are created their own API teams. That is where Jitendra is heading DBS as well. So there are open APIs, but the thing is it's limited to trial to a specific merchant, specific partners, because the business model, the monetization is the one of the key things. Second, how you can safely share the data, because most of the agenda, if you open up the data to, it should not be one-way beneficiable. Only fintech is benefiting it. So the fear of the bank, including me, even as a challenger bank, I'm going to now, yes, technological side, I have API platform ready. I have all the open APIs ready for starting from onboarding to transactions, but whom to share and how this data can be beneficial to bank as well as fintech. What is the revenue model can be created? There is no clarity. We are all working together. Number two, when you go to the central banks, for example, especially Philippines, bit, you know, ahead in the game, because they understand instead of writing a big book, let's do a trial. Let's learn it in the way. That is the BSP best way. So now they are opened up, understand the importance of open banking, understand how to share this data in a trial mode with only a certain group of banks to complement each other without hurting their ego and the profitability. So this is big convince. So you need to convince banks are sitting in $1 billion, right? I'm a new bank, but Union Bank and BDO are sitting on multi-billion balance sheet. Why someone need to open a data to a new bank like me? So that is the question. So as a central bank need to moderate and convince the people who is holding the big data, huge data set. They have to, because you need to convince, bring into the table and meet in the middle. Okay, you are not going to, your balance sheet not going to be hurt if you're opening the data. The customers are not going to jump into other books. So this is the first promise. Second promise on what is the revenue model? Because everybody today convinced. So I can open the data. I can take every customer from BDO or BPI. But what is the revenue model between the sourcing bank and the fintech and the middle layer who's providing the technology, the open APIs? Not only just each bank exposing, but there is a consortium which can create a simplified common rules, the common set of rules agreed by this consortium. So this is where the challenge today. We are all working together. What is the common consortium? What is the common standard API? What are the APIs can be exposed with the little risk? So it's a risk-based rollout and creating a commercial model which can benefit everybody. This is the challenge discussion going on and the pilot approach in process in Philippines. But other country is slow. For example, Hong Kong is doing something, Singapore is doing something, but it's all in a closed loop. Patrick can add it, but it's closed loop approach as of now. It is not really open, as we said. either a concern management or open data.
Yeah, I like what you said about risk
Yeah.
building trust eventually. So, DBS.
So I would like to add something
Okay, but
on that.
yes, go ahead.
Carlos.
Go
Yeah,
ahead.
so just to add on the Ramu's point. So I think if you think about the overall models of open banking across the world, in my view, there are three models. Okay, the number one model is which is a regulatory driven, where regulators are defining that okay, this is what you have to do, and you do that. So rule is same for everyone. The second model is basically the customer driven or the market driven. And if you look at the example in US, where as you have given the example that the screen scraping was happening, and bank have realized that this is not the efficient way to do that, so they were forced by the customer, by the market to open up the data. So that is the second model is the market of the customer driven. But third model, which is primarily available in Singapore or in other Southeast Asian countries, which is the organization-driven model, where organizations themselves thought about it that, okay, I have to open up, I have to do this experimentation. And with that, I mean, yes, we need a regulatory help, but, in Singapore, they didn't wait for, a regulator to tell them, okay, this is how you have to open up, and they themselves opened it up. The benefit of the last approach and the issue with the first approach, which is a regulatory driven, is where they're saying the rule is same for everyone. So in Hong Kong example, DBS has to open up the data for, first you have to open up the data for the product information, then you have to open up the data for the acquisition. But the real reason is my primary focus, or as a bank primary focus, is lending. The second focus is on payment. Acquisition and product information is not my focus. But because of the regulator, I have to spend that much of a money. So that is the reason I'm saying that when it's organization driven, I know what is my priorities, what is my strategy, and accordingly I will go about that. And that will also help me to add on Ramu's point, how to get a revenue out of that. So just to give you an example, in DBS, the strategy was that we have to grow our payments, we have to grow our lending. In Singapore, we are strong. In other markets, we need help. So we have focused on these two use cases. And if you think about it, we had a product called Pela, where the Pela was primarily app. But what we have done is we have created the APIs around it, and we have started distributing Pela as a product into third parties. So Gojek is one example, KFC another example, where customers can pay through Pela to these merchants. And that's where the revenue model is coming from. So if you think about it from the revenue model perspective or the future of open banking perspective, which I think Singapore is ahead of other countries, not only in Asia, but in other across the world. They have identified the different models. So number one is the model is we have to distribute our existing products and services. The second model is how to improve our existing products. For example, is we know that we have a lending product, but how we're underwriting our customers today using our existing data. But when we partner with some telco, like we have done it in Indonesia, our credit underwriting process gets improved and our overall product gets improved. And finally, the third stage, where I think still banks are finding a way to how to reach there, to create a new product and services, like the BBV example of BBV, where they've created a KYC as a service, which they are planning to monetize in the later phases. So yeah, so that's what I think three different models, and there is a clear path to get the revenue out of that.
We can have.
And if I could just add to that.
Okay, all right.
Sorry.
Go ahead.
Sorry, Carlos. Yeah, just want to add a couple more points from my point of view here. The way I look at open banking is a collective effort or collaboration between multiple parties, right? They would include banks, third parties, consumers, and other beneficiaries as well. But the key is in 2018, countries in European began to adopt to PSD2, right? And there has been a set of regulations designed, right, to open up the access to all the banking data for all the participants. I think it is very important that we understand from a revenue standpoint, it is clearly important for banks, for challenging banks, for everybody. But on the cost save, right, which is the potentially making processes more efficient, making data actually more easier to collect, they would also help a lot in terms of a cost save. And just a very indicative estimate, right? I think in 2018 and 19, just in UK alone, they expect the whole open banking could save up to £18 billion per year. So that sort of cost saving is a huge deal, right? From a regulator standpoint, from a bank standpoint, and also for, eventually it's all back to the consumer. Because think about it, right? If the bank can lower the fees, can save on all these things, they would definitely lower the fees for all the, mass retail customers and other, I guess, underserved customers, right? So to me, this whole thing, legal framework, governance, things for open banking will come to a kind of a divergence here, because ultimately, a lot of people will adopt some of these models that has been previously proven, and also will be a great deal to support, from Europe into Asia and also into other regions as well. So yes, I agree. I think Asia is definitely heading in the right direction, and in particular in Hong Kong, we have already, gone through phase 1 and phase 2, and phase 3, obviously, to Veronica's point of view earlier, we are talking about commercialization, et cetera, et cetera. So if we could work very closely with all these very key participants on the market, it would be just benefit to everybody, and the legal framework will come to some sort of consensus, if you will. And I think a lot of people are also working on the consortium, right? So that everybody will adopt the same sort of legal framework. And to me, it's probably like a SWIFT or something like a standard that will eventually become a standard globally. So we have to wait and see, but I think at least everybody's heading in the same and right direction. Yeah.
Yeah, but I mean, advanced countries really have that advantage. But maybe let's have Vong talk about what is the most important aspect to consider when moving into open banking platforms. I know that you are in Cambodia, and maybe it's good to share how's open banking been, at least, or the attempt at open banking in Cambodia.
Okay, thank you, Carol, for the question. That is a very good question, and for a Cambodian is for the some kind of digital technology and also the open banking, and it's quite new to Cambodia. And but we have a very good support from the central bank that we have launched. I mean, the new central bank just launched the new project called Bangko. Bangko is some kind of like a blockchain technology sit at the back where allow the from bank and also because a PSP is a payment service provider to join this platform, so that allow the bank to transfer from one bank to the other bank and from bank to wallets. And soon they will convert this to some kind of open banking to allow from one bank to the other bank can share the data and the balance. Let's say for the consumer benefit, one consumer can have account with 5 bank. So they will just log in into just one single app platform, so they can see their balance in 5 bank in the same app. So this kind of thing will be happening in Cambodia. Yeah. And many bank in Cambodia now is also go toward to focusing on the to a digital bank, because we believe that lending not just to take the deposit, and then we provide the high interest rate, like FD on the term deposit, but they are now focusing on the CASA, on the current and saving, which is the digital technology will be play in that role on that part to rather than we get the deposit and then but we pay the cheaper interest rate, something like that.
For sharing that, Vong. DBS has been one of the earliest adopters. I know you shared some, Jitendra, but could you share what you've learned on the journey of open data and innovation and implementation?
Yeah, I think we had a lot of learnings, and in fact, learnings. I was also associated with Citi when we launched open banking, and then to DBS. So I have few learnings which I would like to share. So I think, as you said, so we have started as as an organization, this was an organization initiative. In 2016, there was no regulation specifically in Asia that we have to open it. But at Citi and at DBS, we decided that we have to open it. So I think the number one thing was what use cases we should be building. Because regulators are telling that okay, you should build it, but if you think about it, where there is no regulatory guidelines, so how to decide that what are the use cases we want to build it. So that was the number one challenge which we faced. But then we figured it out that okay, how to solve that. So what we've done is we said okay, there are two ways. One way is find our strategic intent. Why we want to do an open banking journey. I mean, what is our success criteria to do that? And if a success criteria is to get more and more partners, make the life of merchants easier, then what kind of use cases they are using? So that that's how we have decided that okay, these are 2 or 3 areas we want to focus on. The second thing is what we have done is most importantly, early days every bank was claiming we have 100 APIs, we have 200 APIs, we have 300 APIs, and we were like quite feeling very proud about that. But the reality was number of APIs doesn't matter. What matters is what are the how many number of reusable use cases benefit to the partners. That matters. And in fact, what you have seen is out of those many APIs, so we have zeroed down. We are focused on 3 or 4 or maximum 10 use cases, which is really reusable and which is getting giving benefit to these merchants or to the partners. So I think I remember one of the example where what we've done is, as I said today, banks are very focused on how to create their own channels, how to create the products for our own thing. But when we are building the use cases, specifically using the APIs, initially what banks have done is they have just translated the existing use cases of digital bank or the mobile bank or internet bank and converted into APIs. But when you go to the partner and you say, okay, now you have to integrate with that, the partner journey is completely different from your own channel journey. I hope I'm not making it complex, but if you think about it, the payment, the acquisition, or the use case, what was built in Hong Kong, and what if you think about it, the existing bank's journey, we are doing because banks are doing the KYC and everything is on the app. So there are a lot of software, third-party solution which is tightly integrated within the app. But when you try to build that journey for the partner, obviously you cannot get those third-party components or all those things into the partner app. So that's the way the partner journey is completely different from your your channel journey. And the most important thing, I think, what we have learned is your business model. It's very important to find the right value proposition for each and every use case. So example is, if you're saying I have a use case for acquisition, but why any third party is going to acquire customer for you? So we have to find the right win-win situation for that use case may be useful for the aggregators whose job is to give you the leads and help you in acquisition, get the commission. Yeah, but those are 4, 5, 6 in each and every market. So you have to find the right value proposition for which is behind each and every use case. So yeah, these are 3 or 4 learnings about the ecosystem banking or open banking, I call it.
Thank you for sharing that, Jitendra. Security, and every time we're talking about third party, there's security or open data. How do you mitigate the risks surrounding security concerns in third-party partnerships? Anybody can chime in. Anybody can jump in and answer that question.
Maybe I can add on this part on the security on the with the third party. I mean the tokenizations that and we should impose on the on every API which is we exposed it, and there's the also the second factor authentication, and also the credential, the encryptions that that will be need to be exposed to the some kind of third party. When they consume, and then they will need to have a private key. This kind of thing will be need to be imposed.
Probably I can add it to Carlo. Sure. When I'm designing the challenger bank, the first in my mind was treating everything as the two big things. Bringing API management platform as a core. Most of the bank design, if you look at it, channel design, they put API gateway is behind. On top of it, they used to build channels. Rather than we started building our API management platform is a top layer, and all your digital engagement layer, your operations are behind, with the middleware protected. On top of middleware, your API management layer sits. So that give you a multi-tenancy, which create multiple developer, a kind of merchant. You create whether internal challenge, for example, your mobile banking or your chatbot, your Google Home, if they want to consume the API, this is the internal merchant tenant. And if it is external, for example, if you want to onboard payroll companies, if you want to onboard a digital lending companies, you create a different tenant, and you don't need to open up all your API to them. So that is what we created a API ecosystem through Google Abhichi and created a multi-tenancy model. With that, exposing only relevant API, number one, not everything exposed to everybody, which we have. That is the key, because that linked to a business model as well. What need to expose to whom instead of exposing everything to everybody. That's not the because that's something we need to regulate later. So number two, once you given the specific API through the tenant, you have first level security. You are giving a developer secret. Number two, you are giving us explained what tokenization on top of secret keys and transport layer security. This you ensure the transport layer is secured. You ensure the secret is only to that particular partner who you opened up. On top of it, OAuth is enabled to have a two-way handshake. And third level, you have application security you have enabled. Depends on whether this is a transactional API you're opening up or a payment API you're opening up, lending or onboarding APIs or eKYC APIs. It depends on that level of APIs. You put the different application security in place, different validations in place. That give you a comfort zone, of course, with the proper throttle, because the biggest, when you're opening the APIs, the DDoS attacks and other things will come into the surface. So you need to have a proper throttle in place. Whether if I am opening to Grab expected 10 million customer base, and that means 10 million apps can able to talk to me any point of time. So I need to have a different throttle, different security in place to tackle that. But if there is a small fintech company comes in, I have ready for what to be opened up with, what level of throttle to them, so that we know exactly what kind of traffic we are open to them, so that how we can protect our infrastructure and protect the data theft. Because the most of the things we are trying to do is our infrastructure is not down or our data is not theft by unidentified sources when we are opening up through open APIs. This is where you put the cybersecurity around APIs, because on top of your API management, you need to put another layer for your, for example, in AWS today we have WAF and advanced shield protections, which will help you to protect a lot of this kind of attacks. Thank you.
Yeah, Carl, I'm no expert in cybersecurity, but my 2 cents are the following, right? So if you look at the security point of view, it's already there. Or despite open banking or other traditional banking, it's always been a hot topic for every one of us working in the advice or financial service industry or any other industries. The key is about open technology to me, right? Because obviously, as technology advances, a lot of these problems can be protected more securely. Let me give you an example. So in the very old days, right, we were talking about 16-bit of encryption. Most recently, 64-bit of encryption. And probably the most advanced one is 128-bit of encryption. The higher the bit, right, the more difficult for these people to break, and it would take much longer time for them to, or I should say, hackers, to kind of get access to the information. So it makes them very, very difficult, right, to kind of like steal the data or kind of open up the vulnerabilities here. So with the advance of technology, like I say, the upcoming ones about all the quantum computer, right? So we know that when this thing comes, it will not be just a bits and bytes, right? It will be not zeros and ones. It will be a lot more sophisticated, a lot more advanced, and this making all these hackers or all these other fraudulent people much more difficult to steal the data. And I think we should embrace and continue to do that, leveraging the we have today and making sure that open banking follows the latest and the greatest, like the DLT or the blockchain, to ensure whether it's tokenization or at the level that the people just described here, will be much more proof. Because otherwise, if we rely on just a legal framework or any other thing, that's great. But technology is kind of like the key enabler in my own sense. Maybe I'm just a technologist here. So I feel like the technology will be able to, kind of like protect, this area. But after all, right, I think we have to have a very proper legal and compliance framework around our third parties, our partners, that we have to all get a consent, because otherwise the accountability and the liability of managing or owning the data will become a very what we call challenging questions among different parties. So two things. One is technology will help, stuff like technology protecting the data, but also working very closely with partners and collaborations with all the regulators to kind of like gear up the legal framework. Because at the end of the day, no customers want to see any of their data being exposed without their consent. So we have the obligation and the responsibility to protect them at all costs. So hope to share just a little bit on from my side.
Yeah. So yeah, it's very, because it's open. We have to talk about security. Going to the benefit to consumers and how this new age of open data economy. So what do you see, or what do you foresee are the trends in the customer experience landscape? I see that also in our experience. But in your institutions, what do you see are the trends that are coming out of these CX, as they say, landscape?
I guess I could take the first stab at this. So from my perspective, it's very exciting to look at the technology, but also to find out, what are the benefits for the end user and what do these journeys look like. So, in my world, it's more focused not so much on the transactional aspects of it and payments and all that, but more on wealth management, for example. So, we are exploring and discovering more use cases of open banking with relations to savings and investments, for example, or, allowing our customers to manage their pensions or do their tax reporting. So essentially, this is ways to experiment for us to create a more of an end-to-end journey for customers, where we can really wrap other providers' products and services into our own interactions with our own customers. So that's one. And the other aspect that I find very interesting is also, looking at the upskilling as well of the internal talent. So, we both do pilots with external companies and fintechs and providers to kind of find this way to integrate the overall finance experience in the journey of the consumer in their wider day-to-day lives, as opposed to the lens that typically incumbent banks take, where they put themselves in the center and then they try to kind of figure out ways to attract their consumers to their pre-existing architecture that's usually product focused and channel focused. So it's more turning it around and making it consumer centric. And for that reason, we also, other than experiment with open banking solutions, what we also do is we try to invest in open banking platforms and solutions as well, to just really explore opportunities for knowledge transfer and learning opportunities for us, where we can essentially take the stance that if we are not fast enough and we can't figure out how to harness this growth, then as well we can do that by directly investing in other companies who have figured that out. So, a decentralized finance is a great example. As an incumbent bank, we probably won't be the first movers in that, but, we could learn a lot from it. So it's very exciting for us.
Probably I can jump in, Carlo, to add it. So when I look at Philippines journey for Tonk, the number one idea was user experience, how to, give a different experience or the better experience than the current bank what it's currently doing. So we did the comparison. We try to address one by one where to help. That is where the open APIs, not only from us, from multiple partners required. Number one, we looked at it initially. Everybody was asking saving behavior and spending behavior. Okay, I can in my app, I can put saving behavior, spending behavior of the customer who transact in my account. But is it going to add a value to the people? No, not much, because he's going to do card he's going to withdraw money from ATM. He's going to have a secondary or primary account with some other bank. He's doing some e-commerce transactions. He's doing some cash purchase. You need to bring all the app and show a one account aggregated view to showing, hey, this is your behavior. Do you want to create a goal? Do you want to put a goal for saving? Do you want to put a goal for spending, to control? Or do you want to, those kind of educating customer, helping them to save, that aspect need to come through account aggregation use cases, which we thought one. Second, when we look at a lending portfolio itself, today direct lending is, if you look at most of the underbanked or financial inclusion segment, the lending is going through unauthorized channel more than 70%. Most of the bankers knows it, and we couldn't able to kick out that formula. Example, a customer can go and give a debit card to the 656. You might understand if I say 56. The money lenders, give the debit card and getting the money. That even though it is illegal, that trust he is keeping it in the 56. He don't have it in a bank. So how to crack that logic into the bank? Plugging in. You can be a BDO customer. You can be a Union Bank customer. I can take your debit card. There is a technology to link today to how I can authorize your debit card and how I can monthly basis take your EMI from your different bank account. And I can give you the same experience which the money lender giving, with instead of 120% APR, I can do it in 50 to 60% APR. I can still meet the target. And I can give the better experience for giving a payday loan. Giving a buy now, pay later option. You can be a Grab, you can be any e-commerce payment platform. And how the bank can complement their scheme cards, which can be linked, and I can do underwriting and let the cash can be, the transaction can be done in the particular e-commerce transaction through the APIs. The last thing is, we are not, most of the people knows at this current situation, payment is picking up well, and every banks we are struggling for customer acquisition. The only channel where we looked at it, how to open up the API to the digital ecosystem partner, mainly for different payroll companies, different digital lenders today. They don't have money. There are a lot of customers sitting in different wallet system today, but they don't have money to lend, and their app can be sell our lending products. That means customer acquisition can be done there, and underwriting and loan books, loan authorization done by in our bank side. So if I want to sell that kind of cross products with a better profit margin, this is the customer going to see it. He can be a Grab customer, he still get a loan, but the loan is backed by Tonk. Example. That is the kind of experience you can build it if the open APIs allow, if the two organizations work together. This is the approach we took it.
Yeah, I've led couple like sorry.
No, go ahead.
I was going to say, yeah, I have led a couple hackathons, trying to facilitate to get customer experience from different groups of consumers, if you will. The best one I just want to share are the ones from the school kids. All right. The reason being is that a lot of the incumbent consumers already have a preset definition as to what the journeys are, what the experiences are. And I think what we have to do is, in order to, get these, innovative ideas or new ideas, we have to also enclose some of these other, non-bank customers as to how they think the journey should look like. And sometimes we just have to, get those things and incorporate them, because like what? going forward, right? I mean, as a millennial, as a teenager, they will become our potential customers, if you will, right? And they will also have a ways of working, a ways of living on their own, and they know exactly what they want to do. So to serve these customers in the future, we have to also encapsulate some of these different ideas. And better yet, if we could get ideas from all over the world, right? I think I got a lot from the UK, from the PSD2 experience, incorporate them some into Asia. Not everything will fit into the bill, definitely, but I think in the different landscape, especially in Asia, be that Hong Kong or Singapore or Philippines, we have a lot to do, and we still have a lot to do. The reason is actually we don't have a standard yet, and a lot of things are still very open to, I guess, different ideas and suggestions. So I think, somebody mentioned earlier, it's the very beginning of this open banking journey, although we've been here for quite some years now. To me, it's continued to be journey, and we will see a lot of these different, outside the box ideas coming to us very imminently. So we just have to gear up, whether we are challenging banks or incumbent banks. So that's something I like to share.
I don't know if I can still throw in this last question. Almost, I think, 2:25, but I'll throw it anyway. It's about culture, cultural transformation. What needs to take place? What type of what cultural transformation needs to take place in order to unlock the full potential of open banking economy? Because we have seen this in our own experience. I came in the bank 2016. And I've seen the culture change somehow in the bank, and how people have been thinking, how people have been looking at stuff. So from your end, what do you guys think? What are the things that come to your mind about cultural transformation that needs to happen?
So if I can jump in on this cultural part, see, if we treat this as a kind of a technology initiative, then people may think that culture doesn't play a big part. But I think, according to me, open banking is a platform banking, and it has 6 parts. The number 1 part is the whole technology piece, where we have the APIs, APIM, API management, security, and everything. Then the second thing is the governance. Third is operations. Fourth is your overall team, and fifth is your we can say the business model or the partnership, and finally the 6th block, which comes as a culture. And I think culture, if you think about it, it's like a choice which any organization make to transform themselves. And why we believe that this cultural shift is required for open banking the way it required for digital banking, because if you think about it, so far, specifically the consumer bank, it was like a 2-dimensional relationship with the customers. So banks were directly dealing with the customers. Okay, bank is producing the product, sending it to the customer, they're servicing them through digital channels and everything. But now open banking, now there is a 3rd dimension which is coming, which is a partner. So now some of our products are getting distributed through these partners. Our customers are getting served through these partners. So then you think about it, how your platform should behave, how your governance should behave, how your operations. So classic example of operation is, so far, as I said, we are directly serving to our customers. If customer faces a problem, he, logs the request to us, or he calls our, the contact center, we log the request and do that. But when we are serving through partner, are we expecting the same thing? No. Then in this case, he might be calling to the partner, and there should be a channel to the partner. Similarly, Patrick, you highlighted about the legal framework, the contractual framework, fraud. That thing has to be thought through, and for that, all the stakeholders who are responsible for that, they have to think about it. Is going to be changed. So the internal education, internal awareness is also important. And the most important thing is, from the classic product management perspective, in the last 15 years, banks have worked very, very hard, thinking about customer experience, thinking about product management. And today, our product managers, specifically, think about the wealth management in Veronica's case, or in payments, all our product manager thinking about two dimensions of any product. One is the physical dimension, the other one is the digital dimension. But with open banking, we have to think about the third dimension, which is the partnership dimension. When we are building the product, is it only going to be served through our channels, or we are building the product which is future ready to be served through partner? And that's where I think the culture plays a very, very important role to stitch all these things, 6 things together.
Anybody else want to chime in? Maybe Veronica, you want to chime in on how culture?
No, I think it's pretty much what I said before as well. We just need to, as an incumbent bank, people need to shift the thinking, the thought process, similar to what Jitendra just mentioned, from the bank being central to the relationship with the consumer, to the consumer being central and us kind of plugging into the most relevant part of their day-to-day journey in their life, and as a consumer, what they buy outside. Maybe they're on an e-commerce platform, maybe they're ordering a Grab taxi, and at that point, they might need to make a financial transaction, as opposed to waking up in the morning and thinking, oh, I really want to do a transfer from my bank. So I think that's the major challenge, and this kind of collaborative partnership model as well is native to these challenger banks, because that's the way they grow, but it's not native to the incumbent bank. So it's a very interesting transition going from one to the other.
All right, I think that should be it. And I know that there are a lot of other stuff that we can talk about. I still have a lot of questions, but I'll leave it here. And I would like to thank everybody who tuned in, and was a great discussion. Thank you so much.
Thank you for having us. Thank you.
Thank you for having us.
So welcome back, everyone, to the main stage. Right now, our next speaker will be Mr. Ajay Biyani. He is the Managing Director for ASEAN from ForgeRock. Ajay will discuss more on open banking and new ideas for business.
Okay, thank you so much. So again, good afternoon to everybody. Pleasure to be here. My name is Ajay Biyani, Managing Director ASEAN here at ForgeRock. I'm here to talk about open banking inspired business ideas. Now, I'm sure you guys have heard the word open banking, but again, I'm trying to bring in a different element from our learnings, working with close to 150 global banks and regional banks, and how they're basically applying open banking to new business ideas. Now, feel free to scan the QR code to connect with me, over LinkedIn or through email. I'll share the QR code towards the end as well for you to connect with me. All right. So without further ado, let me get into the topic. As I was saying, right, open banking is not new to us. It's been there for, I think, 4 or 5 years now. We have been talking about the topic. It started from UK as an open banking term, and now in Australia, it's called CDR, Consumer Data Rights. And again, in Hong Kong, they called it Hong Kong Open API Framework, which is live now. They're inching towards the third phase, where you have to essentially, start exposing transactional information if you're an established bank through the APIs. And then again, you can see this is a global phenomenon now. So this is now not new anymore. It's taking shape as a global, requirement by different financial industry regulators. Now, why is this important? So again, the standard has evolved, the requirements has evolved, and essentially every country has little bit, different variant of the open banking that started from UK. We at ForgeRock have been helping a lot of businesses globally, especially in banking sector and financial sector, right? So close to 150 banks, and from them, we have learned a lot of good things. And this is what this presentation is all about, right? What are those good things, and what are these ideas around open banking and the challenge and opportunity? Now, if you can, imagine a couple of years back, open banking for established bank was initially pursued as a challenge because they had to open their data to the public, to fintechs and whatnot. And again, the bigger question they had in front of themselves was, why should they share information? Yes, it's a law, it's a legislation thing, but it appeared to be a challenge at the start, right? But again, as they say, every challenge is an opportunity, either to build something new or to basically enhance something you've already built, right? And that's where the opportunity came about. So we have this perspective that open banking is no more a challenge. It is an opportunity for everyone, including established banks who have to expose their data or details by means of open APIs. as part of the standards. Now, who's doing it? There are a lot of good banks out there. From an example standpoint, we know regional, well-established global banks. This is like some BBSs, Standard Chartered, ANZs of the world, or these are digital-only banks or virtual-only banks like Mox Bank in Hong Kong, who got recently launched, right, and has been basically API savvy from day one, right? They have been building standard-based integration, standard-based interfaces, and are adhering to Hong Kong Open API framework, from day one, because that's the regulation for them. But they have adopted this as an opportunity, right? Another point of view around open banking as a topic is it just another channel, right? Because as we have worked with a lot of banks, what we realized is there are a few ways to look at open banking. One is it could be an additional channel that gets exposed because now the third parties or end customers could be leveraging these APIs to ask for information, which could be anywhere, from different functional layer within a bank. Could be at a services process layer, could be at the bank back office layer, or could be coming in from the data storage, right, itself. So is this just a channel? Initially, that was the interpretation. But again, over a period of last 2 to 3 years, what we have realized is, and I'm going to share some very good examples of how people have leveraged open banking to essentially build an ecosystem, leverage fintech partnerships to expose certain data points for fintechs to consume, but at the same time build that ecosystem to essentially go about their business and enhance their business from a customer experience standpoint, from an omni-channel presence standpoint. What they've also done is basically expose public APIs. So this whole B2B2C API ecosystem has embraced open banking as not just as a channel, but also as an opportunity to build an ecosystem with different players. Could be from fintech insurance companies, medical tech companies, and so on and so forth, right? So this is not just another channel. We have gone past that phrase. We are basically now looking at better and more extended leverage of open banking as a standard across the globe, as well as new ecosystem building block, right? Now, the pain point still remains, right? So if we looked at well-established bank, their pain points were there around scale, performance, how they basically quickly turn around and bring things faster to the market. Obviously, security, privacy, and consent was always a challenge. It's still a challenge, and people are trying to solve this by leveraging technology or different ways of looking at the privacy and consent management standard. And again, with open banking, it became all the more prominent that deployment option to host things on premise or cloud or basically hybrid, and leveraging CI/CD kind of approach to integrate systems and deploy systems and quickly turn around functionality while keeping the modernized and future-proof IAM investments remained the pain points across the industries and very much prominent in banking. So it basically just continued the same trend. And I think that's where what we realized is we can make a difference, and we have made a difference, right? By once allowing the open banking and fintech partnership and those new API as an ecosystem channel to integrate with different systems while providing the personalized omni-channel frictionless customer experience by integrating at each and every layer of a functional bank, right? Could be at the channel level, at the services and process layer around eKYC, anti-money laundering checks, or with the banking back office systems, which is the mainframes, the core banking, and the card systems, right? As well as integrating with the data lakes and AI/ML systems that the banks would have invested or are about to invest into. So we essentially took a platform approach to basically provide personalized omni-channel frictionless customer experience by integrating with the channel side of the things to have a customer who's happy and feels privileged when they interact with the brand, as well as interacting with LOBs and different downstream systems and services and processes to provide a holistic view. While doing so is where we recognize most of the new opportunities that banks are basically leveraging as part of open banking. One of the essential usage of digital identity, in our opinion, around revenue generation is open banking based services. Apart from the opportunity to do cross-sell, upsell by better understanding your customer, having a 360-degree view, or providing API-based services and new age identity-based services around identity relationship management and user-managed access, right? But we felt the open banking-based services are sitting exactly at the center of that revenue generation opportunity for the existing banks as well as for the new banks, right? To start with sharing some of those ideas, first and the biggest implementation that in my experience has been at Capital One, right? They have been open about APIs for good 5 to 6 years now. They launched Capital One Developer Exchange program, under which you can go online and sign up as a developer or as a fintech company, and they can leverage the API products they call from Capital One. And again, this was well before open banking even was termed as open banking, right? Capital One thought ahead, so, launched API products like, Verify with Capital One. So Capital One already has a customer base of millions of users who have been onboarded with the bank, gets KYC'd every quarter, every month, every year, depending on the transaction that they do, right? So they opened up an API product, which is simple API integration over REST API based systems, so that fintechs or third parties who would like to onboard users with confidence can make an API transaction with Capital One. Again, Capital One can charge them on the basis of transactional model, data model, or per call model, or a subscription model. That's monetization side of the equation. But Capital One managed to expose an API which fintechs can leverage to essentially onboard customers with confidence without making a huge technology investment, or without reinventing the wheel of re-KYCing the customer, holding the information, again conducting re-KYC from time to time, right? One very important product and very successful product. The other is around, signing up and signing side of the equation. So, as a fintech or as a new company who wants to leverage the API ecosystem around open banking, why would you want to build everything from scratch, right? You would want to have collaboration. And this is where, likes of Capital One and ABS and ANZ have set the trend, right? They are building collaborative ecosystem model where these API products are coming out pretty much on a daily basis, which, the end user or third parties or fintech companies can integrate with to essentially cut short the time to market, monetize the existing data that the bank has, and basically also help the fintechs, quickly get to the market with new products and services. So again, a new revenue stream, a new way of basically leveraging the data that the bank has while providing seamless experience for the actual customer through the third parties as part of the open banking ecosystem, right? So one example of that. Another very good example that we are seeing, tremendously rolled out in the markets that we operate with those large banks and new banks is around family banking, right? Connecting the relationships. And again, giving an opportunity for the end customer to open new accounts by the means of a single click, where you can open an account for your child can, maintain that account and use that account to, pay for the canteen bills when they visit the canteen, etc., using a wearable device which is connected back to the main account holder. And as they become, adult and certain age criteria is met, they have access to their own system, right? This is called identity relationship based, banking, essentially, rolling out a family banking approach to the end customer. Again, very heavy on open APIs, allows third parties to essentially give the end customer a complete view of what relationship they have with the bank, whereas they can open accounts, in a single click by leveraging things like identity relationship management. Now, this is a value-added service offered by some of our banking customers, but again, is a new revenue stream for them to offer this value-added service. Another good example that we have seen in the market is around leveraging a new standard called user managed access in conjunction with open banking, right? Again, this is a value-added service where you could have, third parties like, tax filing companies who act as a data aggregator, connect with different, providers, could be financial, could be educational, could be, IoT kind of providers, or could be, health services provider, and provide a secured sharing kind of element, leveraging user managed access as a standard, which essentially allows as an end customer me delegate my access to the chartered accountant to file tax on my behalf. And this is all integrated using open APIs and following standards like user managed access. Now, benefit for me, I don't need to share any paperwork. I do not need to share my credential. And at the same time, the end user is able to delegate authority for a stipulated amount of time with the specific scopes, so that my CA only sees the required personal information that he needs for filing my tax, as well as leverages, the financial transactional information and investment information that he or she needs to file my tax. And once that is used, they don't need to destroy it. I can automatically, time bound it, and the access is revoked without, my request for them to shred the documents, or, I have to reset my password because they might be reusing the password right behind my back. So that kind of secure sharing element are offered as a value-added service. One very good example of data aggregation, especially in UK, is around pension, right? Where pension data points from different pension service providers is getting aggregated as part of the open API framework, leveraging standards like user managed access, which allows the pension aggregator, in this case called Origo, to aggregate data from different pension providers, and as an end user or as a pensionee, I can define what I want to do with that pension fund, what is the 360-degree view of that data, whether I want to invest with another identity provider, pension provider, or whether I'm getting the best value for my savings, right? Those kind of value-added services are being offered as a new revenue stream for banking and third-party providers, primarily because they are in a position, because they hold pension information, they hold investment information and transactional information about the end user. And fintechs are basically, providing this as a service, as a value-added service for their end customers for a specified fees by following standards. So very attractive offering for an end customer if I was to, delegate my access for certain things. Now, these are just a few examples, and in the interest of time, I wanted to take the top 3 examples that we see are very much, famous in the market at the moment. But there are many such examples that can be, talked through in the session as a follow-up if you would like to connect with me. But the bigger point I wanted to highlight is how is this all possible with the help from ForgeRock, right? That's where I wanted to quickly spend a few minutes around what do we provide as a software provider in the market or as a service provider in the market. What we provide is an identity platform, which is the only single unified platform in the market, which can take care of any kind of identity and access management use cases for user devices and things. Whether you are integrating your customer's identity, whether you're integrating your devices and things identity, or whether it is for your workforce, you can use the same platform for all sorts of use cases. Also, it provides your ability to extend the integration with our trust network, which allows you to integrate with 80 plus different third-party providers and integrate with 100 plus inputs from different identity orchestration and dynamic access decision-making points, leveraging, customer journey approach, while providing all sorts of new age, security architectural requirements around zero trust, SDKs, APIs, and microservices security, as well as integrate with your downstream systems, providing and syncing information. This is the likes of SIEM, CRMs, and ERPs to keep the data up to date, dynamically update as and when the event takes place, as well as make sure that they are in sync while providing an omni-channel experience to your end customers. The same platform can be deployed on-premise in a hybrid environment with our identity cloud service, or purely in a public cloud or a private cloud setup, because we are DevOps ready since last 5 years. We have pretty much DevOps ready artifacts for any and every public cloud providers like AWS, Azure, GCP, Ali Cloud, etc. As well as we are ready with artifacts for OpenShift kind of deployment models as part of the DevOps deployment approach that most of the FSI customers of ours are leveraging now to control the infrastructure cost as well as quick time to market. One more important point I wanted to highlight was around the trust network. Right now, we understand as a banking institution or as a financial services institution, you would have made investment into one or the other technology, or you would want to use the best in the class technologies out there in the market. And that's where we built something called as trust network. So with our customer journey approach, intelligent access trees, you can integrate with trust network providers out of the box. This is likes of Dayons, Jumios, on FIDOs of the world, where you can integrate for multi-factor authentication, eKYC, or strong authentication as part of the transactions. And again, this is a drag and drop kind of interface. And again, quick time to market in terms of out of the box functionality without the customers or prospect, requiring to redevelop the whole integration pattern. And again, if you change your mind and if you invest into another technology, you don't need to recode everything. You just need to drag and drop the node and rewire it, and you're done with it, right? Again, very much leveraged by likes of ANZ Bank, who are our biggest customers for a long time and have been leveraging our platform to provide these kind of value-added services and advanced, identity and access management experience to their end customers. Lastly, I wanted to quickly summarize with the value that we create for our customers, right? So it's not just about reducing cost. We do that by reducing the cost in terms of infrastructure and other security elements that you require, around 70 to 80%. Not just about reducing risk, by improving compliance, by reducing the threat surface area, as well as providing, a sustainable dynamic environment where you can, be assured that you are protecting your end customers end to end, and not just, point by point, channel by channel. As well as time to market, right? Where we can be up and running in days and weeks, right? And with the identity cloud in minutes, instead of, months and years, which requires higher amount of time to get return on investment. Your ability to go faster to the market with a platform like ForgeRock is now, enhanced. But I think the biggest and the most important thing is our ability to help our customers generate revenue. And we have seen results in the range of 5 to 10%, depending on the size of the bank and then the type of integration patterns that we implement based on the customer journey approach. But if we integrate all your channels with all your downstream systems, we are able to see revenue generation possibilities. Few of those examples I shared in this presentation, but there are many such more examples where we are helping our customers to generate revenue and make the most out of the platform, right? With that, what I wanted to do was I want to open it up for Q&A. I'm not sure if we have any questions at the moment. Do we any?
Currently, AJ, there are no questions from our viewers. However, if you want to reach out to AJ and have any questions for AJ and ForgeRock, ForgeRock has an open sessions room available. You can enter now, and they also have an expo. They're showcasing their solutions and how their solutions can help you.
Yeah. Otherwise, you can scan the QR code, connect with me, and reach out to me directly if you would like to any specific questions. Once again, thank you so much for the opportunity to be here and present with you, share our point of view, and share some learnings that we have, with those global and local customers that we have in the region. Thank you so much for your time and opportunity. Cheers.
Thank you for your time and insightful discussion as well, AJ.
Cheers. Bye.
So right now, we are now moving to the data and AI-driven innovations track. To open it up, we have a panel discussion titled "How Will Data Reshape the Future of Banking Post the Pandemic?" Our panelist for today is Mr. Anubhav Sahin. Anubhav is the Chief Data Officer for Asia Pacific Corporate and Investment Banking at Natixis. Mr. Sainbileg Mandak, he is the CIO from Golomp Bank. Mr. Alex Go. Alex is the Senior Vice President from AmBank Group, and our moderator for today's panel, Mr. Sachin Tonk, Director, Data and Privacy Operations for Standard Chartered Bank.
Fantastic. Okay, so we can quickly start. So I think the very interesting topic, how the data reshape the future of banking. I think the data will not only reshape the future of banking, I think it's going to reshape the future of the world. Data is very important, and data is the new oil. So I think thanks for the quick intro, Jed, and I think let's quickly start with our discussion. And so basically, data is the new oil, and this is a kind of common statement which we hear, and it's not. So I think it's very important that we get the perspective of our all our panelists. So maybe Saina, I can start with you. What do you think about the statement, data is the new oil?
Okay, thank you very much. I'm happy to be in here to share my thoughts about the data and data-related things in here. So as you said, it's very important to say that the data is all. I would like to highlight in here, data is all, which is regenerate itself next time, which is the every time when we including the data and collecting the data, it's getting more powerful and it's getting more broad. So in that case, it's like not the same as the oil that we use for the petroleum, because that petroleum used oil is like it's finished and like the mining again. But for the data, it's like generating itself by itself and making every time it's bigger and stronger. So in that perspective, like it's very powerful, the tool for the business, especially for the business and especially for the lifestyle, even for the consumer usage. So that's my point.
No, thank you. Very well said. So I think data is the new oil is as accepted by everybody. And due to the COVID and the pandemic situation, every business is trying to reinvent its business model. And data is the most important thing, how we can drive this. So I think data is the new oil is definitely a way forward to go about it. So I think one interesting point which I wanted to share here based on the data is the new oil. And maybe Sana, you can actually help getting your perspective, how you guys are using the data in your area or on your so that to reshaping your business model, creating new opportunities, identifying what new potentials can be done. So how do you feel about it?
I'd like to express inform in here about what happened the last like 9 months, which is the COVID situation in Mongolia. So in Mongolia, we have like from the February, we lock down all the borders, and also in here currently we're using the like some kind of the restriction in terms of the business, in terms of the all the like education, all the sector. So for this case, like every company is trying to do their business by the online, which is like doing the digital transformation. But in terms of the whether we are prepared or not, it seems like the almost 80% of the companies not prepared for this one. But there are companies in here, especially like the corporate companies, because corporate companies has like the data governance policy, and also the data governance policy related procedures and the systems. So those companies are like having like very nice like pilot testing for every kind of the services, like the online services. And of course, those online services and systems, they collected data, which makes us to do the other things. And I would like to share in here the example. But this example is like there were the case that it's very difficult to people or the customer come to the banking branch, but we need to provide the seamless the payment or the banking service to there. So we are collecting the data from the many kind of the channels, the internet banking, mobile banking, even for the call center. Call center is trying to getting the data, which is of course it will be handled by the digitization, which is the converting the data into the digital form. So these kind of the possibilities brought us in banking sector possibility to compete or to cooperate like fintech companies, because we have the many data in here, and also the fintech companies they have also their own data. So the sharing those data based on the policy that we are following from the government, it creates us the very good opportunity to reduce the cost, especially to like acquisition of the customer, also the providing the loan or the saving products to the customer.
Fantastic. So I think very well said. So I think we have been joined by Anu. Anu, hi, how are you? So I think let me put you on spot straight away. I will not give you much of breathing space because you got late. No, and our listeners wants to
I was
listen from
struggling
you.
with the connectivity issue. Thanks for bringing me in. Cheers.
No, yeah, thanks. So okay, so basically, I already got the perspective of Sana on data is the new oil, right?
Right.
And I know you've been on a very strategic kind of position as well as driving a lot of data initiatives and all those things, right? So I would like to understand from you how your organization, what is your perspective, and what is your view on the statement data is the new oil.
Sure. I mean, see, indeed, data is a strategic asset, and nowadays, what we are starting to realize is that for any organization, be it you're in the business of selling handbags or financial products, data is one of the most important assets that you might have. That being said, it also comes with a caveat. Then, essentially, in order to be competitive, you need to get value out of this asset. And how do you do that? Essentially, when it comes to data, it means you translate data into actionable business insights, which means you have to have the right the technology, you have to have the right models in place which can deliver values in a consistent, transparent way. And you need to invest in it. You need to invest people. You need to invest the right solutioning in order to make sure that the solutions that you offer, they're not just one-off, but also are can be productionalized easily. What I mean is the same solution, which might be very useful for a small problem for a specific use case, might be much more difficult when you want to implement it, cutting across geographies, cutting across product lines. So that's where I think Natixis is quite taking this, I would say, the change in the landscape very seriously, and we indeed are starting to look at data as one of our most important assets, and accordingly arrange not just investment of capital, but also align our working style in a way so that we can make the most out of this change.
Sure, thanks for that insight. So Anu, I think I'm straight away I'll come to you as one of my clarification or second follow-up question is that can you enlighten the users that what kind of technologies banks and financial institutes are using nowadays, especially to achieve the same level of user experience without compromising on the social distancing, because everything has gone to virtual. And but at the same time, I'll give you an example of my bank, Standard Chartered. I'm running a global program from data and privacy perspective. I was discussing on few weeks back, relationship managers were saying that we used to be in the field and we used to meet clients, and we used to have that kind of personal touch. Now everything is virtual. We do into video calls and conferencing and all those things, right? But the personal touch has been kind of lost. So the relationship manager asked that can technology allow us to come as close to a personal touch, sitting at my home, and can I deliver the same kind of personal experience to my client? So can you share that what kind of technologies banks and financial institutes can leverage to bridge that gap?
Sure. See, I do strongly believe that in spite of all the technological advancements, it would be very difficult to completely replace the value that we bring in from face-to-face meetings. Because if you look at even what research on communication theory, the findings are that most of our communication is actually nonverbal. Which means that essentially what we can do is we can enable better communication, but possibly in the long run, it won't be very, hi Alex, in the long run, it won't be very sustainable to go with a complete remote mode. That said, some of the technologies that we are starting to find are increasingly being helpful and productive, and in fact, some cases giving us same level of productivity as it would if we are on premises. For example, there has been a lot of innovation if you see on the communication and collaboration platforms, i.e. the Slacks and Microsoft Teams in the past few months, especially post the pandemic. Like the ability so that you can work on a document or a presentation or a spreadsheet together and without losing the consistency element of it. That is a big win. Then very simple things like Microsoft Teams now offers us the ability to, for example, while we are having a meeting, add innovative backgrounds that just add an element of engagement, the fun element, which kind of engages people more in this communications. Also, while you are having the meeting in real time, they're offering us with solutions like meeting feedbacks being generated, which are basically an application of speech to text technique. One particular solution that comes to mind that has been really helpful in recent times. If you remember, in APAC, most of us went completely remote around the months of February, March in Hong Kong, Singapore. And that time, suddenly, there was a huge spike in the number of email inflows or request inflows for help desk teams because everybody was struggling how to work remotely. And at that point, like what certain teams started doing is most of the questions that were sent to those teams were very similar. So rather than having them to respond to all those emails, because the team size didn't increase tenfold overnight, right? So rather than having them to respond to all those emails, things like conversational AIs or simple chatbots, which could respond to 60-70% of user queries, were able to reduce the workloads a lot. So I think and that's a very good example of AI technologies like NLP, which understands the context of what you're saying and gives you the relevant response, provided that's in the repository. So that's a very good example in my view. And in terms of specific to user interface, as you mentioned, I think like it hasn't happened in like completely yet, but I think moving forward, one big technology we see taking a leap step from here is VR. All this while it was an interesting, fun tool, but moving forward, I think VR, like having meetings with the help of virtual reality tools that give you the feeling that you are actually in a meeting room with your peers while you are basically sitting in the comfort of your home. That's something we're looking forward to.
Thanks, Manu. Just build on top of it. From our perspective, we are using digital avatars where we are actually mimicking the people. For example, if the message has to be communicated in a more personalized way, the avatars come like in the sense like it will be just talking to a real person rather than a chatbot where you're typing the thing. So it is more conversational. So it gives that you are somebody sitting just next to you and having a cup of coffee or something like that. We have seen one funny things on digital avatars where people they sip a coffee in between as well, just to give that feeling. So again, yeah, we're definitely very well said, Anu, and I'll totally agree with your point. Technology cannot replace humans, for sure. Technologies, humans create technology. Technology doesn't create humans. So that kind of stuff, right? So, but world has changed. We have to actually use technology and data to the best of use. And I would like to call Alex into the picture now. Alex is there? Did we lost him again?
Sachin, we lost Alex. He's currently having technical issues as well.
He need to sort out that with his subscriber. I don't know. I think he has not paid his bill. Okay, Sandra. So coming back to you. So what is your kind of technology drives going on? Are you working on any thing in terms of technologies in your area, just to do the same kind of user experience?
For the user experience, I agree with also the saying about that. We are not ready to completely reduce or to completely remove those like human, the face-to-face meeting. So we have also tested. It's just a testing point in Mongolia, as you said. There were cases like we couldn't provide any kind of the services by in person. Then we have provided like the video call service, which is like a little bit like half, but still we see their face, yeah. But in that case, some of the customers like it because some of them is like to see the face of the human. So from this experience, we see that we still not ready to remove this one. Also, it's not possible to remove all those face-to-face meeting even in the future, even in the new normal. So that's the true thing that it seems like we will face. The second thing is like there were cases like to check KYC, online KYC, to using the fingerprint, but that person needs to come to the branch in Mongolia and giving using the like fingerprint reader those case. But in pandemic situation, there is no possibility that one. Then there is a case like some of the fintech companies doing like taking the picture of the like your finger by your mobile phone, and image processing works on that one, and to getting the information based on those one. But of course it depends on also that the camera specification of that mobile phone. But still that's the solution, which means like every time there is any kind of the situation that we face, difficult situation we face, there is still the solutions if we use and find the right way to use the technology. This is the advantage of this area. So this is the case in Mongolia that we have faced and solved.
Fantastic. I suddenly forgot where is the mute button, so which is struggling. Okay, yeah, thanks for that. So I think Jed, how much time we have, because I have few more questions for our panelists. So how much time do we have?
You have until 3:30, Sachin.
Oh, fantastic. So I can take everything out, whatever is there. So okay, guys. So I think one thing which I wanted to really understand is reinventing of business model has become the topmost priority for all the organization, irrespective of banks, financial institutes, and all those things. And yesterday we heard, or 1 or 2 days back, we heard Pfizer announce that vaccine is almost ready. Some companies are claiming that is there. So how in your organizations you are far in the journey of reinventing business model? Are you doing something different, or you're still holding on to the same business model? So maybe start with China, followed by Anu.
Okay, sure. Thank you. So, and as we know, that the business model re-engineering is always been very difficult. It's very difficult because it's the changing all the way to the business, and also in terms of the customer side, in terms of the back office side. Those are the very difficult tasks, and most of the time it has been done by the experienced people, experienced project team, or the consultancy. But by using the data, it makes easier. It's especially the corporate companies. That the corporate companies has a data governance policy and base data and procedures, how to handle those things. So those things are giving now the advantage of why we collected before. So for this situation, even though we have the those data and maybe the willingness to do the re-engineering, there are 4 things that I would like to highlight in here. The first thing is even though we are thinking about the re-engineering, we need to consider to ask from ourselves kind of the questions whether we are ready or not. So this is also my first thing. And in that case, it's the mind change to think about so for example, the new normal is the new opportunity. This kind of the aggressive mind change will help, even though we are using the data. The second way is the way to review the process. Reinventing business model is designing the process. So process is about the data, because it's such as, for example, the input and usage of the data process, input, output, those are all the data. When we have the system that using that help us to register, log those processes and input and output, then it is ready to use this one. So we need to change the way to review the process or the redesign the process, not from the experienced people. Of course, it could be included in the experienced people, but the starting point should be from the data. So this is the second thing that I would like to highlight. The third thing is, of course, it's we need to consider heavily on the customer data, customer usage. For example, the service usage. For example, the bank, we could say where the customer is using our card, where is they using their digital channels, when is using the digital channels, when that comes to the branch. Those behavior-based customer journey map-based data is very important in order to considering to reinventing the business model. And fourth is about the technology. For example, maybe we could say robotic process automation or the new channel development. So those 4 things that I would like to highlight in here before we deeply go into the data. So those are the things, especially related to the dependencies and also the mind change. And of course, if we don't have any data, which could help for the re-engineering, then of course it's that company or need to directly has to implement the data governance policy or the digitization processes, those things. So I think that's every time when we see the advantage of the data, there is no escape from the data and no escape from the digital transformation. So it's not the way to we wait.
Sure, Anu, your views, please.
Yeah, so I mean, we represent the technology side of the bank, so I don't think I'm the best person to specifically comment on business model. That said, a couple of things come to mind in terms of where we see the vision of the management moving forward. First is energy transition. So Natixis is a very traditional bank, and we have historically invested heavily on clients on ENR, energy natural resources. And now it's not that we are moving away from that, just that the type of energy is changing. So the renewables, we are starting to focus more on renewables. We have come up with innovative solutions like green weighting factor, by which we can understand like which clients are in which category, and accordingly we decide at what level and in what proportions we do surveys, we provide financial solutions to them. So and we have some target deadlines as well, within which we want to do this transition so that we are able to support our large corporate clients in this entire energy transitions phase through the different steps. And the second point, I would like to build upon what Saina just mentioned, that yes, indeed, data is giving us much more visibility on how we are working, how we are engaging with one another, how we are engaging across teams, how we are engaging across geographies. So here we are running a couple of programs in Natixis, both at a platform level as well as globally, where we are trying to see that rather than historically the way banks have worked is front office, middle office, back office, rather than looking at it like that or defining it by business line, see activity chains from front to middle to back for a specific type of business. What are the different stakeholders involved, and try to bring them together, try to encourage and trigger more collaboration, more communication between them. And if that is not happening, just share with them that possibly they're missing out on useful opportunities, and in this way connect teams on the basis of activities rather than very formal hierarchical structure. So and the entire process using data technologies, and in fact one of the technologies we are using very heavily these days is knowledge graph, in order to understand, you see, where the communities are being formed, which are the teams that are working very seamlessly, they're working transversely, which are the teams that need to focus more on these areas, and so on and so forth.
Fantastic. So I think makes sense. So I think from follow up, one thing which I'm also being kind of asked, or a lot of debate goes on, right? Tough times are going on, and everybody is saying that okay, very uncertain, but at the same time we have to continue evolve, and it's tied up with my previous question as well, reinventing business model for sure. But how can we leverage on data to create some new business opportunities, right? Organizations has started and has been starting to capture the data, right? And if you look at the facts, last 2 years, 90% of the data has been created in last 2 years only, right? So the total, from the total volume, that means in last 2 years we have created such a vast variety of data. And I was doing some work on it and looking at 1 minute of internet. If you look at Twitter, if you look at social media's platform, the kind of data is generated is huge. And at the same time, it is also a kind of threat to the environment, because data centers are generating so much problems into the environment. And in next 4, 5 or couple of years, we will run out of the space of storing the data, right? Because there is a limit where we can store the data, but data is there. So how can we use data to create business opportunities, especially new business opportunities? Is there any advice or suggestion for our listeners? Maybe Anu, I will start with you first, then followed by Saina.
Sure. One of the key initiatives that are different front office teams like client office, they are engaging these days a lot, is understanding the client needs, not just by historically the way business works is relationship managers would have one-to-one meetings with clients, and they are, again, as I mentioned, nothing can replace that. That being said, if we can get some aggregated view on a specific sector, on a specific geography, on a specific type of products, what has been the aggregated voice of our clients, or what has been the the needs, where do we see certain seasonality in terms of client needs, where do we see sudden spike of a specific type of needs, and accordingly adopt. Because for a CIB, for an investment bank, at the end of the day, the goal is you have to be client centric. So analyzing data in a more structured way, extracting like key topics from the client requests, etc., to understand how we can service them better, and in a very structured, data-driven way. And accordingly, you have like all the alerts in place going to the respective teams, be it coverage bankers, be it regular industry senior bankers, and then so that they can do the follow-up. So it's like, the way we are looking at data and data-related technologies is it's going to augment our front office a lot more in the days to come. And I think we all, including front office, over time would get used to these new ways of working. And it just does not stay confined to remote working, but it's also like data-driven thinking and data-driven decision-making from a management standpoint. So, yeah.
Sana, to you.
It's like kind of the difficult cases, because in terms of the experience to getting this kind of the experience, like creating new product based on the data that we have, it's like in Mongolia, for example, I always talk about like maybe the case, and in Mongolia we are like try to give, for example, product development managers in here, and every companies, they have the product development managers, but their ability and experience to create that product from the data is not as we expected at the moment, which means like that we have the many data, but it cannot, we couldn't use those data as much as possible that we could bring those products. So I would like to say that we should start from that product development managers availability and also the capability and the experience for them, to giving the experience and to giving some workshops to create those kind of the product, any kind of the products from the data is like first the step that we need to consider. And second one is maybe that person is, if it's the corporate companies, then that person also needs to get some experience from like other startup companies, because corporate companies and the startup companies, each of them have like advantage and also the disadvantage. The combining those two things will make us like maybe the base product development manager with using the data. So that's maybe the two cases that I would like to highlight in here.
And then just to add, in fact, I fully echo with Sana that it's almost impossible if you want to get into this journey to try to do everything internally. We have to collaborate very closely with the fintech ecosystem, the startup ecosystem, academia, if we do intend to come up with a solution that is not just solving the problem, leveraging data, but also being scalable, being consistent, it's explainable. At the end of the day, a black box solution won't sell, so it's explainable to the end users, and to to manage all of that. I think we are at a stage that it's no more sufficient to develop solutions internally alone. We have to collaborate with the players in the market.
That's great. So I think we are left with last 5 minutes. So why don't we just quickly start with key takeaways or key advices for our listeners. So maybe Sana, you want to start with, followed by Anu?
Okay, sure. And I think that's the COVID-19. It speeds up the digital transformation all over the world. For example, maybe I think maybe the 5 years, like bringing that idea to bringing to do the digital transformation is like 5 years. So at least we think it's not the time to think whether company needs to think about digital transformation and usage of the data. It's not the time to think about this one, whether when we will do. It's just the time how do we follow, how do we to implement the data-driven culture and data-driven product as soon as possible. It's about the speed at the moment, because what we see in here in Mongolia and also in some other countries is like there is a competition is getting more higher and more hot, because all of them already knew that's what is the importance of the data and the importance of the digital transformation. So this is the thing that we consider. And another thing to add is like the digital transformation is about the like integration. It's like the collaboration or cooperation. Because if we're not integrating with the other system or other companies or the other startup companies, it's about just online transformation. To bringing the most value from digital transformation, like to integrating with the third-party companies, to integrating with the other corporate companies, to integrating maybe the government services. After this one, we will see the real value of the digital transformation. Data is the same, because that's each companies, each government sector, they have their own data. But integrating all those data, of course, and based on the like privacy, following the privacy procedures, all those law, then it will bring us the new things. So based on this one, I would like to say that we need to think from the beginning that our data is very important. Also, adding the another data is the most important.
Anu, over to you.
Sure. So I think, like Sana was mentioning, it's not a question anymore if digital transformation is the way to go. And once you are able to go digital, you analyze the data that you generate from making your processes digital. But it's a matter when now. And then I think the pandemic and the last few months have acted as a catalyst for organizations to bring about this change. So, I mean, the key component right now is like, how do we bring about this data culture, data awareness across the board, across the spectrum, starting from the very senior management to the first year analysts. And in fact, here in Ethics, what we are doing is we are like seriously investing on that. And for what we recently conducted AI for Bankers webinar series in Asia Pacific, and we are doing the same global as well. And what we are doing is we are arranging trainings for our top management, the CEO, the global CEOs, the CFOs, the head of operations, and etc. For the very senior management, we are arranging for trainings where they can learn a bit hands-on on how these data technologies work, because it's very important the decision makers are well aware of what this could offer, and accordingly they can make the most informed decisions, because these decisions are going to stay with us for a long way, for the next 10-15 years. And it's very important that these decisions are done in a data-driven way. So yeah.
Okay, from my perspective, I think the key takeaway is definitely data is the new oil and the data is the key asset, right? But at the same time, we should not be over excited about that storing the data or blindly capturing the data, because I have done a research paper and I have published one of the things is, and the topic was the dark side of data. So on an average, only organization uses 23% of the data what they have. 77% data is lying down, and the cost of storing, managing of the data is huge. And when we talk about 77% data, then we have to also look from a perspective of data privacy, regulation, expectation, records management, destroying of the data. So data privacy also is a very big task of that. So I think for me the key takeaway is that you should have a clear definition of a use case. Why do you need the data? What is the purpose of the data? How will you use that data? And then store that data, use that data, and at the same time you should have a clear strategy of retaining and destroying that data. Because if you see recent GDPR and other areas as well, there is a lot of push that you can only retain the data to a limit where you use it and consume it, and at the same time you have to physically and you have to prove that the data is destroyed as well. So I think that is the key takeaway from us. So I think I just wanted to wrap up with the session and would like to say thanks to all the panelists. But before I say thanks, I would like to say ask one word which comes to the mind after this discussion? Maybe Saina, one word for you.
For one word, it's like the Godzilla.
Okay, fantastic. Anu, from your side.
I think spontaneously the thing that comes to mind is thought-provoking.
Okay. For me, the one word comes as experimentation. Keep on experimenting, try new things, and ready to get, even if you fail, no problem. But experimentation is most important thing. On that note, I would really like to say thanks to Anu to take out the time from the busy schedule. Sana, thank you so much. Very thought-provoking discussion and very thought-provoking ideas. Really appreciate. Thank you.
Thanks, Sachin.
Thank you,
guys.
Saina, and thank you,
Cheers.
Anu. Even
Bye-bye.
though your other panelists can't join, it was still a very great discussion. So right now, allow me to reintroduce Sachin for his solo presentation. He'll be discussing additionally regarding AI and AI-driven innovations track titled Data Chaos and Clarity. So Sachin.
Thank you. Am I audible clearly?
Yes.
Okay, fantastic. So I think that the first of all, thanks for this opportunity. Great to be here and share the topic which I'm very passionate about, data. Data chaos to clarity, right? So can I share the screen here?
Yes, Sachin, there is a third icon.
Yep.
Yes, perfect. Okay. Okay, perfect. We can see clearly.
Okay, fantastic. So this is my topic here, data chaos to clarity, and Jed, just remind me how much time I have for this presentation.
You have until 3:50, Sachin.
3:50. Okay, fantastic. So we will talk about data chaos to clarity. We will talk about data velocity, data the new oil, 1 internet minute, then challenges. Then how do we tell stories with data? Then how do we do a quick win? And how do we scale across and measuring success and failures? Data velocity. So basically, data is very important. Data is the new oil. I've been saying, I think, almost 3-4 times in this session, also in previous panel discussion as well. Let's look about what is data velocity. Data velocity and usage of big data. We do have huge velocity in terms of storing the data, capturing the data, the volume of data, and right now and thanks to smart devices and different social media platforms and other areas, we actually get a lot of data stored. So the velocity of the data is huge. The capability of data which can be stored, analyzed, and in the real time. It is just like, in milliseconds, every move, every action, what you do is captured. Even if you go into your phone and look at a website for few seconds, and if you look at a product on a social media, it has been captured. So that kind of data velocity we are talking about. Now let's look at 1 internet minute of things, right? In 60 seconds, what is happening, right? You have different social media platforms, and how many like exactly the level of information is captured. For example, in YouTube, how many videos are getting uploaded. Google, in 60 seconds 2 million searches are happening. In 60 seconds 14 new songs are added, 17 new registered for domains, and so many different websites, Walmart, emails, right? Just imagine that 204 million emails are sent in 60 seconds. It's mind-boggling. It's amazing that in 60 seconds what volume of data is generated in one single internet minute, right? So now we have data, we have data velocity, and we have so much data. And now, as we are mentioning, that data is the new asset. Or some people say that if you have data, you have a gold mine. But gold mine doesn't give you the power, or gold mine alone does not give you the right edge to use it, right? If you have a gold mine, you need to dig the gold and sell to the market to become rich. So what do you do with this data? Data is all about story, and data storytelling is the most important thing in data, because if you can't do a storytelling with data, then it is garbage. It is of no value. So data storytelling is a methodology for communicating information tailored to a specific audience with a compelling narrative. For example, you have a data about your customers. If you can tell a story that what your customers liking are, dislikings are, what are the customer trend for last 2 weeks, what are the customer future prediction can be based on the historical data. If you can tell the story to your senior management that data is telling customer data is telling about this information, that is the real win of data. So then actually your data and storytelling is on the right track, because you can actually give the meaningful insights and generate actionable insights for your management and for your people. So I call is all this thing as WWH. Why, what, how. So basically, why do we need data? What is the rationale behind the data? Why is the fundamental thing. And if you have the right why, then the right idea is strike. Why? So every time you need to ask why. And what we are trying to achieve. For example, in the earlier thing, if we are trying to see customer trends, or if we want to identify customer behaviors, what we are trying to achieve with this, we are trying to achieve customer behavior for the potential launch for a new product, right? Or trying to understand what is the customer likings and dislikings, and how is purely from an implementation perspective, or more on the technical aspect, how we will do that, how we will achieve that. Do we need to use data science? Do we need to simply use advanced analytics? Do we use some kind of models? Do we need to use some kind of tools in order to do that? So if we are clear about WWH, I would say 50 to 60% battle is already won. Okay. The next slide is data stories. What exactly is data stories, right? Basically, data stories can be divided into 3 aspects. One is data, one is visual, and one is narrative. So data is all about the information, or I would not say data is information. Information is the last product where you have it. But at the same time, data is your raw details, right? I would not even say information, but basic building blocks, right? And then you need to actually have a clear storyline. For example, in nowadays COVID, if some organization wants to a medical organization want to see the effectiveness of the effort they are doing in terms of creating a vaccine, so data of different patients combined with the narrative to measure the effectiveness, on top of it putting a visual effect on it by using a business intelligence to show the data based on race, age, ethnicity, medical complications, that how the vaccine is behaving or actually useful for the patients, is all about data story. So the narrative is effectiveness of the vaccine on this. So basically every data story has a target audience. You cannot tell the data stories to everybody. Like for example, if you want to show customer trends and behavior, right, that might be a data story for the senior management, which will decide that what should be the next move, or what kind of R&D focus should be there on, or what kind of product line we should develop in order to generate more revenue for the organization. So data stories are definitely for target audience, and data stories are data, visual, and narrative. Now, what should be the approach of data storytelling? Because we are talking about data chaos to clarity. We are trying to achieve clarity using data. So basically, I use this approach called ADEI, that is accelerate, discover, enhance, and increase. So basically, accelerate is all decision using visual and narrative storytelling approach, discover actionable insights, enhance user experience by UI and UX, increase user adoption by following user-centric methodology. Right? So basically, the whole idea is that what decisions we want to make, and we want to enable our users to make quick decisions, to accelerate decisions, because today the time is changing and we need to reinvent our business model and align our business model. So we need to enable our management to accelerate decisions, or managers or senior managers to make their decisions. And we should also use visualizations to help us to give an insight, actionable insights, right? Basically, the idea is the dashboards or the approach which will allow us to give the insights. People should get the obvious information right. Enhance user experience. We should have a better design so that people can use. For example, if you are going to a website where you have a product catalog, if you have to do a lot of navigation to find out the right product, then the user experience goes on a toss. You will not like to come back to the website. But if the user experience is there, then you can expect the customer will come again and again, and the probability is that it will order more products from there. And user adoption is all about user-centric methodology. So it's all about agile methodology, where people actually use the things and then give a constant feedback, and we continue to improve. Now let's look at the real examples. What used to happen previously, or a traditional approach of storytelling or data analysis and all those things. Now what exactly happening? If you look at the traditional approach, top 5 performing categories, right? Okay, you will get the information that, okay, apparel are this, and then electronics, home, kitchen, sports, how we are doing, what was planned, what is actual, this is it. But now what exactly is happening? The storytelling is giving you the top recommendations. It is giving you much more insight that, okay, for example, 25% of more apparel stock landing, 10% more discount, and 23% replacement for home and kitchen, 12% less dead stock in daily need product. So these kind of top recommendations, capability of making data speak, is the way to go to story, is about storytelling. What should be the design methodology? All screen mockups, user experience. So basically, when we are designing our visualization dashboards, or when we are trying to do a data storytelling, right? So we are talking about user interface, user experience, data visualization best practices, all screen mockups, right? So this is the kind of 4 pillars which is required in order to generate the user experience. So basically, how should be the user interface should be there, right? And how the screen mockup should work. And screen mockups is something you do a prototype, you give to the users, take the feedback, and then data visualization best practices, how the data visually be there. You would like your data to be presented in such a way that gives a insight to the users. Users doesn't have to think, they automatically understand, hey, data is telling this. And that's the real win of making data speak. This is all about user experience, how comfortable the user is. If you have good user experience, then you will be able to achieve your main target. So it's all about user experience. So always, whenever you are telling the data, you have to take care about user, what you want to show to the user, what you want to tell to the user, and user experience is on the top. Data to insights, again, one example, using raw data to convert insights. For example, based on the businesses, we are actually telling that what are the businesses which are not doing good. Based on this, so immediately the senior management people say that, okay, the oranges which are dropped down, which are not even going there, right? For example, business group 3 is down by 10.65%, right? So they know that what should be the first priority for us. So this is the insight, that what exactly we are telling the the senior management where to focus first. And to do this, we can use quick POCs and prototyping to get the feedback. What we do is just quickly make a prototype of data story, assume, hypothesis, narrative, do a quick prototype, define the definition, develop it, and evaluate prototype by giving them the demo or giving them the tool to play, and then do a proof of concept, and then you just do it, right? And then the scaling across is how approach and methodology, how that you scale through, and what should be the approach. From my perspective, the approach, what I take is that takes slow and steady and small steps, but at the same time agility is there. Every 2 weeks, 3 weeks, keep on building on top of it. It's a complete iteration. So you scale across and you develop that. And then in the last year, definitely have to continuously measure success, because it's not one time. Storytelling is not once upon a time. Storytelling is all about that we have to tell the story in a continuous way. It's a once upon a time to start with, but definitely it is story to tell on a daily or on a weekly or a monthly basis. So it is continuous. And stories do change, because data is very dynamic in nature. And you have to measure success, because unless you measure success, you will not be able to go back and make the fixes or enhance it. This is the continuous feedback. Always aim for smiling faces, but at the same time, don't worry if you get angry faces, because angry faces are great feedback as well. Because unless we don't know what is going wrong, we can't convert angry face into a laughing face. So continuous improvement feedback is most important thing. So I think looking respectful for the time, 3:48. So I would leave last 20 like 2 minutes for any questions, please. So Jed, over to you. Do we have any questions?
Hi, Sachin. Currently, there are no questions from our viewers.
Okay, that's great. So I'm almost done, and if there is no question, I can actually once again thanks for the opportunity. It was great sharing the thought process, and please feel free to connect on LinkedIn, and I'm gonna share my website as well. You can leave a note there. And I'm very passionate about this whole topic of data and analytics, and I keep on doing a lot of projects apart from my official capacity. If you want to hear more, or if you want to suggest, if you want to discuss few things, it's learning all the way from both sides. Happy to jump into any kind of discussion, and I really appreciate the opportunity. Thanks, very well organized event. Really appreciate. Thank you so much.
Thank you, Sachin. And for those people who want to go visit Sachin's website, it's now on the event chat as well as in the stage chat. Just for everyone, it is Sachin, www.sachintonk.com. So again, thank you, Sachin, for that great presentation and the panel discussion earlier.
Thank you. Have a wonderful day, guys, and always stay safe.
Likewise. Okay, so that wraps it up for our data and AI-driven innovations track. Right now, let's move to the last track of the day, but definitely not the least. We're now opening the FinTech and TechFin track to be started by Mr. Lee Dolsen, the Chief Architect of Asia Pacific in Japan for Zscaler. So Lee Dolsen's presentation is entitled Rethinking Cybersecurity When Your Workforce is Remote.
All right, thank you everyone. Really appreciate the time today. These are interesting times we live in, obviously. So it's I'm glad to have a chance to talk to you guys about how to think about digital transformation and how to think about it in today's times. COVID-19 has really changed how all organizations are really thinking about work, and it's basically we're looking at a situation where for a lot of organizations, remote work is becoming maybe the rule, and maybe not even for the short term. We're looking at transforming the business, looking at costs. Business continuity takes on a new meaning when everyone's going home, and the way you work with customers and partners, everything shifts dramatically. And it's an opportunity to take a step back and look at where the world has gotten in terms of cloud adoption, the tools that are available. In some ways, COVID wasn't as bad as it could have been, just because the world was a long way along the journey for digital transformation. But we are seeing now organizations really accelerate and look at, how do I refactor my business? Where can I take out costs? Even things like rental and leases. If you're looking at more and more users working from home, how do you restructure that? How do you restructure your network around that? And we are seeing a lot of organizations take this as an opportunity to really refactor their business. Look at a lot of things that were in the old world, they would slow things down, and just pushing past those and redesigning how they go about getting users to applications and interacting with their customers and their business partners. So the legacy way of doing things, you can see that circle in the middle is, we had this idea of, we had a data center where originally our applications were hosted. More and more those applications are moving into the cloud. We built a network around that data center where users, if they were on the network, had connectivity to there. And there was remote access infrastructure, but it was built more for occasional use, like a small percentage of the workforce when they needed to get in. Very few organizations were building remote access infrastructure for 100% of the workforce. And so we've seen a variety of challenges with organizations just trying to figure out, how do I balance security with the VPN infrastructure that I have? How do I scale that up? Are there better ways of doing things? Of course, the initial emergencies when everyone went home, we're well past that, but we're still, a lot of organizations I talk to are not in a state where they're happy, right? They're looking actively for, what are the solutions to get the best user experience, but also reduce risk. Because, likewise, a lot of organizations aren't using VPN for 100% of your traffic to be going back through, and then back through your internet security infrastructure that you might have there, right? If you're a financial services company, maybe you're forcing the users back through this infrastructure, but then that's causing a really terrible user experience. The flip side for a lot of enterprises is they're saying, well, I'll just use this VPN infrastructure for my internal applications, but I'll just rely on whatever type of endpoint security I have, and I'll lose all the security invest you have in the data center because these users are directly accessing internet and cloud applications from their home networks. And of course, we're never going to be able to build security within every user's home network. That's not an option. So we have to look at other alternatives. So if we think through the alternatives, of course, one approach is to kind of do what we're comfortable with from an industry. We're comfortable with the firewalls and the security point products that we put in our gateways in the data center. We could actually replicate that up in Azure or AWS, and many security vendors have virtualized versions I can run up there. But you're really shifting the problem, right? You're then just moving the problem from your physical DC to a virtual DC, adding lots of overhead, increasing your attack surface. User experience is still not ideal because that's not what these compute environments were built for. They were built for hosting services around compute that's providing applications. They're not designed to be a transit for the rest of the internet. Well, they can be used in that way. It's just not ideal in many different ways, from a cost, from a security, user experience. So, another approach, which is Zscaler's approach, which is why you see this logo, but the basic concept here is we're using a zero trust exchange. SASE is another word that gets talked about by analysts. But the basic idea is you have an exchange that's also in the cloud, that has good connectivity across all the different potential clouds, that's designed to do security natively. And so no matter where the users are, if they're at home, even when they come back in the data center, it's designed to take all of the different types of security functions that you would have had in-house and replicate those in a cloud environment where you can really seamlessly manage that and give the users a very good experience. This is SLA-backed performance, uptime, etc., and completely eliminate your attack surface, because you don't need to advertise your applications yourselves. You're going to route all connectivity through your applications via the cloud. And so Zscaler, we break this exchange into two different parts. The first part of the exchange is the outbound part. So, a lot of organizations, again, shifting to work from home, suddenly you lost the security that was happening in your data center because maybe you have split VPN tunnels, or you've got a methodology that allows users direct access. In that case, then you're relying just on your very last line of defense, which is your endpoint software. Where the flip side is maybe you're forcing everyone back via VPN and you have a poor user experience as you try to route back through that stack. So Zscaler Internet Access is really around replacing all the different point products that do the internet security. So the firewalls, the URL, access control, etc. That's all Zscaler Internet Access. But then when it's getting users to your internal apps, we want to do things in a very different way that eliminates the need to scale out VPNs and go on, complex segmentation projects with your applications. We can use the cloud to provide zero trust access to your applications. And so that's Zscaler Private Access. And we'll dig a little bit deeper into both of these. So if we talk about the idea with this is shifting though, is this idea is we're able to then accelerate digital transformation, move from this castle and moat model where, if the user is on the network, we trust the user, right? Instead of bringing the user into a network that you trust, we move to a zero trust exchange where, I use the identity of the user, I use multi-factor authentication, I can use things like device context to ensure that the user is who they say they are and that the device meets whatever criteria you need, and that they then get access to the individual applications they need across this exchange. And so this, often when we get started with customers, we're really focused on employees, but if you look around all these different types of scenarios around here and all the different kinds of interconnectivity, you've got many types of use cases where you've got workloads or users or business partners or customers connecting to other services which are on the internet. So we want this exchange to always be sitting in the middle regardless of the use case, and that's really what Zscaler is about. So if we talk about the security side of it, this is just an example, and we've got a great blog. You see here the word Threat Labs. You can go Google Threat Labs and look at what some of our research team has shown. But we saw something like a 300,000% increase in attacks focused around COVID-19, because it's, the attackers, the hackers, the various criminal organizations always take advantage of a good crisis. And COVID has been an industry crisis in that it's probably one of the only crises that's truly so global in scale that everyone in the world, regardless of your language, is Googling this, looking for things, getting notifications. And so we've just seen massive amounts of threats coming that are focused on tricking users around various things around COVID. And if you're working from home, maybe your on-prem security would have caught some of those things, but it's very challenging when you're relying, again, on the user's home network, their endpoint software to say, yeah, this is going to catch all the different potential ways the threats are there. So the idea with Zscaler is we're going to be routing all the users' internet traffic up through us. We're going to catch all of those things. We've got cloud effect, AI, machine learning, hundreds of thousands of updates coming a day, hundreds of millions of threats being blocked on a daily basis, which really allows us to provide really comprehensive security. And that endpoint security, which is still a relevant part of your security, but that becomes, again, your last line of defense instead of your first line of defense. So the basic idea of the way this works, this can work both for your roaming users and your at-home users, but as people embark on these transformation journeys, and you say, okay, let's create a model where I'm going to figure out how I secure my users at home. If you're picking a best-in-class model for securing your users at home, why would you not have the same model for when users come back to the office eventually? So the idea is this solution doesn't care where the users are. If they're at home or they're physically in the office, we're going to be able to route that traffic up to the Zscaler cloud. So for your managed networks, that's going to be with enforcement and tunneling technologies. But for your roaming users, there's an agent, so again, the user's working at home, we have that agent. So no matter where the users are, no matter what the network is, whether you manage it or not, we get all of the outbound internet traffic up to the Zscaler cloud. And basically, block the bad, protect the good is the basic idea. And to do that, what we're doing is we're moving all of the different security controls you would have had on premise, like your access control, firewall, URL filtering, those kind of things, we move that up into the cloud. We do all of the threat prevention. So we're doing sandboxing, we're doing IPS and advanced threat protections. One really important thing though is we're doing this with native at-scale SSL capability. So even a lot of organizations, when I talk to them today around their on-premise security infrastructure, it's not that common to have the ability to look into SSL. I mean, there's many solutions in the market that can do it, but the practicalities around doing it are often so challenging that many organizations just give up. And the thing is, we do see the vast majority of the threats are delivered today over SSL. The 80 to 90% of the internet for most organizations is encrypted over TLS. So if you're not able to look inside that content, that's a really critical security function you need to look at, whether you look at Zscaler or some other vendor, because that is how all the attacks are delivered today. And if you're not inspecting that content in some way, then the attackers have free ride to your users into your environment. But on top of that, data protection is also really important. It's becoming even more important as the data moves out of your data center again, moves into the cloud. So we need to look at the data users are uploading and where they're uploading it, making sure they're only uploading it to your sanctioned IT, but also using cloud application security broker functions to look at the data that's hosted in the cloud and make sure that it's actually appropriately shared, that private data isn't suddenly publicly shared, and leveraging the cloud technology to look across your workloads, across your configurations to make sure all that's in sync and correct. And of course, we need to get all this data back into wherever you're doing your security monitoring so that your security organization can look at that. And so we also give you unprecedented visibility and the ability to see what your users are up to, what the applications are being used, look at performance across that, regardless of where they are. Again, working from home, working from the office, doesn't matter from a Zscaler perspective. We're going to give you that same level of visibility. So that's Zscaler private access. And so, that's Zscaler internet access. And let me touch on Zscaler private access. So this is, while that was really around getting users to the public SaaS and public internet, the flip side of this is you've got users that are connecting to your internal applications. And historically, they've used VPN to do that. VPN is really part of that castle and moat model I talked to you about. The VPN puts the user on the network, and it uses basic IP routing. And the analogy here is using a phone call. So if you're using the castle and moat model, it's just like modern phones. Anyone with any other phone number can call any other phone. And so that's how we get spam callers and calls we don't want, because if you have the phone number, you can make a call. And so IP works the same way. If you have the IP address and we're under that network-based trust model, any endpoint can talk to any other endpoint. Really what we want though is we want inherent security in who can talk to what. And if you actually rewind phones to the early days of phones when they were really new technology, this is one of the better analogies we came up with for how this technology works. Instead of allowing any endpoint to talk to any other endpoint, in the early days of phones, there was a switchboard operator. There was a switchboard operator because there had to be, because of the way phones worked. But that switchboard operator was also checking your contract. So if a caller picked up the phone, they'd be picking up some kind of party line, talk to the operator and say, hey, I need to talk to so-and-so. And that switchboard operator would look at your contract and say, can you make this call? And then they would literally, if the answer was yes, they would literally plug two wires together to connect the user to the calling party. And so that's the idea that we're taking with Zero Trust. And we're doing this, we're just fast forwarding this into what this could look like in a cloud world where I can automate this using APIs and multi-factor authentication, et cetera. And in here we have the agent that's sitting on the endpoint, and the user requests access to the app. We validate the identity of that user, who they are, if they have access to that application. And if the answer is yes, then we grant them access to the app. And we're, again, stitching two different internet connections together. So instead of allowing the user to talk directly to the app, we have one connection from the data center connecting to the Zscaler cloud, another connection from the user connecting to the Zscaler cloud. User never actually gets access to the network. We can drill in a little deeper on how this works. But the basic idea with this is, doesn't matter where your apps are hosted. They can be hosted in your physical data center. They can be hosted in Azure. It could be an OT scenario. It could be, one of our great reference customers is Man Diesel, and they monitor the engines in the ships that we see in the Straits and all around here in Singapore and Indonesia. So it can be any sort of application hosted anywhere. We put this connector there. No matter where the application is hosted, we're going to use this user-based access without giving them network access. So this is the concept of zero trust. So this is the opposite of VPN. This is a user to app level access control. So we don't need traditional firewall. We don't need DNS. It's doing things like global load balancing. It's giving ways to access this via third parties. Lots of different use cases that this can address, which we won't have time to drill into today. But a lot of different ways this technology can help users get to your applications without ever giving them traditional VPN and network access. And so a little bit more detail on how it works. The basic idea here, the user is going to be authenticating with your identity, your IDP. This will be SAML, it might be Azure, it might be ADFS, could be Okta, many different IDPs. We're going to authenticate the user against your IDP. In this case, in this idea, we're seeing Microsoft as the IDP, user gets authenticated, and they attempt to access that app. They're connecting to the Zscaler cloud, and they ask the cloud, hey, this is who I am. I've been authenticated via the IDP. It did multi-factor, conditional access, whatever you want to use on that IDP. Then if the cloud checks that user's identity, their policy, and says, okay, this user's allowed to access the application, and then where is that application hosted? You'll see these little blue plug icons. We call these connectors, but this is a component of the Zscaler cloud that actually sits in the same network environment as your servers. That will then phone out to the cloud as well. So it's making an outbound connection to the cloud. It's two-way. It's mutually authenticated, so no chance of a man in the middle, as is the client. And we're stitching those connections together to allow that user seamless access to your application without ever putting them on the network. And so these are the concepts that Zscaler implements. And we've been doing this for a long time now. It's been an exciting journey with Zscaler doing this. A lot of the Fortune 2000 are using Zscaler. We see over 100 billion transactions a day. So we'd be very happy to dig in with any of you as follow-ups.
Thank you, Lee, for that presentation. If you do have any questions for Lee or the Zscaler team, they have an open sessions room. You may enter anytime, and they also have an open virtual booth down at the expo. So to our next panel, we have a panel discussion titled Fintech Leaders Panel, Post-COVID-19, Digital Banking Era, the Evolving Role of Fintech and TechFin. So the panelists for this panel is Mr. Roberto Sumabrata, Senior Vice President, Head of Corporate Affairs for Yuang Teman, Indonesia. Our moderator, Mr. Gopal Kiran, Director for Financial Services at Deloitte. Next is Mr. Neil Cross. He is the co-founder and chairman at Picture Wealth. Mr. Hendra Tan, CEO, PT One Connect Financial Technology, Indonesia. And last but not the least, Mr. Jagan Fu Punudarai, COO and CCO of Payments at OVO, Indonesia. Gopal, once everyone is in, please take over.
You're missing Hendra.
Yeah, Hendra here.
Hi, good evening, everyone. Myself, Gopal, dialing from Malaysia. I think thanks everyone for joining this panel. Good evening. We have a very interesting topic to cover in the next 45 minutes. So it is talking more of what is the new digital banking era with the current days, and what is the role of FinTech and TechFins in the current situation. So joining us today, we have very prominent industry leaders here. We don't need introduction to many of these people. They're quite popular in the market. So starting from Hendra, I think starting from a consultant, I think come from my background, then moved to Pingan, FinTech, and now experience of digital transformation in China and ASEAN markets, and now with One Connector, very popular. And then moving to Neil, I think Neil doesn't need an introduction, right from the DBS days of driving the innovation team, and then advisor to Razor, and now with Picture Wealth. And from Roberto, from Indonesia, I think very popular with respect to the online micro lending institution you're running. Congratulations. I think a lot of work for you there in Indonesia. He's heading the corporate affairs. And come from an automobile and insurance background, so quite interesting play there. And then we have Jaigan from leading the OVO payments, and we have history from Grab. I think today we have a very interesting panel looking at the background. I think what's happening in the ASEAN or APAC space, payments or lending are being heavily disrupted, and there's a lot of work to be done. I think we have representation from payments and lending. And then we also have Wealth, who is representing from Neil, and then Hendra, who covers entire digital banking as a whole. So I think this is a very good platform. I'll quick start with some of my questions, which I thought would be useful for the panel and to get the opinion from the leaders here. So starting with Hendra first. So I think as we see the COVID pandemic continues, there is a broader shift in the economy happening from response to recovery stage. And then new opportunities have been explored by all the TechFin and the FinTech players. So we just wanted to get your view. Where do you see these opportunities in Southeast Asia, and which areas of the financial services you see there is the lot of traction? And can you give some of your experiences, or how you're leveraging these opportunities with your assets? Over to you, Hendra.
Yeah, thank you. So in my view, actually, COVID, because of the limiting mobility of the people, I think that will change the habit of the people from moving or shopping, or their habit of doing the consumption from offline to online. I think that is very, very obvious. Yeah. But for the FinTech and TechFin perspective, I think there is an opportunity. The opportunity has been there with or without COVID, considering the unbankable portions of the population in Southeast Asia. So I think it's very obvious the opportunity is there, whether with COVID or without COVID. But my view, although the COVID already changed the usage of the digital of the consumers, but the challenge for the TechFin and FinTech is still there. The reason is, after the COVID, actually, how fast is the economy will recover? How fast the COVID will go away, right? You know, there's good news about the vaccine, but if you take into account the production capacity until all the populations can get the vaccine of COVID, probably that's the end of 2021 already. So the economy is badly hit by this pandemic. So that means the real economy is also getting a strong hit by this COVID. So as FinTech and TechFin players, what we can do is, it's a very good time to prepare ourselves, right? It's very good time to use the technology that we have to help the real economy. And I think it's more like helping the economy rather than seizing the opportunity. I mean, this is the same thing, can mean the same thing, but the more important for us is how to prepare ourselves to help the real economy. And we have friends from Roberto from Uang Teman. I think FinTech in Indonesia is growing very, very well. But I think the challenge is very obvious in the market that not only the technology, but there are few things that we really need to build. From my experience from Ping An Group in China, is that we really need to build an ecosystem. The lending ecosystem itself need to be built. So we have payment participant here. We have fintech lenders, digital technology speakers in this forum, and I think to do the financial inclusion to have the real economy post-COVID, actually really need participants from various parties to build the ecosystem all together. I mean, we can do lending, but we cannot skip the payment, right? So if you want to do lending, you cannot skip also, you cannot only rely on the digital platform, you also need to rely on the offline channel as well. So the whole thing need to come together. And what we need to do is, we need to really do more collaboration among all the participants within the ecosystem to make sure that the funding really flow to the micro SME who needs and really can help the real economy and help the employment, right? So this unemployment is a very big issue after the recovery, after the recession, right? Normally it's lagging like 2 quarters, so it's the unemployment rate is not the highest yet. Probably the highest would be end of 2021. So what we can do is really through the financing and the technology and collaboration among all the players within this particular industry, we can help the real economy. That's my view.
I think, Hendra, very good views. This goes in lines to one of the recent research we did on the digital maturity champion of the banks. Because of this latest COVID situation, many of the banks are looking at how we can move towards digital payments, cashless payments, how we can onboard the customers seamlessly and all. So this gives a very good context to move to the next panel member, to Neil. I think what I felt really interesting looking at your website recently is your wealthy, the word wealthy, wealth plus selfie, the wealthy. I think that I really liked it. So maybe you can tell me more about it. And the key question I have for you is, we have seen in the market, every other industry has been hit with this COVID. We see the fintech firms are coming ahead and offering various things of how they can support to the community, like say reduce the subscription fees or offer fees or create a wealth fund. So how do you see the fintech players are leveraging on this situation to win the confidence of your customers or clients to build a better roadmap or a long-term value? So what are some of your thoughts there?
Yes, thank you. It's a very complex space. Obviously, I'll try to talk more at a global or Asian level. So generally, if you think about disruption and startups and fintechs, it tends to make stuff cheaper and easier, and that's pretty much it. Yeah. So on the cheaper side, the great thing that fintechs do, and in fairness, tech things do that banks don't tend to do, is they tend to lose a lot of money. And why is that a great idea? Well, for example, we get great, discounts when we use some of the payment platforms. Yeah, we get really high interest saving rates, way beyond banks, because they're desperate for money. So what's happening in the startup world, just not fintech, is a very simple model. So they take venture capital money, they pull it into their business at this side. They use that money to outprice the incumbent. So cheaper taxis like Uber, cheaper e-commerce like Amazon, or cheaper payments, free ATM, high interest rates on savings, low interest rate on loan, example. So that model is great for consumers, yeah. And I suppose one of the positives that's come out of COVID, it has decided the winners versus the losers. Obviously not Donald Trump yet. We're still waiting for that one. I think, most of the world agrees he's a loser. There's probably only 2 people that agree he's a winner. But it has brought some reality back into the market, because this model of pumping venture capital cash in, outpricing the incumbent, if you've got enough money, it doesn't matter if your business model will ever work, you will be successful and be a unicorn and all that kind of stuff. And so for consumers, it's great because you can get the cheaper finance. So that's on the cheap side, and also their operational costs are lower than generally than banks and other companies, so it's cheap. The other thing's easy. And so what I'm seeing a really good trend, which is really helping out of COVID, is putting finance where people live. So for example, automating getting salary loans from your employer. So there's fintechs actually powered by banks, which is great. So fintechs sit inside the payroll system, connect out to a cheap source of funds, you know, one of the great banks in the region, and staff inside their staff portal can request a salary advance. And so that's really helpful getting people through, because as my final point about this is, be very careful. There's a lot of opportunities out there, and people use a crisis, as we saw in the last presentation on security, as an opportunity. Yeah. And so there's people are finding it hard to get money, whether you're a small business or you're a consumer, and there are some disreputable lenders out there with, you know, 1,000% interest rates over a month. So that's just one thing. There are some great deals out there in fintech, and actually banks are doing some good deals as well, and TechFins, you know, our great friends at, you know, OVO and GoPay and others. But there are people doing payday lending, extreme loans, high interest rates, you know, and so we do have to be cognizant of that as well. But I'd say two things: cheaper and easier, and bringing finance right into what people are doing, the way they're operating in life, and making that kind of friction free.
Sure. So this is mostly like acting the bridge between your consumers and different industries.
That's right, and focusing it on an education lens. And I think that's something that we really, what we've noticed with our client base is they were before, but they're doubly focused on their money, understand their money, money going in, money going out. We're getting a lot more calls, people thinking about retiring now. And so it's a really big trigger point in history that we find all across the board, people are way more focused on their money, and because they're worried. Let's face it, they're worried. Yeah, they're worried they might lose their job. They're worried, you know, they've already lost their job. They might lose their house, and so now is the time, I think, for organisations to step up and educate. Yeah, help your customers first, educate them, and then help them get them into a right product which helps improve their lives and hopefully their family lives as well.
Thanks for the insights. Maybe I quickly move to Roberto to give his views on, you have a very big mandate put in yourself. Your mission is quite high on giving unsecured lending to all the Indonesian population, looking at leveraging all these emerging technologies, AI or whatever it is, to provide unsecured lending. So we would like to hear your story. What are some of the challenges we have seen in this journey, and some experiences? And how do you plan to leverage more on all these fancy technologies that are coming out in the market?
Okay, thank you, Gopal. First of all, our founder, Aidil Zulkifli, and CEO of Uang Teman, send his regards and apologize that he cannot attend this very great event. So, but I already got all of his points regarding your questions. So it's a very interesting industry, and I've just got off the FinTech Summit week opening just now, and the President of Indonesia is there, and all the minister, and also the head of Indonesian financial regulator is there. So everybody is there and supporting the FinTech in Indonesia. And now we are entering the whole week of FinTech Summit in Indonesia. So looking to your question, so Uang Teman is, I think, is the pioneer of FinTech peer-to-peer lending in Indonesia. We are established in 2015, and at that time there is no rule. So at that time there is, it's very new even for the government, and our founder Aidil said, if there is no rule that's saying we cannot do it, then we can do it. So and then he is invited with the regulator at that time as part of the focus group discussion and the team to create the rule, the POJK 77. That's the rule of Indonesian regulator about that regulating the fintech. So we are one of the first fintech peer-to-peer lending who is heavily involved in this regulation, the regulation about fintech in Indonesia. So why we are established until now since 2015, because it's not an easy job to manage fintech, especially unsecured loan peer-to-peer lending in Indonesia. The key is compliance. So because our founder and CEO is also used to be a lawyer. He used to say that in his previous life, he's a lawyer. Now he is like establishing a peer-to-peer lending, but the compliance soul is still there. So everything that we do is really according to what is the compliance would say. And we got our permanent license last year in 2019, and we are also one of the first fintech peer-to-peer license who have a fully licensed in Indonesia. So the key is comply, and then we need to, after you comply and you have your brand there, and also we have the main point that we established the business in Indonesia because of the 100 million Indonesian who doesn't have credit access from the conventional bank in Indonesia. So I think based on, if I'm not mistaken, in 2018, PwC research, out of 200 million Indonesian, there are about 100 million Indonesian who cannot access credit from conventional banking. So that is the main idea why we survive, and then we comply, and then we get the license from the regulator. And I think some taking point from the FinTech Summit webinar just now, the government direction for up to 2025 is, the first is we have to be optimistic. The second is economic digitalization, and number 3 is inclusion and literation. This is the 3 main point what the government wants us in the fintech industry to collaborate with the bank industry. So for your information, the government will integrate fintech, especially the license and the registered fintech, integrate the system with the conventional banking in Indonesia. So we will have the same, sort of screening system, and also we already have the fintech data center, and also the banks, they have the Bank Indonesia checking, and they also have the Slick, and we have to collaborate also with our friends in the payment gateway. So Pak Karania from OVO is also a speaker at the FinTech Summit. So if we collaborate, I think the Google Temasek research that is published on 11 November just now said that in 2013, the digital economy in Southeast Asia will reach $300 billion. And so if you compare that to the Indonesian population, which is now more than 270 million, so we can say easily that 100 billion out of that 300 billion will come from Indonesia. So if we can really use this momentum of COVID-19 as an opportunity instead of something that brings everybody down, we can use this momentum to make everything digitalized, and so we can help the government who is facing a credit crunch at the moment. Because I think the government, not only the Indonesian government, I think most of the government all over the world already prepared funding to help to recover the economy. So, but the problem is they are facing a credit crunch now. So the money is there, but they have problem on disbursing this money to the right people, the people who can repay back the money to them. So I think fintech, whether it's a payment gateway or peer-to-peer lending, is one of the answer to recover the economy, especially in the Southeast Asia and also all over the world. So that's my point of view.
Thanks for sharing. I hear you, like risk management and compliance is the primary priority. And then this goes back to one of the sentence I've read recently: never let a good or a bad pandemic to go waste. So use it in the right ways to reap the benefits. So maybe it helps me to take to the next question to our panelist, Zagan. So I think in the whole Southeast Asia or in ASEAN markets, the payments is one of the highly driving or a disruption factor. Knowing Indonesia, the percentage of the digital payments value we see is increasing or skyrocketing. So where do you see we are heading towards? Even though there is a lot of push happening on the digital payment side, Indonesia is still on a cash-driven economy. So how do you see all this payment fintech will help move towards a cashless economy journey for Indonesia?
Sure. Gopal, thanks so much for your question. So I will break that down into two parts, right? So number one, it's where we are today, and number two is where do we see the future. So in terms of where are we today, right? I think we all can agree that the digital payment space has been growing rapidly since 2016. And as of, I just got these figures with me. In 2019, e-cash penetration is about 15.9%. I think that's pretty huge considering that the market is still nascent. Where is OVO in that picture today? Thank God, we are one of the leading player, if not the number one player. But I think the point I'm trying to make is we have been very blessed with capital. We have been very blessed with good use cases such as Grab and also Tokopedia that help, and also a lot of offline merchants that help us scale. Okay, I think that is where we are today. But I think what do we see in the future? Like as Neil pointed out, as Hendra pointed out as well, right? Like we cannot be continuously burning money. This promo game is over. Like as you can see in the malls today, right? There's no more promos. Everyone is going down the very path to profitability route, and that has got us thinking hard, especially in March. When pandemic hit, we basically pivoted. We basically worked on how to improve our cost of funds. We improved on operation cost, and we also worked on looking at how to build a proper business, right? And I guess that was a wake-up call for us. So where do we see in the future, right? I think this is how we see it in OVO. End of the day, everyone keeps talking about financial inclusion, right? But for me, at least for OVO, right, financial inclusion is a causation, is an output. What needs to happen is digitalization of the businesses, you see. Like without digitalization of businesses, right, financial inclusion will not happen. So with that said, right, from a very simplistic lens, there are three key stakeholders that is required to basically bring our payments to new heights, as in digital payments to new heights. I think the first one would be fintech players like us. We play a very big role in, as Neil mentioned just now, how do we make the experience as frictionless as possible, as convenient as possible. The second point is touched on by Roberto, which is, end of the day, we are responsible for millions and millions of data of our customers. How do we ensure that the data is safe? How do we ensure that we adhere to compliance? And I think these are all good things, right? These are frictions that we need to adhere to and innovate while achieving that objective. I think that's very key. The third point, it's all about as fintechs, right? We need to build use cases. So I think one thing that coming from a non-payments background and eventually running a payments background, right? It's all dependent on the use case you have. Like for example, today we have Tokopedia, we have Grab, we have offline merchants, we have all the gaming merchants in the world today, right? And I think the point is, what this means is relevancy. The more relevant you are, the more people will top up money into your wallet. I think it's as simple as that. Second stakeholder here is around consumers. For me, I think consumers, if I were to put it in one line, right, it's very much the scale of trusting the digital payment. So what do I mean by that, right? You see, like, I think this is what you see in your own experience as well. You started off using e-money, paying cheaper items, smaller basket size. As you grow confidence, you grow confidence and all, then you started to top up more money. And eventually, right, what you hope to see is what you do in your lives will be dependent around e-money. For example, myself today, I won't bring cash out because I will go to anywhere that accepts OVO, for example. Now, that is only from meals, spending, etc. But how can I do it in maybe paying my salary of my maid, for example, paying my driver? And I think eventually, I think success for me is when consumers want their salaries into a digital wallet or digital mechanism, right, that is regulated. I think that's where we do see success. And finally would be the governments and regulators, of course. Two key points here. I think end of the day, right, we do work closely with the regulators because we understand from a regulator's point of view, they just want to manage, they want to take care of people's money. I think it's as simple as that. Now, we just need to continuously work with the government. As Roberto mentioned, there's a lot of agendas that they're pushing, and as fintech companies, we need to adhere to it. And also, just a very good example that I can share with you in terms of what we are working with the government is on Prakerja. So Prakerja project is basically a fund that was dispersed through e-wallets. So we basically dispersed since it started, we have already dispersed to 1.5 million customers. And, the process is seamless. They just signed up and the money enters their wallet, and then they basically can cash it out to do things that's necessary for them. So that's how we see the future of payments in general.
Thanks for the insights. I see the business model use case as a real key, and then looking at consumers' preference. So moving to Hendra, I think we have a fever in Southeast Asia or the APAC market on these new digital banks that are coming in the market. So everyone are looking at interesting models like banking as a service, infrastructure as a service. So how are you seeing from a One Connect side to address these needs? And tell me more about your Gamma Lab. How do you incubate the innovation in the Gamma Lab?
Okay. I think the buzzword about technology as a service. So it started from One Connect. One Connect is a subsidiary of Ping An Group, right? And the time it's not really correct that we do the incubation, but One Connect by itself was incubated by Ping An Group. So in the past, we put into one of the subsidiary to incubate this company called One Connect. So One Connect started from collecting all the technology that Ping An Group already built for its own business. And this is why that keep mentioning about building the ecosystem, pulling together all the players like the payment, the fintech lending, and the banks, whoever who can play into the ecosystem, pull them together into this particular platform or ecosystem, so that everyone can be successful. So this particular model actually is borrowing the business model that Ping An Group have. So in China, Ping An Group actually have a largest, probably Lufax just go IPO, and probably in the past it was a peer-to-peer, the first and largest peer-to-peer in China. And you can grow the unsecured lending book to $60 billion in 6 years' time. So what happened in that particular loan book is that we really built that loan book upon an ecosystem. So, and in that particular business model in Ping An as a group, actually the payment, we own the payment, the credit bureau, we own the credit bureau, the big data, we own the big data, agency network, we have 1.4 million agents in China full-time for Ping An. And so everything is there. So consumer finance license, peer-to-peer license, banking license, we all have. But by pulling all of this together, that created a success of building up the loan books very, very well. And our NPL is below the banking industry. The banking industry is 3.2, our NPL is basically 2 point something. And that is totally unsecured. And how to build this sustainable unsecured lending to help the financial inclusion in Indonesia. So in the last 2 years, what I have been trying to do is customizing the whole platform that used by Ping An Group to build this ecosystem into Indonesia. But the only big difference is that in China, the whole players within this ecosystem owned by Ping An Group by itself. But in Indonesia, I'm trying to partner with everyone else to get into this ecosystem using the technology that has been used by Ping An and share with you guys the business model, how it works, and then we can be successful together. So that is the idea, how to make it a technology as a service. So the technology as a service comes from the idea where we learn from our own experience, but now we are exporting the technology, but we don't have all these players individual licenses. We don't own bank in Indonesia. We don't own peer-to-peers in Indonesia. We don't own the payment system in Indonesia. We don't own the credit bureau, etc. But what we do is we bring in the business model as well as the underlying technologies, including all the AI technologies that we already built for our own business, and then we partners with everyone. And then by doing that, we get the revenue share from that. So then it becomes what we call the technology as a service. As for Gamma Lab is actually one of the departments within One Connect. And what Gamma Lab do is continuously innovating the technology to be used in the financial services industry. So in Ping An as a group, we have Ping An Technology who build all the core technology like face recognition, voice print, micro expression, all these core technology is built under Ping An Technology. But when it comes to the application of those technology into the financial business, then it goes to the Gamma Lab. So Gamma Lab built all of this, and we embed it into different places where there is a usage scenario that we can use, and then we let our partners use those technology. Yeah. So that is basically the idea of the technology as a service as well as Gamma Lab. But one thing I would like to add on top of what Jagan just mentioned, for financial inclusion, from our experience in China, I've been in Ping An at a group before I came to assign to One Connect. Actually, there are three things that I see very, very important for the financial inclusion. I share the same to the financial inclusion committee from Indonesia, where I visited Ping An when I was appointed to host them. There are three things that is very, very important. The first one is the data. The access to the data is very, very important, because financial inclusion didn't happen just because the banks or financial institutions cannot do a proper risk assessment. That's very important. So the data, the traditional data, whether it's from SLIC or from whatever government centralized database, it may not be enough. You need alternative data, the data from peers-to-peers, the payment, the data from Jagan, e-wallets, usage behavior, etc. A lot of alternative data that we need to use to enhance or increase the risk assessment capabilities, so that would be very, very helpful for financial inclusion. And the second part is the technology and the business model. The technology as the business model is very, very important, because we don't want to formalize the loan shark, right? As Neil mentioned, I totally disagree with the annual interest of 300% in Indonesia. I don't agree with that, because that will not be sustainable. You are just killing the customer. In 2 years' time, they die, then become NPL. You make enough money, you run away, but people die. Right? It's not sustainable. So what we really want is really building something that helping the financial intermediaries, but at the same time really help the real economy and help the country, right? So that's very, very important aspect. So the second aspect is a technology and business model, how to make it as convenient as possible, and then how as accessible as possible. That's very, very important. And the business model aspect actually is very important. When you mention about during the COVID, a lot of government trying to pour the cash to help the consumer. Are you giving out cash, or are you giving out what? Right? So in Indonesia, they are giving interest subsidy. But the key problem in the financial inclusion is not, the fund is coming from bank, but the funding is not going down. Why? The reason is very simple. It's a different risk appetite. So I think instead of giving subsidy on the interest, the problem is not because people don't want to borrow because interest too high, but the problem here is the lenders don't want to lend. So basically, I would see that the program should be more effective by channeling those subsidy into a credit guarantee protection. So you share the risk together with the banks or the lenders, and then the money will flow, right? It's not about the demand, it's about the supply. Okay, so that is another aspect. And the last point for the financial inclusion that is I think is very important for everyone to agree on is about credit culture. How to build the credit culture so that these financial intermediaries, especially the unsecured lending for financial inclusion, can happen. Credit culture is very important. As long as everyone who wants to borrow, they borrow when they need, they borrow when they think they are able to repay. It's not something that they borrow just for one-off, happy consumption, and after that they don't pay back. So I think the credit culture, like in China especially, the time when the government tried to promote a good credit culture, saying that, okay, if you are in the blacklist, you cannot even buy a flight ticket. Right? During the COVID, it doesn't really matter. But in the past, if you cannot buy a speed train, you cannot buy a flight ticket because of heavy MPL. Actually, a lot of people who are actually fraudsters come back and contacted us after we cannot contact them for a long time. They come back to us and say, hey, I want to pay back my money because I still want to buy a flight ticket. So I think encouraging and educating the market, as well as building a good credit culture, that will help us to build a very, very sustainable lending ecosystem to help the financial inclusion. So I think these three aspects is very, very important. And on top of that, I think technology as a service is one thing that I think is a very, very important aspect as well, because this will help to pull every players in, because every player is acting on silo. I think it's not going to happen very fast. I think to speed up the financial inclusion, need collaboration from various parties.
Okay, thanks, Sandra, for the inputs. Quite interesting. So I think we have 9 more minutes left, and I have 2 questions left. I think I go with Neil first, and then the another question with Jagan and Roberto. So Neil, I think because of this COVID, the strategies of many of the banks have been changed. They're all back to the drawing boards. Where do you see the conversation happening in the market? Is it you identifying, gathering new customers, or new markets, or protecting existing pie, or cost efficiency? Where do you see is the conversations? Maybe quickly in 2 to 3 minutes, Neil. You're on mute.
A big change for banks around digitization is pre-COVID. You would focus on digitizing the high-value interactions, and so the things that are going to lead either increase customer sat, but generally stuff about money, reduce op cost, increase profitability, or how many products client buys, wallet share, crossing up, so this kind of stuff. Post-COVID, you now have to digitize the low value interactions just so people can do banking. And so that stuff that wasn't of value, so you just pushed it to a branch or a phone call or a form. Banks now have to, and the regulators will certainly be driving this, is you must be able to do everything in banking now remotely, every single thing, as a client. And that's going to be a big cost for banks to do that. Maybe they'll go back to fax machines. I think actually many banks still use the fax machines. And that's a huge thing. For banks who are focused on wealth, it's actually been quite a positive time. If I don't like to use the word positive in COVID because it's such a terrible disaster. But it was the market dip, and so the smart wealth players, we'd like to think of ourselves as smart. We were very proactive with our clients when the drop started happening in the markets. We picked the right point where we think the bottom was, and we picked that correctly to the day, and we rebalanced everyone's pension funds and investments, and actually they rode the wave back up. And so our clients, many of our clients ended up with more money than they did pre-COVID. So as a bank, what do? You've got to save some cash. There's going to be a lot more defaults coming. It's going to be dominoes effect across your loan book as people start to lose jobs, as businesses start to collapse, as governments retrench. On the plus side, businesses don't the need is still there. So because a company run out of cash, like I got hotels in Indonesia, thankfully I got cash to keep maintaining, but many hotels are going to be bust. But that doesn't mean hotels are going to get smaller. There's going to be people with cash building new hotels. So as we've had this kind of forest fire, you can liken it, of COVID across the corporate world and consumer world, actually all that new growth now, it will be coming through, and new businesses will be starting to replace the old. So there's a great opportunity to be on the front foot around SME and micro SME lending.
Okay, thanks. So I see micro SME and SME lending are going to be priority for some of the institutions. So going to my last question, and we have some 6 minutes left. So I give 3 minutes each to Jagan and Roberto. So the key question is, I think it's very much important to embrace innovation or encourage innovation on one hand. At the same time, you have to protect the risk associated with it. So how do you make the right balance? Maybe start with Jagan first, and then followed by Roberto. Your views on this?
So Gopal, I think for this question, right? I mean, personally, I learned the hard way. Because I'm very pro growth, but you know, the side effects of that comes with a cost. So I mean, after learning the hard way, right, I realized all this risk mitigation rules or regulations and etc. Right, I think it's now I embrace it, but how we look at it now is, okay, how can we achieve both? Don't look at it as black and white, but look at it as okay, anchor on the risk mitigation rules or regulations and etc. But and try to have a vision on how you want the thing to be. How do I say it? Like it's like a one click or something, right? Work towards that vision and then iterate as you go along. I think that's the only way to balance between customer satisfaction, profitable growth, and also adhering to the risks and regulations that's being placed today.
Okay, understand. Roberto, any views on this?
Okay, thank you, Gopal. And I agree with almost all with Neil about the customer, or what they need. They want is cheap and fast. And also we have to follow the regulation, and we have to collaborate with all of the stakeholders, with the banks, with the payment gateway, and all the TechFin and FinTech player in the ecosystem. But for us, our North Star is RANIM, risk-adjusted net interest margin. So we always don't want to grow as fast as they said it is. You know, we don't want to say that, okay, we grow 300% per year. That is, I mean, for the investor, we have two customers because we are a platform. We have a customer who are the borrower, and we have a customer who is the investor. So we have to please them both. So if we want to please only the borrower, we can just easily disburse the money to the borrower. We have 40% increase of borrower coming to our platform during the first months of COVID. So we have to really balance that with the RANIM. And I think the task for all of us is we have to educate the customer and the whole ecosystem that they have, if they want to use financial technological financial industry or fintech, then they have to use the really registered or licensed by the regulator, because the illegal fintech in Indonesia is quite a big problem. At least until the government have the new law of the data privacy, which is, I think it is coming this month or probably next month. So before that, we really have to educate the ecosystem, not only the borrower, but also the lender and also all the stakeholders, to make sure that the money that we disburse is directed to the correct and the people who can repay us, so we can make both customer and also our investor and our lender happy with the return that we are promising them.
Okay.
So thanks for the insights. I think we don't have time to take questions from the audience. I think we are overshoot of time. I thanks everyone for your interesting views. Hope all of our audience have enjoyed some of the insights. Hope they will reach you offline if they have further questions. Thanks and enjoy. Have a good week ahead.
Yeah,
Thank you very
Karen
much. See you, everybody.
Selamat jalan.
Thanks, Neil. Bye-bye. Bye, Pak Hendra.
Thank you for that great panel discussion, guys. To cap things off for our FinTech and TechFin track, we have Millie Gillian, the Global Head of Customer Experience and Managing Director at Standard Chartered Bank, to present the end of cash.
Thank you. Hi, everyone.
Hi,
I'm
Millie.
Gillen. How are you?
Doing great. Go ahead.
Thanks. I think it's safe to say that we've been through a lot this year. At least we're doing this together. And now we know that there's a light at the end of the tunnel. Fingers crossed. Over the last few years, there's been a slow progression to the end of cash. Governments moved toward this in their own way. Mexico banned cash on all public transit. India took a harder stance by trying to go cold turkey. And New York City advocated for the underbanked who only rely on cash. And their stance was to not go cashless. Nothing has worked better in the progression of a cashless society than this pandemic. Almost half of global consumers expect a cashless world by 2030. That might be a bit sooner than we had hoped. Pre-pandemic spending was focused heavily on experiences, and spending quickly pivoted to heavy spend on the basics to survive: groceries, healthcare, and digital devices for a touchless interaction with the world. Experiences are still paramount in order to stay competitive. And we've seen a significant shift from brick and mortar to digital, and this may mean to quickly adjust by investing solely in digital. When the pandemic is over, the expectation for more sophisticated experiences will be required and no longer optional. For now, we have the luxury of time to rethink the physical experiences. That said, the expectation for more robust and sophisticated digital experiences has both exploded and pivoted. It's important to recognize how to get mind share of consumers, especially in an age where ecosystems like Grab are quickly growing. Oftentimes we think about what is our share of wallet, but really we should be focusing on what is the share of mind that we have for consumers. Because if you have a share of mind, then that is the way to open the door to the share of wallet. Banks have long held the role of movie stars in consumers' lives. And with the growth of ecosystems and the expectation on best-in-class experiences, the role of banks are shifting from movie star to supporting actress. With shrinking margins and growing expenses, especially in this low interest rate environment, the primary way to differentiate in a cashless world is through differentiated experiences. And this may mean personalization to some, whilst for others it may mean integrating more sophisticated tools. And the best way to determine what is your right approach is a combination of consumer data, both quantitative and qualitative, as well as combining that and weaving it into human-centered design thinking. And this would help to design unique experiences. But keep in mind, these experiences should never be static, especially what we've been through this year. We've noticed that. But instead, they should always be iterative. We're always going to be evolving. That's what makes us human. Partnerships is another major factor. Thinking out of the traditional ways of doing business by integrating into ecosystems through partnerships is the bridge to the future. This is where supporting actress becomes an important realization for transition. Next, 5G is important to take into account. Robust experiences are dependent on mainstream 5G networks, which will come much faster than previously thought, especially with the projections of the companies who produce the 5G chips. This will only help us to accelerate on experiences. And the transition from the race to the bottom or the lowest prices and shrinking margins is shifting before our eyes to integrated experiences, which doesn't accept that cash is king. And the most important insight I'd like to leave you with is my philosophy. Money makes the world go round. And that can typically be viewed as a very negative comment. But instead, let's look at it from a different view. Money makes the world go round, which means that anyone who works in the financial services industry, we have the power to make a positive change. And we owe it to the world to make a positive change. So always keep that in mind, a positive change, and really our impact, our actions, and our impact onto the world and what that means. Regardless of whether it is a cashless society or cashless world. But always remember that we owe it to our consumers, our peers, our friends, our family to definitely make a positive impact, whether that's from the underbanked, the unbanked perspective, diversity, inclusion, sustainability, any of those above. So with that, I know that we are a bit out of time. Please feel free to reach out to me directly if you have any specific questions. Stay safe and stay healthy.
Thank you, Millie, for that final and great presentation. Today, we are now ending the event. Just to remind everyone that the post-event report, along with the link to the recording of the stage, will be sent to your emails. In behalf of ESCOM Events, along with the speakers and panelists of this two-day event, we thank everyone who took the time to attend the full 2 days. And we are also giving certificates of attendance upon request. You may send an email to me at jed.abrasado@escom-events.com to request for your certificates. I'll also be posting my email in the event chat for all to see. So right now, to wrap up and close the event, let me reintroduce Mr. Philip Law, Regional Vice President, Asia Pacific from Discover Financial Services, for our closing remarks. Over to you, Philip.
Thank you, Jed. Thank you, everyone. Good afternoon. I hope you guys had a very fruitful day today. For closing, I just want to express my gratitude to ESCOM for organizing, for putting together such a informative event with a very robust content. Many topics were discussed. We had a chance to hear from the regulators, from the senators, from the governors of Philippines. More importantly, I just want to thank everyone for their participation. I really enjoyed the conversations, the discussion. So just a final word of appreciation. I just let's not forget to thank Maggie, Liu, Angela, as well as Jed for hosting us today. Let's keep the conversation going. This is definitely not the destination. It's a journey that we should, as fellow industry practitioners, we should all just journey on and make sure that we continue to develop the digital banking as a core component of the industry. All right. So with that, thank you and keep in touch, guys. Over to you, Jed.
Thank you, Philip. So goodbye, everyone. And also our sessions room for our sponsors are still open, along with the expo booths. They'll be open until 5:35 p.m. Singapore time. So once again, thank you, everyone, and hope to see you at our next events.
Thank you. Thank you, everyone. Cheers.